So, in last class, we started with blocked credits, and in that block credits, motor vehicle related block credits we have discussed. So, look into the second area, that is construction related block credits. So, look into construction related block credits. So, there are three inward supplies in relation to construction of an immobile property. What are those three inward supplies? Any goods purchased for construction of immobile property, any service for construction of immobile property, or works contract for construction of immobile property is blocked credits. So, why they have not given ITC with respect to motor vehicles? The reason is simple. In case of motor vehicles can be partly used for business and partly used for non-business, and it is very difficult to identify whether it is used for business or not. That's why they are telling ITC will not be available even though you are using it for business. But in certain cases where you are exclusively using it for business, easily ascertainable. For example, you are a car dealer, or you are into business of renting of motor vehicles, or you are into driving school, then definitely you will use the motor vehicle for business purpose only. So they are giving. Also, trucks, lorries, etc. cannot be used for personal purpose. Definitely it will be used for business purpose. So there also they are giving credit. So that's what exceptions here. Then why construction sector they are not giving ITC? Again, same reason. In construction sector, what will happen? We may not be using all the buildings for generating a income. So some buildings we will construct and we will not be generating any return out of that. So then it is loss to the government if they give input tax credit on construction expenditure. That's the reason why on construction expenditure there is no ITC. That's a blocked credit. Okay. So but in case of construction expenditure, there are some exceptions where they are giving ITC. So first try to understand what is a blocked credit. For construction, if you buy any goods purchased for construction, any goods purchased for construction means cement, bricks, building material, electrical fittings, taps, pipes, etc. So on that you cannot take ITC. Same way, any service received for construction. Any service received for construction means construction service, interior decorator service, architect service. So any service received for construction, including works contract service, you cannot take ITC. However, we have three exceptions. Exception number one, the restriction is only to the owner of the property. But if the supplier receives the services, he can take ITC. Example, you are the owner of the property, I am the builder. So you cannot take ITC, but as a builder, I will buy the material, I will receive the services on which I can take ITC. Is it clear or not? Just like further supply. It's not for my purpose I am purchasing it, it's for my outward supply I am purchasing. So I can take ITC. Got it? But I will raise bill to you now. Can you take ITC on that bill? No, you cannot take ITC on that bill. So that is the first point. Read the first point. The above discussion is not applicable to supplier. That is, if a works contractor receives construction service for construction of an immobile property, then ITC can be availed on construction services. Then next one, construction of plant and machinery. So even though immobile, example, lifts and escalators installed in a building is plant and machinery. For construction of lifts and escalators, if you receive any material or if you receive any services, you can take ITC because it is plant and machinery. That is a second exception. However, plant and machinery excludes what? Plant and machinery excludes pipelines laid outside the factory gate and telecommunication towers. So to install the telecommunication towers, we buy cement, concrete, because we make a foundation. On the top of that only we will construct the telecom towers. For making that foundation, we are purchasing some cement, bricks, etc. Can we take ITC with respect to that? No. Why? Sir, telecommunication tower is plant and machinery, na? No. Telecommunication tower is excluded from plant and machinery. So we cannot take ITC. And what about pipelines laid inside the factory gate? For pipelines laid inside factory gate, can we take ITC? Yes. But pipelines laid outside the factory gate is not treated as plant and machinery. Then look into the next point. If construction expenditure is charged to P&L, then ITC is available. So what is this? Generally, ITC not available on construction expenditure. But what is the third exception? If it is charged to P&L, then we can take ITC. But what you will do usually, construction expenditure, you will capitalize or charge it to P&L? Capitalize, because construction means it's a capital expenditure. But when you charge it to P&L, you can take ITC with respect to that. So tell me, what are the three exceptions? First, what is a block credit? Any goods purchased for construction, any service received for construction, including works contract service for construction of an immobile property is blocked credit. However, we have three exceptions. Exception number one, if the inward supplies is for the supplier, he can take ITC because the restriction is only to the owner of the property. Second exception, plant and machinery, excluding telecommunication towers and pipelines laid outside factory gate. Third exception, if the expenditure is charged to P&L. Okay. Now look into this example. So Ford Limited is a factory, like they want to construct a factory. Ford Limited wanted to construct a factory. So they approached a works contractor. Now what works contractor is doing? He is supplying the goods and services. Basically that's the difference now between works contract and construction contract. In construction contract, what will happen? You will buy the material. I will do only construction. That is called as a construction contract. Whereas in case of works contract, I will supply the material also, I will do the construction also. Then it will be called as works contract. Okay. So works contractor is supplying both goods and services, for which Ford Limited has paid contract price plus GST. And can this GST paid be taken as ITC by Ford Limited? Yes or no? No. Why it cannot take ITC? Because works contract service received is a blocked ITC. So we cannot take ITC with respect to that. So ITC not available. Now works contractor is receiving services from a construction contractor, for which works contractor paid some price plus GST. Can this GST be taken as credit? Yes. Why this GST can be taken as credit? Because this GST, restriction is only to the owner of the property, but a supplier receiving the services, they can take ITC. Same way, works contractor purchased the goods, and on that goods, the works contractor paid price plus GST. Can he take ITC? Yes, because the restriction is only to the owner of the property. Now alternatively, Ford Limited can also go for construction contract, wherein they will buy the material from the market. So when they buy the material from the market, they pay some price plus GST. Can they take ITC? No. So any goods purchased for construction of an immobile property, ITC not available. Same way, they are receiving services of a construction contractor and they pay service charges plus GST. Can they take ITC with respect to that? No. Any service received for construction of immobile property is a block credit, ITC not available. Now this construction contractor receives services of an interior decorator. Can the construction contractor take ITC on that? Yes, because the restriction is only to the owner of the property, not to the supplier. Now suppose if this interior decorator service is directly provided to Ford Limited, can Ford Limited take ITC? No. Any service received for construction of immobile property is blocked credit. So this is the example where we applied that exceptions. Okay. Now look into other blocked credits. In these other block credits, the first one is membership of a club, health and fitness center is a block credit, even though it is a business expenditure. Sir, how it will be business expenditure, sir? Yes, it's a business expenditure possible. Example, a chartered accountant takes membership of a social club like Lions Club, Rotary Club, etc. And for what purpose they will take membership of that club? In order to increase their contacts, because high net worth individuals, rich people and all, will be going to clubs for recreation purpose. So therefore this chartered accountant, when he takes membership of the club, he will get introduced to those people, thereby he will get some consultancy work, income tax return filing work, etc. and all. So therefore that's a business expenditure. Even then they cannot take ITC. Same way celebrities and all, they will take membership of fitness club, lot of fitness center membership they will take. And this is really business expenditure, because if they are fit, then only they will get offers and they can act in the movies. So therefore this, even though business expenditure, but they cannot take ITC with respect to that. However, we have only one exception where ITC can be availed. So what is a block credit? What is a block credit? Membership of a club, health and fitness center is a block credit. But what is the first exception? If that expenditure is incurred by employer to employee under a statutory obligation, then ITC is available. Example, government is mandating a employer to take membership of a club for recreation to their employees. Because of that mandatory provision, they have taken membership. So now they can take ITC with respect to that? Yes. Then travel benefits to employees on vacation. So employees are going on vacation and that expenditure is borne by the company. Can the company take ITC with respect to that? No, because it is for the personal purpose of the employees. Example, there is an employee who is working in an organization and he's a very sincere employee and he got married. Immediately the next day he is coming to the office and he is working. So unfortunate fellow he is, and therefore employer felt sad and employer sponsored the honeymoon package of the employee. Of course, employee will go with employee's wife only, so for which the employer sponsored the honeymoon package. Now in this case, can the employer take ITC with respect to that honeymoon package? No. Why it is not possible? Because he is an employee and travel benefit extended to employee on vacation, block the credit. Suppose if a director of the company is going on a trip or some honeymoon, okay, now that is sponsored by the company. Can the company take ITC on that? Yes, because director is not a employee of the company unless the director is a whole-time director or a managing director. You understood or not? So remember, this restriction is only to the employees, okay, not for others. And another example, suppose if that employee is going on a business visit and that expenditure is borne by the company, then ITC available? Yes, because the restriction is only when it is on a vacation. However, we have one exception to this. So what is a block credit? What is a block credit? Travel benefits extended to employees on vacation. But what is the exception? If it is incurred by employer to employee under a statutory obligation, so then it will be coming under ITC available, exception to the blocked credit. Example, say government is ordering an organization to mandatorily provide a leave travel facility to their employees, mandatory as per the law. So because of which the company has provided the leave travel facility and incurred the expenditure also. Can the employer take ITC with respect to this? Yes. Then next, so non-resident taxable person. Who is a non-resident taxable person? A person who is coming from outside India to India and is not having any physical place of business in India and is engaged in supply of goods or services is known as a non-resident taxable person. Example, right now IPL matches are getting started, okay, 22nd onwards, tomorrow onwards, no? I think tomorrow onwards, tomorrow onwards IPL is starting. Now in this IPL, lot of foreign players will be coming and playing. Do they have any physical place of business in India? No, except David Warner, okay. So because Warner bro is always putting all reels and all, so he became like Indian, literally like Indian only. And so all foreign players, if you see, so they are coming to India. And do they have any physical place of business in India? No. And are they engaged in supply of services in India? Yes. And they are called as non-resident taxable person. When they are coming to India, they may receive inward supplies in India and they are required to register. Definitely they need to register. Why they need to register? Because they are getting an Indian income. How sir, it's an Indian income? Simple. Any income accruing or arising or deemed to accrue or arise in India is an Indian income. So they are playing matches in India means they are getting Indian income only. So they need to register. Not only they need to pay income tax, but they are also required to pay GST. For GST purpose, they need to register. Now, they will stay in some hotels. So, they will receive inward supplies. They will purchase some goods. That is also inward supplies. On that, can they take ITC? No. It's a blocked credit. NRTP cannot take ITC on inward supplies. It's a block credit. However, we have an exception to that. What is that? Import of goods. What is the goods that they will be importing? The kit, cricket kit and all they will import. Cricket kit, their garments, etc. and all they will import. Sir, why they will import, sir? Won't it come as a hand luggage? No, not allowed. Bat and all not allowed as a hand luggage. Because bat, if you put as a hand luggage or a check-in, so you can take the bat and hit one person and kill the other person. So it will be coming as a cargo consignment only in India. On that import of goods, whatever GST paid, that alone can be taken as ITC. And even so recently this great Indian fat wedding happened. So this Ambani son wedding has happened. So in this wedding, so a lot of foreigners came. So one lady, Rihanna, like that one lady. So she came for singing, and when she came, 3-4 containers of cosmetics, garments, her luggage, 3-4 containers came to India. Okay, and that much is coming to India. So definitely not as a luggage. When we are going, what we will do? One bag we will take and go. Correct? That's it. But they are bringing containers and containers. So that will be coming under import of goods. Is she also NRTP, sir? Yes, she is also NRTP. Why she is NRTP? Because she is not having any physical place of business in India, and she come to India and she collected some 20 crores or 30 crores. She collected 70 crores. This is a so 70 crores she collected. On that, whether GST payable? Definitely, GST definitely payable. And 70 crores. So she need to register and she need to pay GST, and she is called as NRTP. But on import of goods, whatever IGST is paid, that can be taken as credit. Understood? So that is with respect to this NRTP point. Then next, food and beverages, outdoor catering, beauty treatment, including cosmetic, plastic surgery, life insurance, health insurance. Remember this in 3 simple words: food, beauty, insurance. You eat too much food, your beauty will be spoiled, and it may happen that you will be admitted in hospital, so you need insurance. Okay, so what are the 3 things? Food, food and beverages, outdoor catering, grouped under food. Then beauty treatment, cosmetic surgery, plastic surgery. And next, number 3, insurance. What insurance? Life insurance and health insurance. And these 3 cases is blocked credit, ITC not available. Sir, it is personal expenditure. Personal expenditure means anyhow not available. Even though it is business expenditure, ITC not available. So example, there is a company which is receiving outdoor catering services to provide it to their employees. Catering, outdoor catering service, because afternoon lunch and all will be provided. So can they take ITC with respect to that? No. But see the first exception. What if it is under a statutory obligation? Then they can take ITC. Example, suppose if as per Factories Act, it is mandatory for the factory to provide food to the workers who are working in the shifts. Then in that case, if the factory receives outdoor catering service, can they take ITC? Yes. So like that, what are the blocked credits here? Related to food, related to beauty, and related to insurance. What is the first exception? Inward supply, that is employer to employee under a statutory obligation. Second exception you see, inward supply, outward supply in the same category. So I am engaged in sale of food and beverages. So I purchased food and beverages. Can I take ITC? Yes. Then inward supply, part or component of the outward supply. So what is that? Example, I am into the business of transportation of passengers by airways. I provide food to my passengers. So I purchase the food. So inward supply, food, is part of the outward supply. Therefore, I can take ITC with respect to that. So tell me, what are the 3 exceptions here? Statutory obligation, employer to employee. Number 2, inward supply, outward supply, same category. Inward supply, part of outward supply. Now, in this way, suppose if the airlines is incurring beauty treatment expenditure on the air hostess, can the airline take ITC with respect to that? Airline is incurring beauty treatment expenditure for the air hostess. Beauty treatment is a blocked credit. So, but will it come under exceptions and can airlines take ITC? Not a statutory obligation, okay. Inward supply, outward supply, same category, no. Inward supply, part of outward supply, no, because we don't pay for air hostess. We pay for the air travel. You understood? So, we are not paying for the air hostess here. We are paying for the airlines for travel. So, inward supply is not part of outward supply. So, ITC not available. Then next, hiring, renting or leasing of motor vehicles. Already we know what is that statutory obligation, ITC available. Do you remember? So generally we take motor vehicle on rent, sir. When we take motor vehicle on rent, so if motor vehicle purchased is eligible for ITC, the motor vehicle taken on rent also eligible for ITC. If the motor vehicle purchased is not eligible for ITC, motor vehicle taken on rent also not eligible for ITC, correct? However, we have three exceptions. The same three exceptions just now we discussed is even applicable for renting of motor vehicle. What is the first exception? Statutory obligation, employer to employee. Second, inward supply, part of outward supply or inward supply is in outward supply. What is that? I am into the business of renting of motor vehicles. I take motor vehicle on rent. Can I take ITC? Yes. I am into the business of providing entry to see wildlife sanctuary, the tiger reserve, etc. So therefore, as a part of the entry ticket, I will also provide the jeep on rental basis. If you see some national parks, wildlife sanctuaries, tiger reserves and all, what they usually do is that they will provide the jeep also to you along with a driver on rental basis. So you cannot say, no, I will go by walk, I will enjoy the nature. You will go, nature will enjoy you, you understood? So tigers and all will eat away you. So therefore there is a restricted jeep. In that jeep one driver will be there who understand how to behave with the animals, and even he will be provided with the arms and all, like weapons will be there. So that weapons will not harm the animals, but it will just produce the sound so that the animals will run away. So this safe jeep will be given to you on rental. Now there are two supplies. What are the two supplies? Entry to tiger reserve plus renting of jeep. So now part of inward supply. So I am taking jeep on rent, which is part of my outward supply, which is renting of jeep along with the ticket, that is entry ticket. Therefore it will also be eligible for ITC. Is it clear or not? Inward supply, part of composite or mixed outward supply. So that is these three exceptions. Then next, from a person opting for composition scheme. Generally, a person opting for composition scheme should not charge GST to the customers, because composition scheme is a simplified scheme for payment of GST. Rather than paying GST at the regular rates, a person opting for paying like GST under composition scheme will pay at the reduced rates, like 1%, 5% or 6%, like that they will pay, and they have to pay that out of their pocket. They should not charge it to the customer. But if they charge it to their customer, can the customer take ITC with respect to that? No. So even though you are making purchase from a person opting for composition scheme and they charge GST to you, you cannot take ITC. Then for personal consumption, this already we have seen in section 16, inward supply should be used or intended to be used in the course or furtherance of business. So therefore if it is used for personal purpose, can we take ITC? No. Then goods lost, stolen or destroyed or written off. We purchase some goods and those goods are lost in transit. So one accident has happened and it was lost in transit. So then in that case, can we take ITC? No. It got stolen. We import, like we purchased the goods, we kept it in the warehouse and someone has stolen those goods. Can we take ITC with respect to that? No. Due to fire accident, it got destroyed. Can we take ITC? No. Destroyed? No. And because it became obsolete, you have written off. So usually we will write off the inventory now when it becomes obsolete or non-moving stock. So you have written off. Can you enjoy the ITC on that? No. Already you would have taken, now you reverse. And then disposed of by way of gifts or free samples. So this point also I told you, when you purchase some goods and you are distributing as gifts or free samples, you cannot take ITC. However, we have seen one exception. If the gifts or free samples becomes supply, we can take ITC. That's what I have given below. If gifts or free samples are treated as supply 71C, then ITC can be availed on goods purchased for that gifts or free samples. Yesterday only I told you, what is that? Sir, whenever a sugar packet is purchased, at the time of purchase I don't know that I will be distributing it as gifts or free samples, so I would have taken ITC. Now when that sugar packet is given free along with some other goods, so now it will become supply 71C. Another example, that Kinder Joy example I told you. So purchased goods given as gift along with the other product as a combo, so then also it will be coming under, so ITC available. So if gifts are free samples, pa சுத்திட்டே இருக்கியாப்பா தம்பி, இங்கிருந்து இங்கே போனார், அங்கேருந்து எப்படி போகிறாரு, இன்னும் half an hour தான்ப்பா, அடக்கிக்கோங்கப்பா, சுகர் கேக்கர் வந்துட போகுது. See, class 9 o'clock, he knows that class is 9 o'clock. You can go and come na. Possible or not? In half an hour itself if you are going, how should I understand? Free da, adukana you should not take for granted. Little bit courtesy also you should have. See this. So generally when goods are purchased and distributed as gifts or free samples, we cannot take ITC with respect to that. Okay, but if that gifts or free samples becomes supply, we can take ITC on that. Okay, so if gifts or free samples are treated as supply, then ITC can be availed on goods purchased for such gifts or free samples. So in question you just check, is it given purchased goods are distributed as gifts or free samples? Nothing given, then ITC not available. But somewhere it is given that, however, that gifts or free samples constitute supply, like that if it is given, then we can take ITC with respect to that. Then look into this, this is an amended point, that is generally when we purchase some goods and which is used for CSR obligation, as per Companies Act section 135, there is something called as corporate social responsibility. A percentage of your profit you need to spend for the charitable activities. Now what are those charitable activities is given in one schedule. So these are all the charitable activities like that. Now for spending you will buy some goods, you have to do some charitable activities, so you will buy some goods or you will receive some services. On those goods and services, whatever GST that you have paid, can you take it as ITC? No. So because it's a block credit. So it's a very important point, it's an amendment. Goods or services which are used or intended to be used for activities relating to obligations under corporate social responsibilities is blocked ITC. So we cannot take ITC with respect to that. Okay. Then next one, you see second point below. If GST is paid under section 73, 129 or 130, all these three sections are not there for you at CA intermediate level. You will study at CA final level. But what is these sections you try to understand? You are not paying it voluntarily. Department has recovered from you. Listen, I collected money from you. I collected money along with GST from you. And I have to pay GST to government. But I did not voluntarily pay. Department has recovered it from me. Means I would have reported it in GSTR1 or not reported it in GSTR1? Not reported in GSTR1. Means will it come in GSTR2B or it will not come in your GSTR2B? It will not come in your GSTR2B. Consequently, you cannot take ITC on that. Is it clear? So whenever your supplier has not voluntarily paid GST, but it has been recovered from him, he will not report it in GSTR1. Consequently, it will not come in 2B of the recipient, so you cannot take ITC. Clear? Then next, builder, generally builder can take ITC on inward supplies, correct? So that's what we have seen here. Sir, works contractor can take ITC on goods or services. So whatever goods purchased, he can take ITC. Whatever services received also, he can take ITC. Who? Works contractor. But long back I told you, the rate of GST applicable to a works contractor is 1.5%, 7.5% with ITC or without ITC? Without ITC. But they can take ITC or they cannot take ITC? They cannot take ITC. So that's what I have given. Yes, works contractor can take ITC, provided they should be paying GST at what rate? 1.5% or 7.5% or some other rate. Some other rate they should be paying. Say this. Even though builder can take ITC on goods or service used for construction of immobile property, they cannot take ITC if their outward supply is taxable at 1.5, 7.5. What if their output is taxable at 18% or 12% with ITC? Then they can take ITC on their inward supplies. So these are various blocked credits that we have. Now look into the last section, section 18, input tax credit in special cases. So this section 18, they have not tested much in the past exam, and maybe in MCQs or etc. they can create, and this section 18 is there in the syllabus. Usually we will not give much importance to that. So but please remember, because in the latest MTP, I say MTP, they gave some MCQs on this section 18. Okay, so look into the section 18 subsection 1, which says that availment of ITC in some special cases. What are those special cases? So first one says you can avail ITC on the closing stock. In which case you can take ITC on closing stock? They have given 4 situations where we can take ITC on closing stock. What are these 4 situations? Listen, you are liable to register on one particular date. Yesterday we made this discussion. So you commenced business. When you commenced business, you are not required to register. So when you need to register? Only when your aggregate turnover exceed threshold limit. So you commence business on 8/5/2023, you commence business, and somewhere on 1/10/2023 you are liable to register. And you made application for registration. What is the time limit within which you need to make application for registration? Within 30 days. You made application for registration. So registration application. That registration application you made on 25/10/2023, and you got the registration certificate. Registration certificate granted, and this registration certificate is granted on 5/11/2023. Okay. Now this is the scenario. We have seen the same thing for revised tax invoice. Now what is it they are telling? You are liable to get registered from 1/10/2023, and you made application for registration on 25/10/2023. So you are liable to pay GST on your outward supplies with effect from 1/10. Now before 1/10, you will have some closing stock. Before 1/10, you will have some closing stock. This date, you will have some closing stock. So what is the date? 30/9/2023, you will have some closing stock. On that closing stock, whatever GST that you have paid, you would not have taken ITC. Why you would not have taken ITC? Because at that time you were not liable to register, so you would not have taken ITC, because unregistered person cannot take ITC. Now using that closing stock only, you will make outward supply with effect from 1/10. Will you agree with me? Using that closing stock only, you will make outward supply with effect from 1/10. So therefore, on this closing stock, whatever ITC you have not availed, now you avail. Why they have not given at that time? Because at that time you were unregistered. Now you are liable to register, means you need to pay GST na. So they are giving you the facility of ITC on this closing stock. Sir, what is this closing stock, sir? This is inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. Okay. So this information, see, when you read it, you will not be able to understand. That's why. So please write this once. So this is section 18, subsection 1 clause A, that is availment of ITC on closing stock. There are total 4 situations where you can avail ITC on closing stock. So availment of ITC, availment of ITC on closing stock, availment of ITC on closing stock. So total 4 situations you can avail ITC on closing stock. We are discussing the first situation. You commenced business and you are liable to register, and you made application for registration and the registration certificate is granted before the date you are liable to register. So some closing stock is there. Okay. So as on 39/2023, what is the importance of this 39/2023? That is the date before the date you are liable to register. As on this date you have inputs, raw material, okay, you have inputs, and then you have WIP, work in progress, and you have FG. So in this WIP you check what is the inputs. How to find the inputs in WIP? Easily we can get from the process accounts. So when you see in costing, process costing, for every process you prepare the cost account now. So in that, what are the material introduced in the process, you will be able to identify. Then how to find the inputs in finished goods? For that you need input output ratio. So in bill of materials, if you see, for every unit of output, how much of input is required will be available. So from there you will get the data related to inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. On these 3 inputs, whatever GST that you have paid, you can avail as ITC. Okay. So inputs as such held in stock, inputs as such held in stock, inputs in WIP, inputs in FG. On these 3 inputs, whatever GST you have paid, you can avail as ITC. When you can avail ITC? After you get the registration certificate. Is it clear? After you get the registration certificate, GST paid can be availed as ITC. GST paid can be availed as ITC. Clear here? So tell me, what is the first situation? A person is liable to register and he made application for registration within 30 days. That is important. Sir, what if he is not making application for registration within 30 days? This benefit is not given. So he need to make application for registration within 30 days. If he is not making application for registration within 30 days, this benefit will not be available. If he makes application for registration within 30 days, then whatever is the closing stock. What is closing stock? Inputs as such held in stock, inputs in the form of WIP held in stock, inputs in the form of FG held in stock. Which date? Immediately before the date the person is liable to get registered, whatever GST paid on these inputs, that can be availed as ITC. When it can be availed ITC? After registration certificate. Understood first situation? Now second situation you write. Second situation is, a person has commenced business and even though he is not liable to register, but he voluntarily got registered. Okay. So this you finished. So a person commenced business, and say he commenced business on 8/5/2023 and he did not cross the threshold limit, but voluntarily he got registered. Can a person voluntarily register? Yes. So voluntary registration. Voluntary registration. Voluntary registration. Say on 15/10/2023, he voluntarily got registered. Now, from 15/10, he need to pay GST na. From 15/10, whatever is the outward supplies, on that he need to pay GST. Now, before 15/10, so he was purchasing something, can he take ITC on those things? No. Why he cannot take? Yeah, he is liable to pay GST from 15/10. Before 15/10, whatever are the purchases, on those purchases he cannot take ITC because he was an unregistered person. But there is some closing stock. What is the date of closing stock? 14/10. As on 14/10/2023, there is some closing stock. On that closing stock, whatever GST paid, at that time you would not have taken ITC. So now he can take ITC because from now onwards he start paying the GST. So same story, inputs and then WIP and then FG. Then in this WIP, what is the inputs? And in this FG, what is the inputs? On these three inputs, whatever GST paid, that can be availed as ITC. GST paid can be availed as ITC. GST paid can be availed as ITC. Okay. So what is the difference between previous situation and this situation? Previous situation, liable to register and they made application for registration within 30 days. But here it is voluntarily registered. In both cases, on what they can take ITC? Inputs as such in stock, inputs in WIP in stock, inputs in FG in stock. Correct? Which date should be taken for closing stock? Previous case, before the date the person is liable to register. In this case, before the date they got registration certificate. Okay, before they voluntarily got registered. Okay, then next third situation, third case. In this third case, a person is under composition scheme up to one date and thereafter he migrated to normal scheme. Okay, say from 1/4/2023 he is going into normal scheme. Previously, that is for the previous financial year 2022-23, that person was under composition scheme, and now with effect from 1/4/2023, this person migrated, that is for the financial year 23-24, he is going for normal scheme. Now, when he was under composition scheme, whether he can take ITC on inward supplies? No, because one of the disadvantage of composition scheme is that a person under composition scheme cannot take ITC on inward supplies. So he would not have taken ITC at that time. Now, when he moves into the normal scheme, he can take ITC. Now, the advantage is before the date of migration, there is some closing stock now. What is the closing stock date? 31/3/2023, there is some closing stock. On that closing stock, he would not have taken ITC. Now he can take that ITC because at that time he was under composition scheme. Now he is under normal scheme, so he can take ITC because that closing stock is used for making outward supplies now. So what is that closing stock? Inputs, then WIP, and then FG, and even capital goods also he can take. Capital goods also he can take. Inputs, WIP, FG. So little bit I'll change this. So inputs, WIP, finished goods and capital goods. Inputs, WIP, FG and capital goods. So on these four, ITC can be taken. But on inputs in WIP and inputs in FG, so full GST paid can be taken as ITC. On these three, GST paid can be taken as ITC. Okay, GST paid, GST paid can be availed as ITC, can be availed as ITC. Whereas on capital goods, he cannot take full credit. He cannot take full credit. How much he can take credit on capital goods? GST paid minus 5% for every quarter. Why, sir? See, inputs will be as it is, but capital goods will depreciate now. When capital goods depreciate, he cannot take full ITC. So, minus 5% for every quarter or part thereof. Or part thereof. So, that can be taken as ITC. Okay. Part thereof from when to when? From the date it is purchased till the date it is used, that is converted. So, tell me what is extra point in the third situation? Capital goods. And on this capital goods, how much can be taken as credit? Total GST paid minus 5% for every quarter or part thereof from the date of purchase till the date of conversion or migration. Means like we need to give a depreciation here. We need to give a depreciation. So, this is in case of composition scheme to normal scheme. Understood this? Then here fourth situation is also similar. Fourth situation is he was under making exempted supplies. Now he started making taxable supplies. So, here itself you can write down. So, third situation and fourth situation, everything is same, but the only difference is what? Previously he was making exempted supplies. Now he started making taxable supplies. Now he started making taxable supplies. Remaining story is same. So, that is whatever is the GST paid on inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, he can take ITC. Whereas on capital goods, he can take ITC after reducing 5% for every quarter or part thereof. Clear here? These are the four situations. These four situations only is given here in 18.1. 18.1a, person applying for registration liable within 30 days of becoming registration, he made application for registration. 18.1b, person obtaining voluntary registration. In these two cases, ITC can be availed on closing stock. Closing stock before the date the person is liable to register, here before the date the person is getting registered. Whereas 18.1c, 18.1d, a person is going from composition scheme to normal scheme, exempted supplies becomes taxable supplies, and he can take credit on inputs as such in stock, inputs in WIP, inputs in FG and capital goods. But for capital goods, as reduced by 5% for every quarter or part thereof, on the day immediately preceding the date when he becomes into regular scheme, or his exempted supplies becomes taxable supplies. Now, what is the difference between 18.1a, 1b versus 1c, 1d? First difference, capital goods. 1a, 1b, they cannot take credit on capital goods, but 1b, 1c, sorry, 1c, 1d, they can take credit on capital goods. Another difference is also there. Carefully look and tell me. 1a, 1b, he is now only getting registered. Very good. In 1c, 1d, already he is a registered person. Say this, registered person. Whereas in this case, now only he is getting registered. Super, very good. Second difference. Third difference. Third difference, see this note. Under 18.1a, 1b, matching not required. Why matching not required? Naturally, when you have purchased, you are an unregistered person. So, you would not have given your GSTIN details. So, it will not come in your 2B. So, therefore, matching not required. But in case of 1C and 1D, matching is required. So, ITC should be verified with the corresponding details furnished by corresponding supplier. These are the three differences. Can you tell me what are the three differences between 1A, 1B versus 1C, 1D? First two situations, next two situations. What is the difference? Capital goods. Second, first two situations, now only they are getting registered. Next two situations, already they are registered. Third difference, first two situations, matching not required. Next two situations, matching required. Then look into the common points related to these four situations. 18 subsection 2 says that the closing stock should have been purchased within 1 year prior to the closing stock date, which means in this case, what is the closing stock date? 31st March 2023, means all these inputs and capital goods should be purchased within 1 year prior. So they don't want to give benefit for the old stock or non-moving obsolete stock. So all the inputs and capital goods should be purchased within 1 year prior to this date. Same way here also, within 1 year prior to 14/10/2023. Here also within 1 year prior to 30/9/2023. Then only we can take ITC on that. So that is this 18.2. Where the tax credit is claimed under 18.1 with respect to closing stock, section 18.2 provides that registered person shall not be entitled to take ITC after, underline, after the expiry of 1 year from the date of issue of tax invoice relating to such supply. Sir, how to take this ITC? Usually where we will take ITC? GSTR 3B. But this ITC we will not take in 3B. We will file one form, that is form GST ITC 1, and that form will be filed within, underline, 30 days. That form will be filed within 30 days or such extended time by the commissioner. 30 days from which date? Whenever you are eligible. In case of first situation, when are you eligible? Whenever you get the registration certificate. Second also, whenever you get the registration certificate. But third situation and fourth situation, when are you eligible? Date of conversion. Conversion from where to where? Composition scheme to normal scheme. Exempted supplies to taxable supplies. So time limit is what? 30 days. There are two 30 days in this place. What is that? First, you should make application for registration within 30 days, and then after registration certificate within 30 days you need to file ITC 1. Then this ITC 1 is common for all the four situations, and this ITC 1 should be certified by a chartered accountant or a cost accountant if the claim of ITC exceeds 2 lakhs. If the claim of ITC exceeds 2 lakhs, it should be certified by a CA or CMA. Is it clear? And this is the differences I have given for 18 1A 1B versus 1C 1D. That's why I did not make you note. So these are the three differences that we have discussed between 1A 1B and 1C 1D. Then next, sir, when sir ITC 1 should be certified by CA CMA? If you are taking ITC more than 2 lakhs, greater than 2 lakhs. Exactly 2 lakhs? Not required. So they will give in the options 1 lakh 95, 2 lakhs, 2 lakh 5,000, none of these. 1 lakh 95, CA/CMA certificate not required. 2 lakhs not required. So whenever it exceeds 2 lakhs, that is 2 lakh 5,000, then only it will be required. Then look into the next one, 18 subsection 3, which talks about transfer of ITC in case of transfer of business. I told you there is no time limit for utilization of ITC. What does it mean? Once you have taken the ITC, you can carry forward that for a number of years. Even when you transfer the business to some other person, unutilized ITC also can be transferred to that some other person. Is it clear? So unutilized ITC can be transferred from the transferor to the transferee, and provided the transfer of business is as a going concern. When the transfer of business is as a going concern, not only the assets, even liabilities also transferred, then only it will be called as transfer of business as a going concern. So see that when there is a change in constitution of a registered person on account of sale, merger, demerger, amalgamation, lease or transfer of business with specific provision for transfer of liabilities, okay. So with specific provision for transfer of liabilities means it should be amalgamation in the nature of merger. It should not be amalgamation in the nature of purchase, because in amalgamation in the nature of merger only all assets and liabilities will be transferred. Are you understanding this? So then the said registered person shall be allowed to transfer the unutilized ITC. So from transferor's electronic credit ledger to transferee's electronic credit ledger it will go. And what is the form for this purpose? ITC 2. ITC 2. And whether that ITC 2 should be certified by a CA or CMA? Yes. Always it should be certified by CA CMA even if the amount does not exceed 2 lakhs. So ITC 1 should be certified by CA CMA if the amount exceeds 2 lakhs. but ITC2 should be certified by CACMA, whatever may be the amount. And what is that certification that they need to do? That this business is transferred with specific provision for liabilities, like that they need to certify. Okay. Then suppose, sir, if it is merger, no problem. Say A Limited and B Limited is merged into AB Limited, there is no issue. So whatever is the unutilized ITC in A Limited and whatever is the unutilized ITC in B Limited will be transferred to AB Limited when these two gets merged. So from A Limited, ITC will be transferred to AB Limited. From B Limited also, ITC will be transferred to AB Limited. Easy. But the problem is when AB Limited gets demerged into A Limited and B Limited, then in that case, how the ITC can be transferred? Because in one account to two accounts it should be transferred. Means we need a ratio. What is that ratio? We need to take the assets ratio. So what is the assets of A Limited? Assets means total assets. Whether ITC availed on that asset or not availed on that asset, don't see. Total assets you take. So what is the total assets of A Limited? 100 crores. What is the total assets of B Limited? Say 50 crores. Now in what ratio? 2:1 ratio, the ITC will be transferred. For example, AB Limited is having a ITC of 8 lakhs. So what we will do? 8 lakhs into 1 by 3. 1 by 3 or 2 by 3? 2 by 3 will be given to A Limited. Again 8 lakhs into 1 by 3 will be given to B Limited. So in what ratio we will distribute the ITC? What ratio? Assets ratio. That is this point. In case of demerger, credit shall be transferred to the new entities in the ratio of net assets, whether ITC availed or not on such assets. Post demerger, after demerger, whatever is assets, in that ratio it will be transferred. Now I have given few examples for a transfer of ITC. Whatever I gave you this example here, I gave you in the book itself. You see those numbers. Illustration 9. Before demerger, total assets of XYZ Limited, so they are having business in two states, Madhya Pradesh and Uttar Pradesh, 60 crores and 40 crores, so total 100 crores. ITC of XYZ Limited is 4 crores in Madhya Pradesh, 6 crores in Uttar Pradesh. Now what happened? But please carefully listen, these are all some areas which are not tapped in the previous exams, but in study material they have given, and they have already started asking questions on this also. So that's why please concentrate. So XYZ Limited 60 crores and 40 crores. So total 100 crores is the total assets of XYZ Limited, and ITC 4 crores and 6 crores in Madhya Pradesh and Uttar Pradesh. So total 10 crores they have ITC. Now what happened? So XYZ Limited is now split into two companies, ABC Limited and XYZ Limited. So means from XYZ Limited they demerged ABC Limited. So resulting now there are two companies. Okay. Now how much assets are taken over by ABC Limited in Madhya Pradesh? 30 crores. So remaining out of 60, if 30 gone, what is the remaining? 30 crores is with XYZ. Again, in Uttar Pradesh, 40 crores, 10 crores taken over by ABC. So what is the remaining assets with XYZ? 30 crores. Now if you see, the total assets is 40 crores and 60 crores for ABC and XYZ. Now, how the ITC can be transferred? In what ratio the ITC should be transferred? Assets ratio. Should we see assets on all India basis or assets state-wise? Assets state-wise, because ITC is state-wise na. As ITC is state-wise, asset also you take state-wise and you distribute. Now concentrate. In Madhya Pradesh, what is the ITC? Before demerger, 4 crores. Now what is the assets ratio after demerger? 30 and 30. So 1:1. So equally you divide between ABC and XYZ. That is how much credit you have? 4 crores. So 2 crores you give for ABC and 2 crores for XYZ. Is it clear? Then again go to Uttar Pradesh. Uttar Pradesh, what is the ITC available? 6 crores. And how the assets are distributed after demerger? 1:3. So out of 6 crores, into 1/4 will go to ABC. Into 3/4 will go to XYZ. So what is that? 1/4, 3/4, 1.5 crores and 4.4 crores. Understood? So what is that you need to remember? I gave that line below. ITC should be transferred in assets ratio determined with respect to each state. Clear? Then next, illustration 10 you see. Transferor XYZ Limited and transferee ABC Limited. Now XYZ Limited was having business in 3 states, Madhya Pradesh, Uttar Pradesh and Maharashtra. And ABC Limited is also having business in 3 states. So Madhya Pradesh business, the Madhya Pradesh registration has taken over. Uttar Pradesh business, Karnataka business has taken over. Maharashtra business has taken over. You understood? Now in this case, can the ITC be transferred for all these 3 states? No. Because transferor and transferee should be in the same state. Transferor and transferee should be in the same state. So previously Madhya Pradesh, now Madhya Pradesh, yes. Uttar Pradesh, Karnataka, no, ITC cannot be transferred. And Maharashtra, ITC can be transferred. Now for Karnataka, what they should do? So they should register in Uttar Pradesh, correct? They need to register in Uttar Pradesh. Only when they register, who should register in Uttar Pradesh? ABC should register in Uttar Pradesh. Then only the ITC can be transferred and they can enjoy that ITC. So what is the point that you need to remember? Both transferor and transferee should be in the same state for transfer of ITC. Then next illustration you see. XYZ Limited in Maharashtra demerged its entity into ABC Limited and PQR Limited and the assets ratio is 4:6. So means 4/10 for ABC, 6/10 for PQR. Now what happened is that this XYZ Limited is having ITC, CGST 6 crores, SGST 6 crores and IGST 4 crores. So total they have a credit of 16 crores. And my question is whether each and every head they need to divide in this ratio only. Not necessary. Not necessary. Headwise they don't have to follow. What is headwise means? CGST same ratio, SGST same ratio, IGST same ratio. No, not required. The total ITC is there na. That total ITC they can distribute in the assets ratio, but between the heads they can choose anything. For example, what is the total ITC? 16 crores. And how much will be given to ABC Limited? 4/10. So 16 into 4/10 how much? 6.4 crores. And 6/10 is how much? 9.6 crores. But headwise it is up to them. Headwise it is up to them. So 6 crores fully can be given to ABC also or fully to PQR, or what they are doing 5.6 they have given to PQR, 0.4 they have given to ABC. Sir, can we follow anyway? Anyway you follow, but the total should not change. Anyway you follow, but the total should not change. So the total of ABC should be 6.4 and the total of PQR should be 9.6. Here we can follow in any way, but ensure that the total is same. You understood? So what is the point? Third point you should remember. First point is assets ratio state wise. Second point, transferor transferee should be same state. Third point, it should be transferred in assets ratio and headwise that ratio need not be applied. So that is about this. Then one more point here you see, last 2 points. In case a single registration is split into multiple registrations, what is this? So far within Tamil Nadu, I am having only single registration, but I was having 3 places of business, Chennai, Madurai and Coimbatore, like that 3 places of business I was having, but so far I was having only 1 registration. So now I want to go for separate registration. Can I go for separate registration? Yes. Then one registration is now split into 3 registrations. Now whatever ITC that is there in this one registration will be given to this 3 registration. Same way like demerger, in what ratio? Assets ratio. See that. In case where single registration within a state is divided into multiple registration based on place of business, ITC shall be transferred to multiple registration from single registration through ITC 2A. There is another form, that is 2A. In what ratio it should be given? Per value of assets ratio. But this ITC 2A need not be certified by CA/CMA. Just write down there, ITC 2A, CA or CMA certification not required. Form GST ITC 2A, CA or CMA certification not required. Not required. Only ITC 2 is required. ITC 2 only certification required. When ITC 2? When ITC 2A? Transfer of business, ITC 2. But single registration getting separated into multiple registrations, ITC 2A. Then, sir, there is a death of sole proprietor, sir. Now the son has taken over the business. Can we apply this transfer of business and so that the ITC can be transferred? Yes. See the last point. 18 subsection 3 can be applied even in case of succession on account of death of sole proprietor. But only thing, there is no transferor. So we cannot bring his spirit and file ITC 2. So the son only will file ITC 2 and the ITC gets transferred. Okay. Then look into the next one, 18 subsection 4, 29 subsection 5 and 18 subsection 6. So I am bringing 29 subsection 5 here because whatever information that we have in 18.4, the same information we have in 29 subsection 5 also. That's why together we are learning this. First we will see 18 subsection 4. What is the situation in 18 subsection 4? Which is the opposite of 18 subsection 1C and 1D. Last two situations we saw na, availment of ITC on closing stock. What are the last two situations? Composition scheme to normal scheme, exempted supplies to taxable supplies. Now reverse. Normal scheme to composition scheme, taxable supplies to exempted supplies. In that case, normal scheme to composition scheme, taxable supplies to exempted supplies. Understood? Now, here what you did? Here what you did? You availed the ITC on closing stock. Correct? Huh? Whereas, reverse, what you should do? Reverse the ITC on closing stock. Are you getting this part? In reverse situation, you reverse the ITC on closing stock. What is the closing stock? Same. Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, and capital goods also you need to reverse the ITC. Are you getting this part? So see there, normal scheme to composition scheme, taxable supplies becomes exempted. On inputs lying in stock, in WIP, in FG, how much ever ITC that you avail, that you need to reverse, that you need to pay. Got it? And sir, time limit, sir, in case of 18, 1C, 1D, availment of ITC, there was a time limit. The closing stock should have been purchased within 1 year prior. Correct? But here no time limit for reversal. Why, sir? Availment of ITC on closing stock, loss to government, so there is a time limit. Reversal of ITC, income to the government, no time limit. Even if you purchase 3 years before, 4 years before also, you do the reversal. Got it? Sir, invoice is not there, sir. While availing ITC, you cannot take ITC. Why you cannot take ITC? Matching. Matching is required. But reversal, invoice is not there, sir. Don't worry. You take market value today and you do the reversal. Why? Income to the government. Okay. So, in the absence of invoice, consider market value as on the date of conversion. Are you getting this? And suppose if you take market value, then that should be certified by a CA or CMA. But when CA CMA certification required here? Only if you replace invoice value with market value. In case of capital goods, it is not 5%. While availing ITC, minus 5% for every quarter or part thereof. While reversing the ITC, simple. Total ITC divided by 60. Logic, 5 years is the life of capital goods. Even when you take 5% for quarter also, 5 years was the life of capital goods. You take 5% for 1 quarter. For 1 year it will be 20%. 4 quarters into 5%, 20%. Then for 5 years it will be 100%. So it will be fully depreciated for 5 years. So which means what will be taken as the life of the capital goods? 5 years. So in other words it will be 60 months. So they are telling take the total ITC, divide it by 60 months and see what is the balance life of the capital goods out of 5 years. To that extent you need to reverse the ITC. For example, we use the capital goods for 4 years and still 12 months is left. So therefore what we will do, total ITC divided by 60 into 12 months, that will be the ITC we will reverse. So total ITC divided by 60 into balance useful life. You understood here? So tell me how much ITC we will reverse and when we will reverse this ITC. 18.4. From where to where? Normal scheme to composition scheme. Taxable supplies to exempted or exempted to taxable? Taxable to exempted. So in case of inputs as such held in stock, inputs in WIP, inputs in FG, how much ITC you avail, you reverse. Suppose if you don't have the invoice, you take the market value and get certified from CACMA. In case of capital goods, how much you need to reverse? Total ITC divided by 60 into balance useful life. And these details you need to furnish in one form, that is ITC 3. Total 4 forms we have. ITC 1, 2, 2A, 3. ITC 1 for what? Availment of ITC on closing stock and certified by CACMA if the claim of ITC exceeds 2 lakhs. And ITC 2 for transfer of ITC certified by CACMA always. ITC 2A single registration getting separated into multiple registration. CACMA certification not required. ITC 3 reversal of ITC on closing stock. CACMA certification required if invoice value replaced with market value. And what is the time limit within which I need to file this ITC 3? ITC 1, what is the time limit? 30 days. In case of ITC 3, it will be 60 days from the commencement of the relevant financial year. And time restriction with respect to purchase of inputs and capital goods, no time restriction. It can be purchased any time, we can reverse. But while availing the ITC, it should be purchased within 1 year. Now, I have given the difference between 18 1C 1D and 18 subsection 4, just to have a comparison. What is 1C 1D and 18 subsection 4? Situation what? Composition scheme to normal scheme and exempted supplies to taxable. Here it is reverse. What is that? Normal scheme to composition scheme, taxable supplies to exempted supplies. What we will do with respect to ITs in 18 1C 1D? Avail ITC on closing stock. But in 18.4, reverse. And 18 1C 1D, what is the meaning of closing stock? Inputs as such held in stock, inputs in WIP, inputs in FG, and capital goods also, but after reducing 5% for every quarter or part thereof. Whereas here, inputs as such held in stock, inputs in WIP, inputs in FG, but for capital goods what we will do? Total ITC divided by 60 months into balance life. Time restriction for purchase, yes, 1 year, but here not applicable. Their form ITC 1, here ITC 3. And ITC 1 certified by CACMA if it exceeds 2 lakhs. Here, if invoice value replaced with market value. Now, look into 29 subsection 5. When 29 subsection 5 is applicable in case of cancellation of registration. So, whenever my registration is getting cancelled, I cannot enjoy the ITC. So, in that case also I should reverse the ITC, whatever I have already availed. Is it clear? So, I am cancelling my registration. So, reverse the ITC with respect to inputs as such held in stock, same. Inputs in WIP held in stock, inputs in FG held in stock. Whatever ITC based on invoice. Or we have an extra point. What is that? Compare it with the GST payable on such inputs, whichever is higher. You got it? So we have to compare one extra point. What is that? Same, ditto, same as 18.4. But extra, what is the point? Here whatever ITC we avail, that we will reverse. But here we need to compare it with what? Tax payable on such inputs if sold. If I am selling that inputs, what could be the tax payable? Compare with that. Whichever is higher should be taken. Is it clear? Then next, capital goods, same. But again we need to compare here. What is that? ITC, total ITC divided by 60 into balance useful life, or GST payable on such sale of capital goods. If sold, how much GST payable? Whichever is higher. This is the extra point. Remaining and all is same. And also, so where we will do this reversal? GSTR 10. GSTR 10 is a final return. In that final return, we will do this reversal. And when this final return needs to be filed? 3 months from the date of cancellation. Or B, order of cancellation. Don't add 3 months for order of cancellation. If you read study material, it is like that only. 3 months from date of cancellation or 3 months from order of cancellation, because alignment mistake it is. But law did not give like that. Law clearly says 3 months from the date of cancellation. This is one point. Means cancellation plus 3 months. Or when the order is passed for cancellation. Whichever is earlier, whichever is later. Whichever is later. Wherever you come across this whichever is later, that you highlight and separately you write and remember. Okay, separately one sheet you write all this whichever is later, because usually whichever is earlier provision you will remember, but whichever is later provisions you will not remember. So you prepare that in a separate sheet. Then time restrictions is not applicable. So everything same. What are the differences between 18.4 and 29.5? Come on. Situation 18.4 is normal scheme to composition scheme, taxable to exempted. But 29.5, cancellation of registration. And ITC on inputs, reverse, same. But compare it with GST payable on such inputs, whichever is higher. Capital goods also ITC reversal same. But we need to compare with GST payable on such capital goods, whichever is higher. And we need to file one final return for reversal of this. And that final return should be filed within 3 months from the date of cancellation or order of cancellation, whichever is later. Next, look into some additional points related to this. Inputs and capital goods can be purchased anytime. So it will not be visible in the screen. You check the book because it is there in landscape mode. You check the book. Inputs and capital goods can be purchased anytime on which ITC availed. Suppose if I have not at all availed ITC, will the reversal arise? I purchased a car, car is a block credit. I have not taken ITC. Should I reverse anything? First of all, I have not availed. Why should I reverse? I don't have to reverse. What if capital goods are purchased before 5 years? Divided by 60 into balance useful life. What is the balance useful life? 0. Anything multiplied by 0? 0. I don't have to do any reversal. If capital goods are purchased before 5 years on which ITC availed, then reversal shall not arise. If invoice not available, then market value certified by CACMA, and these details should be reported in ITC 3. If there is any balance in ITC after reversal, it shall be lapsed. What does it mean? Sir, I have 1,50,000 balance in ITC. On inputs, capital goods, I should reverse 1 lakh. Still how much ITC is there? 50,000. That will be lapsed. Suppose if I have balance 75,000 and I need to reverse 1 lakh. So 75,000 I will adjust from ITC. Still how much I need to pay? 25,000. See the next point. If there is any shortfall for reversal, then such shortfall shall be payable using cash ledger. And this computation should be shown separately for CGST, SGST and IGST. So this is about 18.4 and 29.5. Now you look into 18 subsection 6, the last subsection, 18 subsection 6. When this will be applicable? I purchase some capital goods on which I have availed ITC, and that capital goods got sold or disposed of. Then in that case, I have to pay GST as per 18.6. Suppose I have purchased the capital goods on which ITC not availed. Normally I sold. So on sale value I will pay GST. Correct? Example, I purchased a car. I am selling the car. for 2 lakhs. Now on what I will pay GST? 2 lakhs I will pay GST. Sir, why should I pay GST? Already I purchased the car, at the time I paid GST na. That is okay. Now you are selling something, you are getting some money, so on that you should pay GST. But this you are not going to pay out of your pocket, you can in turn recover it from the recipient. So what is your problem? You pay GST. That's fine, sir. But when I have availed ITC on that car, then what they are telling? They are telling compare between the balance in ITC and GST payable, whichever is higher you need to pay. What does it mean? ITC availed. So I purchased a machinery. At the time of purchase of machinery, I would have taken ITC. I use the machinery for 2 years and I am selling the machinery. Means only 2 years ka credit you can enjoy. Remaining 3 years ka credit you should not enjoy. Correct. So how much is that 3 years ka credit? How will I arrive? Simple. GST paid, that is ITC availed minus 5%. How will you depreciate here? How will you depreciate? 5% for every quarter or part thereof from the date of purchase till the date of sale. Compare it with GST on sale value. Whichever is higher we need to pay. So say this, total ITC minus 5% for every quarter or part thereof from the date of invoice till the date of supply, or GST payable on such capital goods, whichever is higher. So why, sir, we need to compare it this way? Because sometimes the GST payable on capital goods may be more than the ITC. Sometimes it may be less than the ITC, but government always wanted to be at the benefit. So see this illustration 13, you will understand. Capital goods purchased on 8/10/2019 for rupees 10 lakhs, excluding GST at 12%. They were disposed of on 5/5/2021 for 6 lakhs, excluding GST at 12%. Compute the GST payable. Now what is that? First, total ITC availed. What is the provision? Can you tell me? ITC availed minus 5% for every quarter or part thereof. From when to when? Date of purchase till the date of sale, or GST on sale value, whichever is higher. Now tell me, what is the ITC availed from the question? 1,20,000. So 10 lakhs into 12%, 1,20,000. And how many quarters you have used? Quarters are part thereof. While taking the quarters, you need to take the calendar quarters. Means Jan to March 1 quarter, April to June 1 quarter, July to September 1 quarter, October to December 1 quarter, like that. Now 8/10/2019. 8/10/2019 means it comes in which quarter? 4th quarter. October, November, December. So 2019 1 quarter. Then when are you selling? 2021. Means 2020 4 quarters. So total 5. 2019 1 quarter, 2020 4 quarters, so total 5. 2021 April, May, June, that is Jan, Feb, March 1 quarter, April, May, June. Why, sir? Part thereof. Part thereof. Even few days are there in that quarter, you need to take it as a full quarter. So total how many quarters? 7 quarters. You understood how 7 quarters? First, it is 2019. In the year 2019, there is only 1 quarter, because 8/10 means October, November, December, that quarter. In the year 2020, 4 quarters, full. Then again 2021, next year, so Jan, Feb, March 1 quarter, April, May, June, few days also we need to take as quarter, so 2 quarters. So total 7 quarters. 7 quarters into 5%, how much? 35%. So please do the calculation. 1,20,000 minus 35%. What is 1,20,000 minus 35%? 72,000. Or GST payable on such capital goods. What is the sale value of that capital goods? 6 lakhs into 12%. That is 72,000. So first one is 78,000. Na? First one is 78, sorry, 1,20,000 minus 35%, 78,000. Second one is 6 lakhs into 12%, 72,000. Whichever is higher. You understood? The balance in ITC is only higher. So therefore 78,000 we need to pay. Now sir, can that 78,000 we can recover from the next person? Yes. We are selling to someone na, from them can we recover 78? Yes. What he will do? He will take ITC 78,000. Are you understanding? I am selling goods per capital goods per, so I will pay GST how much? 78. And I will recover it from you. You are my buyer. Again you will take ITC of 78,000. Then what will be your answer if such goods are not capital goods? Tell me. What if that goods are not capital goods? Simple. Don't compare. Don't compare. What is the sale value? Section 15. Section 15 says transaction value. So what is the transaction value or sale value? 6 lakhs. 6 lakhs into 15%, 15 or 12%. That's it. That is the answer. Now the second part. What will be your answer if such capital goods are disposed without consideration and the value determined, that is open market value? I told you when we don't have transaction value we take the open market value, and the open market value is 4 lakhs. Then A will be 78, correct? A will be 78, no change. ITC avail minus 5% for every quarter or part thereof, same. So A will be 78,000. B will be how much? 4 lakhs into 12%, that is 48,000. Whichever is higher, that is 78,000. Then third part. What will be your answer if such capital goods are disposed of without consideration and value cannot be determined as per rules? Means B is 0. Why B is 0? We don't have the value. But A will be 78,000. So whichever is higher is 78,000. That will only be taken. What will be your answer if such capital goods are sold after 5 years? If it is sold after 5 years, A will become 0. How A will become 0? Minus 5% for every quarter or bar thereof. 5 years means it will be 100%. So 1,20,000 minus 100%, 0. Or B, sale value. What is the sale value? 6 lakhs into 12%, 72,000. Whichever is higher will be 72,000. Clear here? Any way they can give, but you should be careful as to how to arrive at the answer. So can you tell me once again what is 18 subsection 6? When is it applicable? I am purchasing some capital goods. On purchase of that capital goods, I avail the ITC, and that capital goods are sold. So how much is the GST payable? ITC avail minus 5% for every quarter or part thereof from the date of purchase till the date of sale, or GST on such capital goods, whichever is higher. Suppose, see the exception here, in case of molds and dies, jigs and fixtures, refractory bricks. Molds and dies means which is like a capital goods to bring the product into requisite shape, that is called as molds and dies. And jigs and fixtures are to hold the capital goods. So these are used in the machineries. And then refractory bricks are used in the factories for heating the material. In clints they use refractory bricks. These three things, if you are selling as scrap, don't take A or B, whichever is higher, just take B point. What is that? GST on sale value. In case of molds and dies, jigs and fixtures, refractory bricks are sold as scrap. GST payable will be sale value into GST rate. So this is about 18.6 we completed, and look into one question, illustration 12. S&P Private Limited, Coimbatore, exclusively manufactures and sells product Z, which is exempt from GST wide notifications issued under relevant GST legislations. The company sells Z only within Tamil Nadu. The turnover of the company in the previous year was 55 lakhs. The company expects the sale to grow by 20% in the current year. So where is S&P located? Tamil Nadu. What is it they are doing? They are making only exempted supplies. A person who is making exempted supplies is exempted from registration. So that's why even though they have 55 lakhs of turnover, they have not registered. The company expects the sale to grow by 20%. Owing to the growing demand for the product, the company decided to increase its production capacity and purchased additional machinery for manufacturing Z on 1/7/2020. The purchase price of the capital goods was 20 lakhs exclusive of GST at 18%. So what they did, they purchased some capital goods. They purchased some capital goods, and with effect from 1/11, the exemption available on Z was withdrawn. So exemption got withdrawn, and the government has imposed 12% GST. The turnover of the company for the half year is 45 lakhs. Already they crossed 45 lakhs, and now it became taxable. Whether they have to register under GST? What is your answer? Yes. Why they should register? Previously they were making only exempted supplies. As they were making only exempted supplies, they were not required to get registered. But now their exempted supply became taxable, and the turnover already crossed the threshold limit. So therefore they are definitely required to get registered. What is the date on which they are liable to get registered? From when the exemption is withdrawn? 1/11. So from 1/11, within 30 days, they should make application for registration. Is it clear? That is the first question answer. Second question, whether they can avail ITC on machinery purchased? If yes, how much credit can be availed? So they purchased one machinery now. How much is the value of the machinery purchased? 20 lakhs. On that, what is the GST? 18%. When is it purchased? 1/7/2020. And when are they getting registered? When are they liable to get registered? When the exemption is withdrawn? 1/11. So 1/7/2020 to 1/11, how many quarters? 2 quarters. How 2 quarters, sir? 1/7, July, August, September, 1 quarter. Then October, November, 1 quarter. So 2 quarters. 2 quarters means 2 into 5, 10%. So from 20 lakhs into 18% minus 10%. So we need to reduce. So remaining ITC we can take on capital goods. Correct? Wrong, sir. Wrong, sir. We are not applying this, sir, because in case of a person now only getting registered, 18(1)(a) will come. In 18(1)(a), where there is capital goods credit, sir, only inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. You please check the page before that. See the pages. 18(1)(a), 18(1)(b), only inputs, no capital goods. 18(1)(d) only capital goods. Correct? 18(1)(d), what is the wording given? 18(1)(d), what is the wording given? Registered persons exempted supply became taxable. Are they registered? No. So therefore they will not get the credit on capital goods. Suppose if they are already registered, then they can take credit on capital goods. I gave both the answers. Maybe in question they can change that and give if they are already registered. So therefore this will be the answer if they are already registered. Suppose now only if they are getting registered means, if they are already registered means they can take credit. If they are now only getting registered, they cannot take credit on capital goods. Understood? Then look into important notifications. So we completed all the sections, and we have some notifications and one circular related to replacement of parts. So see this first notification: ITC reversal not applicable in case of exclusions from supply under Schedule 3 except sale of land, sale of building, write down, and sale of warehoused goods. Sale of warehoused goods. Only in 3 places, even though it is not a supply, we will treat as exempted supply. Correct? Apart from these 3, there are many things in exclusion from supply. Spelled slow, there are many things. Because of all those reasons, we will treat as exempted supply. No. Not all excluded from supply will become exempted supply. Only 3: sale of land, sale of building, sale of warehoused goods. Sale of securities anyhow not given in Schedule 3, so that is irrelevant. But whatever is given in Schedule 3, So even though it is excluded from supply, we will treat as exempted supply? No, except sale of land, sale of building and sale of warehoused goods. Then value of assets for the purpose of apportionment of ITC in case of demerger to include value of entire assets whether ITC availed or not. Already we saw that. Then this point also we saw, suppose if there is a death of sole proprietor, can the ITC be transferred to the successor? Yes. And then, so this point not relevant, you just put across, not required. Look into that circular on replacement of parts during warranty. This is an amendment. So little big circular, it was not there in the previous, they have added. So you can expect a question on this. So first, what is it about? Sir, you are purchasing some parts and you are using that parts as a replacement during warranty period. In case of that part replaced during warranty period, can you take ITC on that part purchase? That is a question here. Example, say this, sleek modular kitchen. So they are providing interior decoration services to X, for which X has paid a consideration of 8 lakhs plus GST 18%. Now definitely for 8 lakhs they are spending means, so there is a warranty that should be given. So in modular kitchen, so this cupboards, the drawers, etc. and all, if it is damaged, they should replace that. So they gave a free replacement of parts during warranty period. But this parts they will buy now. Whatever they replace during warranty period, they need to buy that. So they purchase the parts for replacement during warranty period. On that parts, they paid 50,000 plus GST 6,000. Now, can they take ITC on this 6,000 rupees? Yes, they can take ITC on this 6,000 rupees. There is no restriction because nowhere it is in the blocked credit. Correct? Nowhere it is in the blocked credit first, and it is used in the course or furtherance of business. Correct? So can they take ITC? Yes, they can take ITC. But the question here, then why sir they gave this circular? Not for that. When you take the ITC, you are replacing the part. When you are replacing the part, it may become supply under 7(1)(c), disposal of business asset on which ITC availed. That's why they are telling, don't treat it as any supply and don't reverse any ITC. You can enjoy because literally it is not free. Already in 8 lakhs itself, we have recovered for this replacement of parts during warranty period also. So therefore, reversal of ITC by manufacturer shall not arise even if such replacement of part is without any consideration. Sometimes instead of calling it as free replacement, some nominal charges they will collect, some 10% or 20% like that they will collect. Even then they can enjoy the ITC. If any consideration is charged with respect to such replacement also, GST payable on that consideration, whatever they collect, and reversal of ITC shall not arise, means ITC they can avail. Now from this issue number 1, what is the one line summary that you need to remember? Parts purchased for replacement during warranty period, ITC can be availed. Clear? Understood? So put a sticky note there and write. Parts purchased for replacement during warranty period. Parts purchased for replacement during warranty period. Parts purchased for replacement during warranty period, comma, ITC can be availed. Parts purchased for replacement during warranty period, comma, ITC can be availed and reversal shall not arise. ITC can be availed and reversal shall not arise. Okay. Then next, issue number 2 you see. So this is in the context of a car manufacturer and car dealer and buyer. There is a car manufacturer Toyota and Lanson is a car dealer and buyer Mr. X. First, car manufacturer will give the car to the dealer, for which dealer will pay 12 lakhs plus GST. Again, dealer will sell the car to the buyer and including warranty for 3 years, and the buyer will pay 15 lakhs plus GST. Now what happens? After purchasing the car, we will be giving the car for free after sale service. During that free after sale service, if there is any manufacturing defects, that parts also they will replace, correct? Will they charge anything or they will not charge? They will not charge anything, it is absolutely free. Like that, the dealer has provided free after sale service of 3,000 and they replace the parts of 2,000. Understood the situation? What they did? They have provided free after sale service. What is the worth of that free after sale service? 3,000. Time paakadappa, class gavani. Okay, ange paathutirken. I will give break, still 15 minutes is there. I told na sharp 11 o'clock I will give break, don't worry, okay. Meanwhile, if you want to go, you go. I said 9 o'clock means 9:30 and all you are leaving, that's why I said if you want to go out and come, go out and come. Sit for at least 2 hours, exam 3 hours. Is there a break for 3 hours? In the middle 15 minutes you go and come, will they tell? No, na. If that facility they give, good only. That 15 minutes we go out and we can study everything and we can come and write. That facility they are not giving, na. So 3 hours you have to sit, at least 2 hours. You know, have the habit of sitting for 2 hours at least, because the like that, like a pregnant woman, you know, you are not able to sit for some time also. How we are? 2 hours. In 2 hours, they are every 5 minutes I am observing from morning 9 o'clock to 10:45, every 5 minutes he is looking at the clock there. So whether the clock goes for 5 minutes or not, you are looking at the 5 minutes, okay. So concentrate on this here, don't have any problem. Like 11 o'clock I will give you break. Already last 3 days I was doing that only now. So just wait for some time, no? Concentrate here. So therefore there is a dealer who is selling the car and he is doing a free after sale service of 3,000 and replacement of parts 2,000. So total how much? 5,000. Is this 5,000 really free? No, it is not really free, because this dealer will recover this money from the manufacturer. Are you getting this? This 3,000 free after sale service they are doing now, this is not absolutely free. Even though they are not getting from buyer, they will get it from the car manufacturer. Now related to these parts, what has happened? You see, situation number 1, dealer procured the parts from third party, means market they procured the parts and charged consideration from the manufacturer. So what is happening in situation 1? This parts 2,000 rupees is there na, that they procured from the market and they are recovering the 2,000 rupees in addition to 3,000 rupees from the manufacturer. Now you are a dealer, step into the shoes of a dealer and tell me what will happen here. First you are procuring the part from the market. How much is that part? 2,000. On the 2,000 you will pay GST? Yes or no? Can you take that as ITC? Yes. Now you are doing the replacement and servicing. So total how much is the bill value? 5,000. This 5,000 plus GST you will recover from whom? Manufacturer. Are you getting? Say this. From the dealer point of view, you see, invoice for recovery of cost from the manufacturer. After sale service 3,000, part 2,000, total 5,000, GST 900, 5,900 you will recover from the manufacturer. And GST payable by the dealer 900 and ITC available with respect to the part purchase. You purchased the part na for 2,000. On that whatever GST you paid you can take as ITC, and whether you need to do any reversal, no. Now from my point of view we will see manufacturer. What will happen? Dealer will recover 5,000 plus GST from manufacturer. So manufacturer can take ITC of that 900 rupees? Yes. So manufacturer can take ITC of that 900 rupees and manufacturer will pay 5,900 rupees to the dealer. Understood here? So this actually they did not give circular illustration. I just converted that circular which is in theory into this example for understanding purpose. Okay. If at all question is given in exam, like this only they will be giving. They will also not ask the circular directly. They will frame a question based on this. So these points you remember, that is sufficient. Okay. Then next, situation 2. If replacement of parts are received by the dealer from the manufacturer. Now what happened from previous situation to this situation? You as a dealer is not purchasing the part from the market, but you are getting the part freely from me. You understood? So manufacturer sending the part to the dealer and dealer used it as replacement during warranty period. Example, so in my car sensor is not working, that reverse parking sensor not working, and I gave the vehicle so yesterday for servicing to replace that sensor gone. I don't know what has happened, manufacturing defect. And when I gave that, so they are telling, sir, this part is not available, sir, and we have to wait. So how many days you will wait? 2 days, sir. After 2 days only we will be able to deliver the car to you. So I asked them, why 2 days? Because this part usually we will not keep in stock, sir. We will ask our manufacturer, he will be couriering the part to us, and then only we will replace that in your vehicle and we can give. Now like that, dealer is waiting for the part from the manufacturer. So when manufacturer is sending, the dealer will do the replacement. Is it clear? Now dealer will charge how much to the manufacturer? 5,000 or 3,000? 3,000, because part you got free from the manufacturer na. So dealer will charge how much to the manufacturer? 3,000 plus GST, and dealer will pay GST. Part you got for free, so therefore there is no question of any GST ITC on that. From manufacturer point of view, tell me, manufacturer, you raised invoice to manufacturer for what? 3,000 plus GST. That GST can be availed as ITC. So say this. Dealer will raise invoice for 3,000 plus GST 540, 3,540, and manufacturer shall pay 3,540, and this 540 can be availed as ITC. Now I am giving you the part free means I should buy the parts. Sir, manufacturer giving the part free means manufacturer should buy the part na. So on the part purchased by the manufacturer, can the manufacturer take ITC? Yes, and you don't have to reverse any ITC. So 2000 into 18, 360, with respect to part procured by manufacturer, they can take ITC, and reversal of ITC not required. Understood? Then third situation. What happens in third situation? 100 numbers of spare parts supplied by manufacturer to dealer at 2,000 rupees, excluding GST at 18%. Out of that, one spare part is used as replacement during warranty period. What is this? I sent you a stock of 100 spare parts. Out of these 100 spare parts, one spare part you are using as replacement during warranty period. Means you will pay me for 100 spare parts or 99 spare parts? 99 spare parts. Why pa? That replacement during warranty period, my liability na. You just spent it, and therefore you will not pay for 100, you will pay for 99. Which means, what as a manufacturer I should do? First I am sending 100 parts for which I will raise an invoice. Out of this 100, one part you are using as replacement during warranty period. So I will give a credit note, because I will not get money for that na. So I will give a credit note for that. Is it clear? So from manufacturer point of view, you see, first manufacturer will raise invoice for how much? 100 parts into what is the price of each part? 2,000, and GST 18%, 2,36,000. And credit note will be issued by the manufacturer. Why manufacturer will give credit note? Because for one part which you replaced as free warranty, so for that you will not pay to me. So therefore I will give a credit note for that one part. How much? 2,000 plus 360. You got it? And So manufacturer shall pay, now you will raise invoice to me for how much? 3000. 3000. Manufacturer raised invoice for 100 parts over, credit note over. Now you do the free after sale service. How much is the free after sale service? 3000 plus GST you will raise invoice on me. So on that 540 rupees I will take as ITC. Now from dealer point of view, you see, your point of view. First I gave you invoice for 100 parts. On that how much GST? 36,000. That 36,000 you will take as ITC. Now whenever you get the credit note for that one part, 2,360, that 360 you will do the reversal. So based on credit note you should do the reversal na. Again you will raise invoice to manufacturer for 3,540 for the service charges, correct? So this is about three situations. Any situation can be tested in exam, and they will ask you what is the treatment of this. Literally you will get question like this only, not necessary same example but a different example, but these points you need to write in the answer, okay? So first you need to divide that. From whose perspective they are asking? Are they asking from the manufacturer perspective, or they are asking from the dealer perspective? Accordingly you need to write the points. Then issue number 3. Generally additional warranty will be provided at the time of purchase of electronic goods. They will say you have a standard warranty of 2 years. If you pay some extra amount, we will give you extended warranty for 5 years. Have you observed that? You buy TV, refrigerator, washing machine, mobile, everywhere they will be telling this, that if you pay extra we will give you additional warranty. Now what is the treatment of that additional warranty? What is the rate of GST on that additional warranty? If the additional warranty is given at the time of sale of the product GST rate will be taken on the additional warranty also. If the additional warranty is paid separately, that will be taxable as services at the general rate applicable to services, that is 18%. Example, so iPhone 15 Pro Max. So what is the price of this, sir? 1,59,900 including 28% GST. And so when the person purchases this iPhone 15 Pro Max, what the shopkeeper will tell, sir, this is very costly mobile, sir. If you drop it and all, it will be broken, and to replace the screen itself, it will be 60,000 rupees, sir. For 60,000 we can get one mobile itself, and 60,000 rupees, sir. So better you take a Apple Plus coverage, sir. What is this Apple Plus coverage? For 1 year, if anything happens to that mobile, they will replace the new mobile. Nice idea. So when you are spending 1,59,900, so why can't you spend 15,000? So spend 15,000 also you spent. Now this 15,000 you paid at the time of purchase of mobile or at a later point of time, we need to check. If this 15,000 is paid at the time of purchase of mobile, then what will be the GST rate applicable to 15,000? The rate applicable to mobile. What is the rate applicable to mobile? 28%. So that should be taken. Suppose if this warranty is paid separately, first you purchase the mobile, you took to home, and in your home, and what happened is that, so your father or mother, they don't know how to handle that and all, it slipped out of their hand, but nothing, bed only it has fallen, but mini heart attack you will get. Now again you will go to the shop and you will take the additional warranty to protect the risk. Is it clear? Now in this case, what will be the GST rate on this additional warranty? General rate. What is the general rate? 18%. Is it clear? Then sir, this is only better na sir? Yes, but the rates will change. Sometimes the product rate is 12% means, the product rate is 12% means, then what they will do at the time of purchase of the product itself, if you pay warranty, then 12%, otherwise it will be 18%. 18% is the general rate, okay. So with this we completed input tax credit here, okay. And see, actually I wanted to complete all the problems and solutions also in this book, but I don't think so time will be sufficient. So because we are having still other chapters as well. So my objective is to complete the portion first. So therefore I am skipping this practice manual, but don't worry. practice manual do not need face to face, so that I will record and upload. So face to face we really need to learn the concepts and illustrations. Of course, lot of around some 15-16 illustrations I gave there, but these are some practice manual questions, additional questions from study material. Don't worry, I will upload it in my YouTube separately. I will record and upload. You can watch that, and meanwhile you can practice and parallelly watch also. Okay, so therefore from this chapter onwards, up to this chapter I have discussed all practice manual questions. From this chapter onwards, the remaining chapters, whatever portion that we are completing, the entire syllabus I want to complete. So this practice manual questions alone we will shift to later. If we have time we will do, otherwise I will give it to you in the YouTube. Is it okay? So we will take a break, and thereafter we will continue with exemptions under GST. We will meet at 11:10, 15 minutes from now. Okay, we will start. Please take page 163. Page number 163, exemptions in GST. Already we have covered some exemptions in RCM. Okay, so the remaining exemptions we are going to look into this. So this exemptions chapter, so just concentrate and listen enough, so that in exam if you see a question, if you know that we have discussed in the class, it is exempted. Otherwise, if you don't know anything, you write it as taxable. That is answer correct only. Okay. Then look into the first area, agriculture related services. In agriculture related services, we have total 4 exemptions. Look into the first exemption, any service in relation to agriculture or agricultural produce, page 163. Any service in relation to agriculture or agricultural produce means I am providing some services in relation to agriculture, or I am providing services in relation to agricultural produce, for which I get some consideration. That consideration received by me will be exempted. Example, service in relation to agriculture means you are a farmer. You wanted me to do the soil testing, seed testing, or supply the farm labor, or rent the agro machinery. These are all examples of service in relation to agriculture. Service in relation to agricultural produce means what? So this harvesting or pruning or sorting. We will sort the agricultural produce, packing the agricultural produce. So these are all examples of service in relation to agricultural produce. So what is the first exemption that you need to remember? Any service in relation to agriculture or agricultural produce, whatever consideration that we get, that will be exempted. So what is the meaning of agriculture? Agriculture means cultivation of plants, that is by default. But not only cultivation of plants, but rearing of all life forms of animals except horses. For what purpose? Food. What is example of rearing of life forms of animals for food? Poultry, fisheries will come under for food. For fiber, example, sheep farming, sericulture, silkworm. So then fuel, that is cattle farming. Cattle will be used as fuel for the purpose of pulling the plowing machinery. Tractor, if you can afford, you can use tractor. But tractors people cannot afford, they use the cattle for plowing. So cattle farming. Raw material, example, honey bee farming. So because honey is not available in that much quantity across, so it is very difficult to go in the forest and get that honey also. So that's why people will do honey bee farming. So this honey which is generated is used as raw material for many medicinal preparations. So raw material or any other similar products. Sir, why horses is excluded, sir? Horses is no way used in agriculture. Where we use horse in agriculture? We use it for plowing? No. For what purpose we use horse in agriculture? No way. For food, fiber, fuel, raw material or other similar products. Fuel, sir, but we use it as horse cart, na sir? Correct. But not in agriculture place, na? In agricultural place we will not use the horse. We will use horse cart for transportation. That's a different story. But in agriculture we will not use it. That's why horses are excluded. Sir, why only horses are excluded? So that's where I'm just giving you some clarity here in the first point. Animals are life forms are basically divided into two: endangered and other than endangered. Endangered means it is not allowed for rearing. You should not keep it in your house or keep it in your place and take care of it. So example, tiger, lion, elephant, turtle. Turtle is also banned. Turtle you know, tortoise, not all turtles, star turtle. So on the shell there will be star, so that star turtle, snakes, these and all will be banned. You should not keep it in your house. You are not allowed to breed it. Even recently some dog breeds also they said not allowed for rearing, like that. Okay, so that is called as endangered, not allowed for rearing. So definitely it will not come under agriculture. Whereas animals are life forms which are allowed for rearing, in that other than horses all other animals are covered under agriculture. Sheep farming, goat farming, chickens, and then pig, everything will come under agriculture. Okay, so other than endangered, horses will not fall, but remaining animals will come. But if it is endangered, it is not at all allowed for rearing, so it will not fall under agriculture. Then next, what is the meaning of agricultural produce? What is the point that we are discussing right now? Any service in relation to agriculture or agricultural produce is exempted. In that agriculture definition we have seen, agricultural produce means what? The primary produce out of agriculture, okay, on which no processing is done. But I am not rushing, I am going little slow only because I want you to focus, and this next 2-3 hours whatever we spent on exemptions, so that much only, so that thereafter revision. Okay, so that's why please carefully observe, listen everything. So therefore in case of agricultural produce means a primary produce out of agriculture. Example, tender coconut. Tender coconut is a primary produce out of agriculture on which no processing is done, or some processing usually done by a cultivator which does not alter its essential characteristics is also agricultural produce. That is, for this tender coconut, if you dry it for some days and remove the husk, inside we will be having coconut. Coconut is also agricultural produce. That process do not alter the essential characteristics. By peeling off a layer, inside we don't have tomato or potato, inside coconut only we have, so therefore it will not change the essential characteristics. Again that coconut, if you sun dry for some more days, the water content gets absorbed, and inside the shell if you remove, it is called as copra. That is also agricultural produce. So because of this process, the essential characteristics not change. That copra, if you make coconut oil out of that, then it is not agricultural produce. Why coconut oil is not agricultural produce? It changes the essential characteristics. Is potato agricultural produce? Yes. Potato chips? No. Tomato ketchup? No. Coffee? No. Coffee beans or coffee berries? Agricultural produce. Tea? No. Tea leaves? Agricultural produce. Sugar cane? Jaggery? Sugar? Understood the difference? So if it does not change the essential characteristics. Raw banana, agricultural produce. Banana fruit also agricultural produce. Ripening, they just did the ripening process. Same way, raw mango, agricultural produce. Mango fruit also agricultural produce. But from mango fruit you take the pulp, that mango fruit pulp is not agricultural produce. Are you getting this? So what is the meaning of agricultural produce? The primary produce out of agriculture on which no processing is done, or some processing which is usually done by a cultivator which does not alter its essential characteristics but makes it marketable for primary market. Now, is paddy agricultural produce? Yes. But rice is not agricultural produce. Why, sir? Paddy to rice, there is no change in the essential characteristics. Then why are you telling it is not agricultural produce? Because if you read the definition of agricultural produce, it is given that the process should be usually carried out by the cultivator. paddy to rice, usually who will do? Rice mills will do. So therefore it will not be coming under agricultural produce. No sir, in my village some farmers will get this brown rice sir. So they will just remove the husk and they will get the brown rice. So it is done by the cultivator. Usually is the word there. Majorly who will do paddy to rice? Rice mills. Because first of all rice is not white color only. Rice will never be in white color. Rice will be in brown color. These rice mills will do polishing on the rice. And when they do polishing on the rice, that will become white color. Rice natural color is not white. Rice color is brown only. So when you peel off the paddy, so the inside grain is actually brown color. But where we have today rice in brown color, it is fully polished rice only. So it is done by the rice mills. Therefore it will not come under agricultural produce. Even though rice is not agricultural produce, but there are few activities in relation to rice which is exempted. See the next point, point number 3. In case of rice, loading, unloading, packing and storage is exempted. Why these activities are exempted only for rice? What about these activities for agricultural produce? It's anyhow covered under first point. Storage of agricultural produce covered in the first point. Loading and unloading of agricultural produce covered in the first point. As rice is not an agricultural produce, separately they gave the exemption for rice. Okay. So what are the 4 activities for rice? It is exempted: loading, unloading, packing, storage. Okay. Then next point you see, services by way of storage of cereals, pulses, minor forest produce. Again, this exemption is only for storage. Why cereals and pulses is only given? Because cereals and pulses is not agricultural produce, and minor forest produce is also not agricultural produce. So pulses means dal pa. Dal is also processed, and minor forest produce means, so we get some forest produce like Ayurvedic herbs, bamboo, and then this honey. These are all some things which are available in the forest. No one is going there for cultivation. So it will not come under agricultural produce. Even though the cereals and pulses and minor forest produce is not agricultural produce, but its storage is exempted. Then next one, artificial insemination of livestock. Through injections, they will make the animals to reproduce. So these injections are given. So mainly for chicken, they give injections to lay down in a day some 10 eggs, 20 eggs and all. So these injections are known as artificial insemination. That artificial insemination is also exempted. So what are the 4 activities? Any service in relation to agriculture or agricultural produce. Then rice, loading, unloading, packing, storage. Then warehousing of cereals, pulses, minor forest produce, artificial insemination of livestock. Apart from these 4, all other activities in relation to agriculture will be taxable. Then what about warehousing of fruits and vegetables and other agricultural produce? Warehousing of fruits, vegetables and sugar cane, etc. and all. Where is it covered? It's already covered under the first point. So therefore it's already covered in 1 above. Okay. Suppose if it is not agricultural produce only, separately we need to check. Then banking and other financial services. In this, first we need to see, so transaction in money, if it is neither, transaction in money we discussed now, neither goods nor services. But when transaction in money will become service, transaction in money for a separate consideration, then it will be treated as service. If that consideration is represented by way of interest or discount, it is exempted. That's what we discussed. Interest or discount on loans, advances, deposits is exempted. Whereas any other consideration received by the bank. What is other consideration received by the bank? Commission, demand draft charges, NEFT RTGS charges, minimum balance non-maintenance charges, debit card, credit card charges, like that, a number of charges they collect now. All those charges are taxable, including interest involved in credit cards. Including interest in case of credit card is also taxable under FCM. Then next, forex transactions. Forex transactions, sorry, second point you see. So first point you understood, what is that? Interest on loans, advances, deposits is exempted. That's what you should remember. What is exempted, you remember, balancing figure is taxable. So your focus should be on what is exempted. And then second exemption is under PM JDY scheme, Pradhana Mantri Jan Dhan Yojana, there are a lot of savings bank accounts which are open. These accounts are basically, like for nil balance accounts for poor people, mainly to create a banking revolution in India. So this basic savings deposit account holders under Pradhana Mantri Jan Dhan Yojana, nil balance accounts. To them, if bank provides any service, that service will be exempted. You understood? So to whom, sir? To basic saving deposit account holders under PM JDY scheme, any services provided to them is exempted. What if services are provided to other savings account holders? Taxable. And what if it is provided to current account holders? Taxable. Then foreign exchange transactions. So foreign exchange transaction means money changing, that is converting from one foreign currency to another foreign currency. If it is between banks, between forex dealers, or between banks and forex dealers, it is exempted. So forex transaction between whom? One bank to another bank, one forex dealer to another forex dealer, bank or forex dealer, okay, to another bank or forex dealer, between them it will be exempted. Then when, sir, it will be taxable? Only when they provide services to the customer, then only it will be taxable. Then fourth point you see, services by an acquiring bank. So to any person in relation to settlement of an amount up to 2000 rupees in a single transaction transacted through credit card, debit card, charge card or any other payment card service. So whenever you are making card payment, full amount will not be credited to the vendor. I told you this. So there will be something called as processing fees. That processing fees will always be there. However, in case of UPI transaction up to 2000 rupees, that processing fee will be received from the government. So that will be treated as subsidy from central government. That is for UPI. But here I am talking about normal card transaction, processing fee will be there. But if the transaction amount is for 2000 rupees, on that processing fee will be there. Even if the transaction is 2000, processing fee will be there. But on that processing fee, GST is not there. It is exempted. Got it? So what you should remember, GST on processing fees is exempted if transaction amount does not exceed 2000. So GST on processing fees for a transaction up to 2000 is exempted. Then next one you see, this already we discussed. What is that? Business facilitator, business correspondent, agent of business facilitator, agent of business correspondent, earning commission from rural area branch is exempted. This discussion we have made. Now look into the sixth point. So there is a intermediary of financial services who is located in a multi-service SCZ in India. In India, there is only one multi-service SCZ, that is GIFT City, Gujarat International FinTech City. So this multi-service SCZ, lot of financial services, insurance, banking, these people will be there. So basically they provide services to the customers outside India, to their customers outside India. Example, PayPal, like that you would have heard of one payment intermediary. Like how we have Paytm, PhonePe, like that in foreign countries, they are having PayPal. This PayPal incorporation has set up this in multi-service SCZ, their back-end operations, because the cost of banking is high in foreign countries, because banking employees will expect a high amount, because basically they are coming under the white collar employees, so they expect a high amount. But in India, bank employees will not come under white collar, they are still treated as blue collar only. Blue collar means less than white collar, okay. And So these blue collar employees, so they will be extracted a lot, in the sense like morning to night, but there and all they will not work like that. If they work like that, they expect crores and crores as salaries. So due to that reason, they have shifted their back-end operations to India, where in this multi-service SEZ. So PayPal is providing services to whom? To person outside India, to their customers outside India. Won't it become export of services, sir? In order to become export of service, I told you 5 conditions should be satisfied. Supplier should be in India, correct? Yes. PayPal is in India. Recipient should be outside India. Yes, their customers are outside India. And place of supply should be outside India. But in case of banking services, under section 13, the place of supply is location of supplier. Due to that reason, we will not have place of supply outside India. Where is the supplier located? India. So it will not become export of service, but it brings in some foreign exchange to India. Due to that reason, they have given the exemption. Now you remember what is the exemption. There is a financial service intermediary in India, where in multi-service SEZ, to whom they are providing services? To their customers outside India, and they are getting consideration in foreign exchange. So they are exempted from payment of GST. Got it? Come again, what is the exemption? Intermediary in multi-service SEZ in India, providing services to customers outside India against consideration in foreign exchange. That service is exempted. And remember, it will not become export of service. Even though it is not export of service, separately it is given as exemption. So these are the various exemptions for banking sector. So basically 6 points we have. One is interest on loans, advances, deposits. Next, that basic saving deposit account holders, and then foreign exchange transaction between banks and forex dealers. Then next we have seen what is that? Processing fees, 2000 rupees, GST exempted on processing fees. Then we saw business facilitator, business correspondent, agent or business facilitator, correspondent in rural area. Then this intermediary, financial services. Okay. Then healthcare services. In case of healthcare, services, we have only 2 exemptions. Only 2 exemptions we have now. Number 1, healthcare services provided to a clinical establishment by an authorized medical practitioner or paramedics, including ambulance services, is exempted. Healthcare services provided where? Clinical establishment. By whom? Authorized medical practitioner or paramedics, including ambulance services. We need to understand the meaning of each and every phrase. Healthcare services means what? Pre-treatment. Pre-treatment means diagnosis. What and all will come in diagnostics? X-ray, scanning, blood test will come under diagnosis. Then treatment, surgery or operation. Then post-treatment. Post-treatment means what? Care. So that is the patient, till the time he is discharged, the patient will be kept in observation. That is care. For what? For any disease, illness, injury, pregnancy, including transportation of patient in an ambulance. So it can be for any disease, illness, injury or pregnancy, includes ambulance service. So here also ambulance service is there, separately also ambulance service is there. What is the difference between this ambulance and this ambulance? This ambulance is part of healthcare service. The hospital providing the treatment is providing the ambulance service, that is exempted. And separately also, hospital not providing ambulance service, but separately they provided ambulance, not provided treatment, but separately they provide ambulance service, that is also exempted. For example, say a person has got a heart attack. He has been taken to Apollo Hospital in Apollo Hospital ambulance, and that ambulance collected some 10,000 rupees. And Apollo Hospital, so the moment it is like the person is taken to Apollo Hospital, he gained the conscious and he is asking where are you taking? So Apollo Hospital, no. Apollo Hospital, no, anyone who goes to Apollo Hospital will not return. So it's like a bad omen. So therefore you take me to some other hospital. So Kaveri Hospital, fine. So that person is taken to Kaveri Hospital, and Kaveri Hospital has performed some bypass surgery or angio like that, and the patient is dropped back to his home. Now there is 30,000 rupees ambulance service cost. 3 ambulance services. One is from his house to Apollo Hospital. Is Apollo Hospital providing treatment? No, but it is exempted. Why? Even though not part of healthcare service, it is exempted. Now second ambulance service from Apollo Hospital to Kaveri Hospital, Kaveri Hospital to patient's home. That ambulance service is part of healthcare service because they are providing the treatment to him. So that is also exempted. So transportation of a patient in an ambulance, whether part of healthcare or not part of healthcare, it will be coming under exempted. But transportation of passengers in ambulance will be taxable. Say one ambulance is going and anyhow ambulance is empty. So therefore, like they drop the patient and it is returning. While returning, you stop the ambulance and you got into it. And that ambulance fellow also, for the sake of some 500 rupees, he provided you the transportation service. Whether that will be taxable or exempted? Taxable. Because it is not transportation of patient due to that reason. Now in exam they will give transportation of deceased, that you should not write as exempted, that you should write as not a supply. Deceased means dead body. So therefore funeral, burial, crematorium, there it will come. So therefore it is not a supply. Then next, continue, but does not include cosmetic, plastic surgery and hair transplantation. These three will not come under healthcare services. This is too much healthcare. That will be related to beautification of a person, that will not come under healthcare services. So see, healthcare means that is to save the life of a person, but this and all will not come under saving the life of a person. Why should we bother here? So if the hair is gone, will I die? No, I am alive only now. Then why should I be bothered? Be happy, because great people like Johnny Sins and all are also don't have hair. So why should we bother? He is a carpenter, he is a painter, he is a doctor, he is a police. So that much he has achieved. So why should we bother about that? See this. And cosmetic surgery, plastic surgery, hair transplantation will not come under healthcare services. Don't search, please. Please. Say this. Then, and other than for restoring body parts, sir, cosmetic surgery, plastic surgery, hair transplantation will not come under healthcare. But if it is to restore body parts affected due to congenital defects, congenital defects means by birth itself. Example, cleft lip. Cleft lip means broken lip. Usually some babies, because of the nutrition deficiency, what will happen? So this lip and all will be broken. Broken lip will be there. And as the baby grows, so what they do a small cosmetic surgery and they connect the lip, so that as the baby grows, it will become normal. That is known as cleft lip. So this cleft lip is a congenital defect. By birth itself the defect is there. So to rectify that, they did a cosmetic surgery. So this will be coming under healthcare service. Generally cosmetic, plastic, hair transplantation is not healthcare. But if it is to restore the body part due to congenital defect, developmental abnormality, some people will not have balanced growth from the left and right side of their hand or leg, etc. Limbs will not be growing properly, because of which their walking will not be proper. So because our limbs in the leg should be proper. So this is a bone surgery they need to do. For doing this bone surgery, what they do, a plastic surgery they do, and they do the implant, so that their walking style and all will become normal. So these implants, what they do, again it is to restore the body parts affected due to developmental abnormalities. Again that will also be coming under healthcare services. And injury or trauma, a person met with an accident, say fire accident or some other, maybe in one hole he would have been fallen. So then he will be going into trauma or injury. So then he will be provided with certain surgeries, cosmetic surgery, plastic surgery. So that will be again coming under healthcare services. So tell me, what is the meaning of healthcare services? Pre-treatment, that is diagnosis, treatment, care for what? Any illness, disease, injury or pregnancy. and it includes ambulance service, but it does not include cosmetic, plastic, hair transplantation. But when these three also will come under healthcare, if it is carried out to restore anatomy of body parts affected due to congenital defects, developmental abnormalities, injury or trauma. Then next one, sir, in which system of medicine, sir? It can be any recognized system of medicine. It can be allopathy, homeopathy, naturopathy, siddha, unani, ayurvedic. It can be in any recognized system of medicine. But suppose in the question if you see not a recognized system of medicine, example pranic healing. Pranic healing like that it is there, not a recognized system of medicine it is. So it is like people will be surrounded with good pranas and bad pranas, good energy and bad energy. So this pranic healer will catch the bad energy and will destroy that energy. So you will not get any disease etc. and all. Is it believable? So therefore it is not a recognized system of medicine. See, lot of people are there like this, and these people and all, they will speak something which we will not understand in our language, and we will all believe in them. Okay, so lot of people are there. Some people will say that, you know, I will meditate and you will be getting the knowledge in the exam hall so that you will be able to write the exam properly like that and all. Some people will tell. All these are not believable. For example, Isha Yoga, one person is there. So this person, you know, he will speak lot of things about spirituality. Yesterday he was admitted in Apollo hospital. Through spiritual knowledge he can heal, na? Correct or not? Why he is admitted in the hospital under brain surgery? Brain surgery. For him itself, brain surgery. Okay. Are you are a spiritual guru. You saw the God. He will tell, I saw the God and all. 1 minute it will take. God, brain surgery should not be there. My brain should be proper. Like that if he has, God will give na. And he collect lakhs and lakhs of rupees for the purpose of conducting spiritual workshop. He himself did not see God, and he will be coming to us and telling. Like that lot of idiots are there. Okay. So what to speak? Some idiots will follow those idiots and spoil CA course also. So this healthcare services, listen, nothing intentional. I didn't speak about any person. Generally I said, you don't add anything to it, okay? Already my life is made miserable. Again this, no, I didn't tell about anyone, just in fraction it came, okay? Say this. So in any system of medicine, but pranic healing, Reiki healing is not a system of medicine which is recognized. And this healthcare services provided in a clinical establishment, so clinical establishment means what? Any place where healthcare service is provided is known as clinical establishment by an authorized medical practitioner. Authorized medical practitioner, so any person with minimum MBBS degree and registered with the medical council is called as an authorized medical practitioner. Paramedics means those who assist the doctors, basically nurse, lab technician, physiotherapist, compounders who are working in the hospitals, they will come under paramedics, and including ambulance service. Now any amount collected towards healthcare service is exempted, sir? Yes. Room charges or medicine charges or surgery, everything is exempted. However, for room charges there is one amendment which says that if it is ICU charges, any ICU charges, that is exempted, whatever may be the amount. But if it is normal bed charges, that is after operation or surgery, the patient will be kept in the room na. So that room charges, if it does not exceed 5,000 rupees per day, then it will be exempted. If it exceeds 5,000 rupees per day, entirely it will be taxable. Remember, in entire exemptions chapter, there are monetary limits given in different places. If you cross that monetary limit, entirely it will be taxable everywhere. Okay, so 5,000 you cross, entirely taxable. Not that 5,000 is exempted, the difference amount is taxable, entirely it is taxable. Exception only one place, there is incubating services. So one place we will come across incubating services like that. There alone if it crosses the limit, the extra amount only will be taxable. You got it? So every other place, if it crosses the monetary limit, fully it will be taxable. Now, look into the second exemption. Previously we had two exemptions, that is now omitted. Cord blood banks, like that one exemption was there, that is now omitted, which means it will be taxable. And service of common biomedical waste treatment operators also, previously it was exempted, now it is taxable. I did not discuss this because if I discuss this in exam, you will think it is exempted. No, I didn't discuss. You don't know what it is. Cord blood bank means you know anything? So taxable. Biomedical waste treatment operator means you know anything? So taxable. You understood? So you read the question, you don't know what it is. It is like some alien language, taxable. You understood? Then healthcare service in relation to animals or birds. What is this? Veterinary clinics. First one is in relation to human beings. Second one is in relation to animals or birds. Veterinary clinics are there na? Vets. They will be collecting some amount for providing the treatment to animals or birds. That amount collected by them is also exempted. Now, look into some additional points related to this. Services provided by consulting doctors to hospitals is also exempted. What is this consulting doctors to hospitals means? That is, there is a doctor who is not an employee of a hospital. He will be working as a freelancer. He will provide services to the hospital and hospital will provide the services to the patient. So generally pediatricians, gynecologists, etc. and all are freelancers, even ENT doctors also. Now we go for a consultation. We pay 500 rupees to the hospital and hospital will pay some 300 rupees to the doctor. So this consulting fees 500 rupees collected by the hospital is also exempted, and the hospital paying 300 rupees to the doctor is also exempted. That is this. Services provided by consulting doctor to hospital is exempted. Why sir? Separately it should be given. See, hospital providing service to patient is covered here by clinical establishment. But authorized medical practitioner is not providing service to patient, is providing service to the hospital. So that is also exempted. That's why they gave a circular. Then next, in case of infertility, there is a treatment called as IVF and ART, in vitro fertilization and assistive reproduction technology. So this is mainly for the purpose of people who are not blessed with kids. So they will undergo this treatment and therefore they will be blessed with kids. This is known as infertility treatment. Is this infertility treatment coming under healthcare services? Actually, infertility is abnormality. Generally by default, so women means they should be able to give birth. But if they are not able to give birth or the male is not able to give birth, which means some infertility issues. So to cure that infertility issues, only this is provided, means it comes under healthcare services. That's what the circular is telling. The abnormality, disease or ailment of infertility is treated through ART procedures such as IVF. It is clarified that service by way of IVF are also covered under the definition of healthcare services. Then healthcare services in any recognized system of medicine, I told you that, allopathy, naturopathy, Siddha, Unani, homeopathy. Then service of rehab professionals. Basically these rehab professionals are not doctors or not authorized medical practitioners, but they are psychology. They would have studied MSc psychology and they will register as psychology experts. They provide various care and counseling to the people. They will be working in medical establishments. So by way of providing counseling to the people who are undergoing the surgery, or they will be working in educational institutions by way of providing them counseling if they are in depression, because kids and all nowadays, they will be easily undergoing depression if they lose 2 marks and all, okay. Because really here, my son, no. So he told me one day, he was sitting and crying, and I asked him, why are you crying? He showed me that he got answer sheets for final exams. So he got answer sheet, and in maths he got 98 and his friend got 99. He was sitting and crying. I said, idiot, you come, my students, I will show you. 40. If they get 40 plus itself, as if no one has achieved, they will be feeling happy. 98 you are worrying, you know. So 40 pass, that's it. So don't worry about this and all. And so kid here, third standard is studying. For that and all he is feeling sad. How many things are there in future? He need to see. And therefore, so counseling is required nowadays, because just like that they are going into depression. So therefore, these psychology professionals will be working in educational institutions and providing the proper counseling. So the money earned by them is exempted. So if they work in medical establishment, that can be any medical establishment, let it be a government medical establishment or a private medical establishment, it is exempted. If they work in educational institutions, again, let it be government or private, it is exempted. But remember, if they are working in rehab centers, basically rehab centers will provide so counseling for the patients who are drug addicts or some other mental disorders. If their mental health is not good, so the rehab center will provide the service. But if it is a government or trust operated rehab center, then only it will be exempted. If it is a private rehab center, then it will be taxable. Then look into the other points. There is a hospital which is providing food to inpatients. What is your answer? Exempted, because inpatients means who are admitted in the hospital. So it's part of the healthcare service, therefore it is exempted. Suppose if the hospital is providing food to the outpatients, visitors and staff, they are not admitted there, so that will be taxable. Suppose if hospital gives their premises on rent to an outdoor caterer, is renting of hospital coming under healthcare service? No, therefore it will be taxable. Now the outdoor caterer supplying food to the outpatients, that is also taxable. What if outdoor caterer provide food to the inpatient? Exempted. See the note. Outdoor caterer usually not allowed to supply food to inpatients in hospital. If it is sold to inpatients, it is treated as authorized by hospital and it will come under exempted. Then next, hospital is giving their premises on rent for sale of medicines. Whether that renting will be taxable? Yes. Suppose if hospital directly sells medicines to the inpatients, exempted. If they sell medicines to the outpatients, that will be taxable. Who are inpatients, who are outpatients? Inpatients means those who are admitted in the hospital. Outpatients means those who come for consulting. Okay, means medical shop should maintain two separate invoices for inpatient, outpatient. That invoice for inpatient will be exempted. The medicine may be taxable. The medicine may be taxable, but the moment when it is sold to inpatient, it will come under exemption. If it is sold to outpatient, it will be taxable. That's why in hospitals and all, file number they will ask. So the moment you go for a medicine, they will ask, so you tell me the file number. If you say I don't know the file number, then they will charge GST on that. The medicine bill will increase. If you tell the file number means what? That person would have been admitted there. While admitting there, one admission number will be given. If you tell that admission number, automatically the medicine value will come down, because they will not be charging any GST on that medicine. Got it? Then entry tickets. Following entry tickets are exempted. So few entry tickets are exempted irrespective of the ticket price, and few entry tickets are exempted if the ticket price does not exceed 500. First we will see irrespective of ticket price. What are they? Remember 6 points. Remember 6 points. 3 related to animals. 3 related to animals. What are they? Wildlife sanctuary, tiger reserve, zoo. These are related to animals. Tiger reserve, wildlife sanctuary and a zoo. Whatever may be the amount that is collected is exempted. Then 3 places. Museum, national park and protected monuments. Okay, museum, national park or protected monuments. These 3 places also, whatever may be the ticket price, that is exempted. These 2 are events which was already over. So I don't think so they will ask a question on this. So because these events were already conducted events, on that they will not ask. So therefore only these 6 you remember. What are the first 3? Wildlife sanctuary, tiger reserve or a zoo, fully exempted. And next 3, museum, national park, protected monuments. Protected monuments example, Taj Mahal, Red Fort, Qutub Minar, Char Minar. Okay, so these are some, even some old temples, those are all coming under protected monuments. Then suppose if some tickets does not exceed 500, then it will be exempted. So total 9 tickets we have. In that 9, you remember 4 plus 4 plus 1, first 4 related to performance. Related to performance. Performance means what? Dance, next music, then concert or theatrical performance. Theatrical performance means drama, any stage show, or even stand-up comedy will also be coming under theatrical performance. So 4 performances. What are the 4 performances? Dance, music, concert and theatrical performance. Both concert and musical performance is related to music. Concert is by a individual. Musical performance is by a troupe or a band which is performing. Next, 4 events. What are those 4 events? Circus, award function, then pageant. Pageant means beauty show. Then sporting event. So sporting events. These 4 events, circus, award function, pageant and sporting events. Okay. Sporting events, for example, you take this IPL match. IPL match, ticket price less than 500. Impossible. Impossible. 5,000 rupees itself people are ready to pay, but they are not getting tickets. Okay. So it is not. So queue and all it was there. No, even I also searched. When I went, the queue was somewhere like 3,45,000. Okay. 3,45,000 was the queue number. Definitely I will not get. Stadium itself don't have that much of capacity. So therefore, I came out and I waited for around some half an hour. I waited, log in and waited, nothing, no luck. So therefore, very difficult to get the tickets and all. And this, so IPL matches, people are ready to spend any amount that will not be less than or equals to 500 and all, more than 500, that will be taxable. But if the ticket is does not exceeding 500, then it will be coming under exemption. Then one place, what is that? Planetarium. So what are the 9 entry tickets here? First 4 related to performance, dance, music, theatrical, concert. Next 4 events, circus, award function, pageant, sporting event, and one place, planetarium. For these cases, if the ticket price does not exceed, that is less than or equals to 500, exempted. What if it exceeds 500? Entirely taxable. And for example, there is entry to a theme park, and this entry to theme park, ticket price is 300. Taxable or exempted? Why? Theme park is not in the list. Nowhere we have. So theme park, cinema theaters, etc. and all not in the list. Means even if it does not exceed 500 also it will be taxable. Then next, insurance services following are exempted. Service of life insurance business. So provided by way of annuity under National Pension System Trust. So you remember NPS. So if you see in the question, NPS, insurance premium collected will be exempted. Got it? NPS trust, insurance premium collected will be exempted. Then next, group life insurance. Sir, what is group life insurance means? So group will form an insurance fund and members of that group will contribute some money towards that insurance fund, and if anything happens to any member of this group, out of that insurance fund they will pay some compensation to the family of that member. So this group insurance concept is there in many professions. Even for CAs also, practicing chartered accountants, there is something called as ICAI Benevolent Fund. So in this ICAI Benevolent Fund, so practicing chartered accountants will contribute towards that fund, and if any practicing CA expires, so and if they are economically poor, so from this benevolent fund, ICA will pay some 5 lakhs or 10 lakhs to that family members of that practicing chartered accountant. So this is called as group insurance fund basically. So now not all group insurance funds are exempted, only specified group insurance funds are exempted, that is Army, Navy, Air Force, Coast Guard and Central Armed Police Forces, only 5. What are the 5 group insurance funds here? Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces. Any other group insurance fund will become taxable. So what is the first point you need to remember? NPS trust. Second point, these 5 group insurance funds. Third, there is a insurance company which is providing general insurance services under government notified schemes. The premium collected will be exempted. There is a insurance company. What service they are providing? General insurance service. But that scheme, insurance scheme is notified by government. Now they are collecting some premium now. That premium will be exempted. Sir, what are those government notified schemes? Definitely, government will notify schemes for whom? Their vote bank. What is the vote bank of government? Farmers, agriculture and farmers, below poverty line, women and unemployed. So any scheme. So therefore you see the scheme in the question. Definitely it will be connected to these people. So therefore whatever premium that is collected will be exempted. Then same way life insurance. There is a company, insurance company which is providing life insurance services under government schemes. How do we know it's a government scheme? Usually it ends with the word Yojana. Pradhana Mantri Suraksha Bima Yojana, Pradhana Mantri Vayavandhan Yojana. So like that Yojana like that if you see, definitely private companies and all will keep that. So it's a government notified scheme. So the premium collected will be exempted. Also one more exemption is there for life insurance, micro life insurance. Micro life insurance means a small premiums will be collected and this micro life insurance sum assured does not exceed 2 lakhs. Maximum sum assured 2 lakhs. So both things, it should be a micro life insurance and the maximum sum assured should be 2 lakhs. Then only the premium is exempted. What if it is a micro life insurance and the sum assured is 2,50,000? Taxable, taxable because the sum assured is more than 2 lakhs. So how much should be the maximum sum assured? 2 lakhs. Then insurance services provided to government. What is this? We are providing insurance services to government. Government also will take insurance now on the property, on the life of their employees. So whatever insurance company collecting premium from the government, that premium collected by them is exempted. That is this. So what are the 5 points? First one, NPS trust. Next, group insurance. What is that? Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces. Next two related to government notified schemes. General insurance, government notified scheme. Life insurance, government notified scheme. Plus micro life insurance, sum assured does not exceed 2 lakhs. Their insurance service provided to government. Then the 7th point long back we have seen. So business facilitator or business correspondent. Insurance company will appoint agents called as business facilitators or business correspondents in rural area. The commission earned by them will be exempted. Now looking into 6th point, what is that? Whatever exempted services in insurance we have seen, its reinsurance is also exempted. What is reinsurance means? One insurance company will take insurance with another insurance company to mitigate their loss or risk. So for example, one insurance company has given insurance to government for 400 crores. Means 400 crores worth of asset of government, the insurance company has given the protection for which they get a premium from the government. That premium collected by insurance company will be exempted. 5th point, it is exempted. Now 400 crores means if anything happens, they have to pay 400 crores. So in order to reduce the risk, this insurance company 1 will take insurance with insurance company 2 and will pay premium. As the main insurance is exempted, its reinsurance is also exempted. That is this, reinsurance of any exempted insurance is also exempted. So these are the 7 points for insurance services. Then next, pension services you see. Basically, all pension services will be taxable. Sir, what happens in pension service, sir? Simple. Monthly we will contribute some amount and it will be accumulated to a fund. And from that fund, monthly we will be getting some amount at the time of our retirement called as passive income. Everyone should do this because you know why many people today when they become old they suffer. It's because during their active life they did not save. Had they saved, today they would have enjoyed. So saving is a habit which we need to develop, and the better saving alternative is pension funds. There are a lot of pension funds, private pension fund, government pension fund, lot of pension funds are there. How it works is that, for example, I am contributing monthly 10,000 rupees into the pension fund, and I will contribute it for say some 25 years. So 25 years, 10,000, 10,000, 10,000 monthly only I am spending. Now it will become one big amount during my 55 years or 60 years. Thereafter, monthly I will be paid 1 lakh out of that fund, because this fund will go to somewhere like 5 crores or 6 crores easily, because I am putting, compounding will happen now, compounding future value. So when it gets compounded, it will go to some 5 crores. And 5 crores at that time, if you take 8% rate of interest also, 5 crores into 8%, 40 lakhs. 40 lakhs per month, I will be getting somewhere like 3 lakhs. Considering the inflation, when I am like 50 years or 55 years, this 4 lakhs, 5 lakhs will be equal to today 1.5 lakh. You understood? So therefore, okay, I can take care of my needs at that time. So that is the background behind this pension fund. And government has removed the pension. So previously they used to give pension to the government employees. Now they removed. But they created, central government created one pension scheme called as Atal Pension Yojana. Now you spend, you contribute money towards the pension fund. It will get accumulated to one big money. Thereafter you will get every month. So it is like SIP plus SWP, systematic investment plan plus systematic withdrawal plan. Okay. So in this pension fund, not all pension funds are exempted. Only 2 pension funds exempted. So Atal Pension Yojana, that is central government pension fund, like that any state government pension fund, they collect monthly some amount from us, na, that is exempted. So contribution under Atal Pension Yojana or any state government operated pension fund is exempted. Then services by specified organizations. What are those specified organizations? NPS Trust already we discussed. In this place it is there, NPS Trust. Apart from that, ESIC. ESIC refers to Employee State Insurance Corporation. They will be getting money from the factories for providing the insurance to their workers. So that ESIC getting money is exempted. So just remember the organization. The moment you see that organization name in the question, the money collected by them is exempted. Then EPFO, Employee Provident Fund Organization. So usually employee will contribute the PF na. So that is collected by this organization. That money collected is exempted. Then NCCCD, National Center for Cold Chain Development. They will be providing assistance for starting a cold chain. Cold chain means a place where we keep the agricultural produce is known as cold chain. So that money collected by NCCCD is exempted. Then Foreign Diplomatic Mission located in India. Who is called as Foreign Diplomatic Mission in India? Already I told you. Specified agencies of UN, that is UNESCO, UNICEF, WHO, or embassy or consulate. So their outward supply will be exempted. So lot of embassies are there now in India. Russian embassy, US embassy, US consulate. So these people providing any service is exempted. Then CMPFO, Coal Mine Provident Fund Organization. Like how EPFO is for normal employee provident fund, like that workers who are working in coal mines, there is a Coal Mine Provident Fund Organization. So these specified organizations, if they get any amount, that amount will be exempted. So what are those specified organizations? NPS, EPFO, remember parallelly CMPFO, then ESIC. Okay. So NPS, EPFO, CMPFO, ESIC, NCCCD, and then Foreign Diplomatic Mission located in India. Money collected by SEBI. Is SEBI in the list? So IRDA in the list. So RBI in the list. So understood. Then next, charitable and religious service. In this, the first one, services by an entity registered under section 12AA of Income Tax Act by way of specified charitable activities. What are these specified charitable activities? Public health, advancement of religion, spirituality or yoga. So public health anyhow exempted pa. Under healthcare service exempted. So what is that exemption we are discussing? There is a charitable trust. That trust is registered under 12AA or 12AB of the Income Tax Act. So there is a charitable trust. That charitable trust providing charitable activities are exempted. What are the charitable activities? 4 charitable activities we have. Number 1, public health. But anyhow public health is exempted. So even if it is provided by a charitable trust also, it will be exempted. Advancement of religion, spirituality or yoga. So all these Babas and Swamijis etc. so will be covered under this. Okay. In India lot of trusts are there, and under that advancement of religion, spirituality or yoga. I am not against study God and all. You don't put. So because I am afraid of YouTube only. You will know me. So but in YouTube don't comment. So Jai Shri Ram like that. So I am. So it's like I believe in God. I believe in God. I am not anything against God. But I don't believe in people who collect money in the name of God. So that is where there is a difference. So you believe in God. God is there. Otherwise how we are there? So God will be definitely there. There is a power, and that power is guiding us. That power is protecting us. That is there. But people will say, you do this, I will show you God. You do that, you spend this much money. This is too much here. Okay. So you don't believe in people, and these people are not required to pay any GST. Whatever money that they earn, exempted. Example, we have one great Paramatma Swami Nityananda. So this guy, whatever money he earns, exempted here, fully exempted. Under which name, sir? Spirituality. Under the name of spirituality. Then even Baba Ramdev, yoga, under the name of yoga, exempted. Then educational programs to orphans, physically or mentally traumatized persons, or prisoners, or persons over 65 years residing in rural area. Orphans, you can understand. Physically, mentally traumatized persons, okay. Prisoners, education program, yes. Juvenile homes, master, okay. So you didn't see Master movie? You would have seen at juvenile homes. So some teachers will be sent there to provide the teaching to those prisoners. So that amount collected will be exempted. And then persons over 65 years residing in rural area, not urban area, rural area. So education and all will not be able to be provided to them. So definitely basic education only. Don't think about CA course. So CA course, DT, by the time portion get over, they will die here. 65 years already. So why they created this? Because in Kerala, what happened? They wanted to maintain a good literacy rate. So not that Kerala is having good literacy, Tamil Nadu is not having good literacy. Whatever literacy Kerala is having, Tamil Nadu is also having the same literacy, other states also having same literacy. But you know what is the barometer for literacy? If you are able to sign, you are literate. If you are able to write your name, you are literate. You understood? For that purpose, what Kerala did, they conducted lot of educational programs for these people over 65 years residing in rural area. The job is to teach them how to write their name. So they became literate. Yes, they became literate. And that way, Kerala has achieved a highest literacy rate. But of course, hook or crook, they achieved. And we should be good about it. That also our government did not do. Okay. So therefore, this is 65 years residing in rural area come under that category. Then environmental preservation. Environmental preservation like wildlife protection, etc. So tell me, what are the 4 charitable activities? Public health, advancement of religion, spirituality, yoga, educational program to orphans, mentally, physically traumatized persons, prisoners and persons over 65 years residing in rural area, and wildlife protection, that is environmental protection. Apart from that, any other charitable activity not covered under first exemption. Let's see the second exemption. There is a government or a charitable trust which is running a old age home, either government or a trust running a old age home, and they are providing accommodation to the old people aged 60 years or more for a consideration of 25,000 rupees per month, not per annum, per month, per member, then the amount collected is exempted. So 25,000. What if it exceeds 25,000? Entirely it will be taxable. Then third point, you see, services by a person by way of conduct of religious ceremony. Who will conduct religious ceremony? Priest, purohit, etc. They will be conducting money. Example, one marriage function you take. So in Hindu marriage, so definitely one purohit is required for the marriage, and they will be charging some money, some 10,000 or 20,000 or 30,000 they will be charging. Whatever money that they are getting will be exempted. They are not required to pay any GST. So by way of performing various religious ceremony, marriage is one religious activity. Apart from that, there are many religious ceremonies. Whatever money that is collected by them is exempted. Then services by special organization for religious pilgrimage. There are only two religious pilgrimages, Kailash Manas Sarovar Yatra and Hajj Yatra. These are two religious pilgrimages for the time being. And if there is a special organization, that should be notified by government. Not all organizations will come. There should be a special organization, government notified. If they provide religious pilgrimage and they collect any amount towards that, then it will be exempted. Okay. Example, so in Chennai only, I have seen opposite to ICI, one Rosy Towers building is there. In that building, somewhere on the 4th floor, Hajj committee is there. This Hajj committee is a special organization. What they provide is that for poor people, Muslims who want to go to Hajj Yatra, they will be collecting some nominal amount and they will be providing the religious pilgrimage. This money which is collected by that organization will be exempted. What if a normal person does that? So that will be taxable. Then incubator and incubatee services, say this. We need to first understand three terms. What is incubate, who is incubator, and who is incubatee. Incubate means a place where research is carried out. Place, the laboratory. The laboratory or the place where research is carried out is known as incubate. Incubator is the owner of that laboratory. Incubatee is the person who works in that laboratory and provides the services. Like a scientist will be coming under incubatee. Example, Wuhan is a laboratory where in China they developed COVID, and Chinese government, which is the owner of that laboratory, is incubator. The scientist who is working in that laboratory developing this virus is known as incubatee. Understood pa? Incubate is laboratory. Incubator, incubate is laboratory. Incubator, owner. Incubatee is the scientist who is providing services. Now, incubator services is fully exempted. Whatever may be the amount collected by the incubator, that will be exempted. And he should be approved by Government of India, then only incubator services will be fully exempted. But incubatee services is exempted up to 50 lakhs. Sir, suppose if they cross 50 lakhs, this is the only place I told you there is an exception. If it crosses 50 lakhs, the excess amount is only taxable. Generally, every other place, if it crosses the limit, entirely taxable na. But in this place, if it exceeds, the excess amount is taxable. And two conditions are there. Please see those two conditions. Previous year, their aggregate turnover should not exceed 50 lakhs. And this exemption is for a period of 3 years only from the date of signing the contract. Look into one illustration below. So, A Limited is an incubatee. First year, second year and third year, they have got gross receipts of 60 lakhs, 40 lakhs and 70 lakhs. First year, will they get exemption? Yes. Previous year 0, so it does not exceed 50 lakhs. So first year they will get exemption. But how much will be exemption? 50 lakhs. So what is the remaining amount? 10 lakhs. That 10 lakhs only will be taxable. Again second year 40 lakhs. Will they get any exemption? No. Why they will not get exemption? Because previous year it exceeds 50 lakhs. So they will not get exemption. So full 40 lakhs will be taxable. Again third year will they get exemption? Yes. Why? For third year what is the previous year? Second year. And in second year what is the amount? 40 lakhs. it does not exceed 50 lakhs. So third year they will get the exemption. So taxable value will be 20 lakhs. Fourth year will they get exemption? No. Why? The exemption is only for a period of 3 years. Then look into the next service, education services. So in these education services, first exemption that you need to remember is any service provided by an educational institution to its students, faculty and staff is exempted. Any service provided by educational institution to whom? Students, faculty and staff. Sir, what is the meaning of an educational institution? There are three categories of education institution. Category 1 up to 12th standard or equivalent. Why equivalent? Some places 12th standard is not part of school, it is part of a college. That's why they said 12th standard or equivalent. So starting point can be any, preschool, pre-KG, anything. But the ending point is 12th standard, that is category 1 education institution. What is after 12th? Okay, say this. Any service provided by educational institution to its students, faculty and staff is exempted. In that education institution we have three categories of education institution. Category 1 is up to 12th standard or equivalent. So therefore starting point can be anywhere, pre-KG, LKG etc. but up to 12th standard, that is category 1 education institution. And what is after category 1? After 12th standard, either it's a regular education or a professional education. So either towards qualification or towards professional education like undergraduation, post graduation or professional courses like doctor, engineering, CA etc. So that will be coming under category 2. Obtaining a qualification recognized by law. Then category 3 is skill based education, occasional education. So these three are called as educational institution, and any service provided by them to its students, faculty and staff is exempted. So what are the three category educational institutions? Up to 12th standard. Second one, qualification recognized by law. Third one, approved occasional education. What is an approved occasional education? Course offered by ITI or ITC. ITI refers to Industrial Training Institute, ITC Industrial Training Center. Usually we call them as polytechnic colleges, diploma colleges. So ITI or ITC affiliated to NCVT or SCVT. So NCVT is National Council for Vocational Training, it's a central board. SCVT is a State Council for Vocational Training, state board. And modular employable skill course under Ministry of Skill Development. These two are approved vocational education. So any service provided by them to its students, faculty and staff is exempted. Any service. It can be transportation service or it can be education service, because lot of money will be collected by the schools. Everything will be exempted. Then suppose if services are provided by an education institution by way of conduct of entrance examination. You understood the first point now? What is the first point? Any service provided by an education institution to its student, faculty and staff. Second exemption we are discussing, if the education institution is collecting an entrance exam fees, that entrance exam fees is not collected from the students. Why? They are not yet students. Only when they qualify entrance exam, they get a seat there, then only they will be called as students. Even then the entrance exam fee collected from them will be exempted. So services provided by an education institution by way of conduct of entrance examination against an entrance exam fee is exempted. Got it? Then third point, say this, these are services provided to education institutions. So far what we have seen is services provided by education institution. Now service provided to education institution. If it is transportation, security and housekeeping within the premises and catering service provided to category 1 education institution, then only it will be exempted. So this is category 1, category 2 and category 3. So just write there category 1, category 2 and category 3. So what are the 3 services only to category 1 institution is exempted? Transportation, catering, security and housekeeping, but that should be within the premises only to category 1. Category 1 means what? Up to 12th standard. For example, there is a college which is receiving the services of transportation from a bus operator. Whether that service is provided to college is taxable or exempted? Taxable, because that exemption is only for category 1. And catering services provided to a student event organized somewhere in an auditorium. So there is a school which is conducting a student event, say annual day function, in one auditorium. For that auditorium, they received catering services. Whether it will be taxable or exempted? Taxable. Why it will be taxable? No, it is exempted. For catering service, we don't have inside premises or outside premises. Always it will be exempted. That inside premises point is only for security and housekeeping. Now in that student event, if they received security services, whether it will be taxable? Yes, because it is not within the premises, it is outside the premises. For transportation and catering, don't see where they are receiving the service. It will always be exempted. But for security and housekeeping, it should be within the school premises, then only it will be exempted. Whereas all these 3 for both other categories, category 2 and 3 will be always taxable. Then admission to or conduct of examination. Admission to means what? Acting as a marketing agent, bringing the admission to the educational institution. You get some money from the educational institution, that is always exempted. Then conduct of examination, that is giving the place on rent or setting the question paper or evaluating the answer sheets. All these will come under conduct of examination. So these 2 services, all 3 categories it is exempted. What are the 2 services? Admission to the institution or conduct of examination to the institution. All 3, school or college or vocational education, that is exempted. Then supply of online educational journals and periodicals. To whom it is really required? Only to category 2. So category 1 and 3 not required na. Why kids will read periodicals and journals? And again, why vocational education they will read this? If they are able to read, they will not go for vocational education. So therefore, these 2 cases it will be taxable and only category 2 it is exempted. So tell me what are the exemptions? Again, please remember, it is not service provided by education institution. It is services provided to education institution. In 2 education institution, what are the exemptions? Come on. First 3 points. Transportation, catering, security and housekeeping within premises. Only to category 1 education institution exempted. Next point. Admission to or conduct of examination. All 3 category institutions exempted. Next. Online periodicals and journals. Only category 2 exempted. Then next point you see, amount paid to training providers under Deen Dayal Upadhyaya Gramina Kausalya Yojana for providing training in relation to vocational education courses certified by NCVT. Sir, what is this? Deen Dayal Upadhyaya Gramina Kausalya Yojana. See the next page. In rural area, there are lot of unemployed youth. To this unemployed youth, some volunteers who are registered under this scheme, government notified scheme, will go to the rural area and will provide them various skills. Based on these skills, the rural area youth may either become employed or will become self-employed by starting a small scale industry. Example, so if you teach a person how to make paper plates, paper cups and paper bags, so their life is settled. That do not require an educational qualification. That requires a little bit of art and missionary support. They need to know what type of missionary, how they need to make, etc. So now these volunteers will go to the rural area and provide them so little bit skills of how to make use of this machine, how to make these paper products, etc. Based on that, either they will go for employment in some industries or if they have sufficient money with them to buy the machinery, they can set up a small scale industry. And these volunteers will get some money for doing this training. That money received by these volunteers from Government of India will be exempted. You understood the exemption? There are some volunteers registered under DDUGKY scheme will go to the rural area and provide the training in skills for which they will be getting some money. That money received by them is exempted. Then next one, services provided with respect to training program for which greater than or equals to 75% of the total expenditure is borne by government. Example, NEET coaching. NEET coaching to below poverty line students. 80% expenditure borne by government, state government. 20% expenditure borne by the student. Now 1 lakh fees, 80,000 government paid, 20,000 student paid to the coaching center. Whether it will be taxable or exempted? Exempted. Why? How much of the training expenditure is borne by government? See, basically coaching centers and all will be taxable. Why coaching centers are taxable? Sir, because coaching centers will not come under educational institution. Is coaching center giving qualification? You can attend coaching in any big coaching center, but in the CA intermediate, so mark sheet, whose name will come? Coaching center name will come. Then ICA name will come. Means qualification is not given by the coaching center. So it is given by ICI. So if ICI collecting the fees, it is exempted. ICI also will be conducting classes. Oral coaching they will conduct and they will collect some fees. On that fees there is no GST, and even exam fees collected by ICI, no GST. Registration fees collected by ICI, no GST. Are you understanding? So, but a private coaching center collecting fees will be taxable. So, this NEET coaching is a entrance exam coaching. Who will provide? Private coaching center. But in that exam, the coaching fees, 75% or more is borne by the government. Why government will bear? So because they want to provide facility to the students who have studied in the government schools or corporation schools. Because in government schools or corporation schools, they cannot bring the NEET teachers to teach them NEET. For that reason, so they will sponsor some good students in the government schools. So they will be sponsoring some amount. So 80% sponsored by government, which is greater than or equals to 75%. So what is exempted here? That 80,000 is exempted, or entire 1 lakh is exempted? Entire 1 lakh is exempted. What if government has borne 70,000 and 30,000 is collected from the student? Then what is your answer? Entire 1 lakh will be taxable. Why it will be taxable? Because expenditure borne by the government is less than 75%. Understood this point? So just write down there below. State government of Tamil Nadu. State government of Tamil Nadu. Here you write down. State government of Tamil Nadu spent 80,000 per student. State government of Tamil Nadu spent 80,000 per student out of 1 lakh, fee, charged by a coaching center. Okay, full stop. Entire 1 lakh fee is exempted. Entire 1 lakh fee is exempted. Why entire 1 lakh fee is exempted? Because 80,000 means more than 75%. So due to that reason, the entire money is exempted. Then look into the next one. Under Skill Development Initiative Scheme. What is Skill Development Initiative Scheme? So there is a assessment body. So basically these assessment bodies are created by the government, for which they will be doing review of curriculum and suggest the changes or addition. So basically it's like Today there is a big gap between what these coaching centers, these academies or these skill based centers are training and what is the skill that is really required. Example, in polytechnic colleges today, they are teaching the students as to how to operate a lathe machine or extrusion machine. But those machines are not used. Today it is robotics, automated process. So therefore, we learn something. Today many engineers are not having jobs because of this reason only. They learn something, but they go to the industry, but they will not get the job. Why they will not get the job? They are not learning what is really required in the industry. You got it? So how to bridge this gap? Now make the industry to set the curriculum, so that they will know what is really required. That's why our CA course is so popular. And never the CA course will die, because every 5 years they will change the curriculum. In between these 5 years also, if there is any change also, they will change that. Every 6 months they are changing indirect tax na. So therefore, our curriculum gets updated so rapidly, so that the moment you study this and go in the job, so you will be having a relevant knowledge. Due to that reason, you will be able to you will be able to get the job and you will be successful. There are many BCom colleges still teaching central excise duty, value added tax and central sales tax for the BCom students. It is outdated, it is dead, but even that is being taught. Now think of, imagine a situation, this BCom graduate go for an interview, and in the interview they will ask, what is GSTR 3B? And he will say, out of syllabus sir, for a central excise, VAT, CST. You ask question from that, they will tell. What is the use of it? So that is a problem which the Indian education system is facing. For that reason, so they created a skill development initiative scheme, wherein members, that is people from the industry, will come into the assessment body, and this assessment body will review the curriculum and changes, any such changes, and that will be imparted to the students. So these assessment body will get some money from the government. That money received by them is exempted. So what you need to remember, under skill development initiative scheme, amount paid to assessment bodies is exempted. Then next one, any course offered by these three people, National Skill Development Corporation or Sector Skill Council or assessment agent or training partner authorized by NSDC or SSC, if they offer any skill course, that is exempted. We have various sector skill council. So these sector skill councils are developed by NSDC mainly for providing skill education to the students, like so this tally centers are there, lot of tally centers, then basic computer education, then this designing, so VFX, Maya, animation, like that. So these are all, then lot of things you would be seeing, Apollo education, like that one is there. So they will be providing lot of short term courses, computer courses, Java, .NET, Python, like that. The short term courses they will be providing, and that money collected by them is exempted. So what are they? Basically NSDC, National Skill Development Corporation, SSC, Sector Skill Council, assessment agent or training partner authorized by NSDC or SSC. So these are the various exemptions that we have with respect to education services. So this is the first point, any service provided by education institution to its students, faculty and staff. Second point that we have seen is, if they collect any entrance exam fees, that entrance exam fees is exempted. And then third point, service provided to educational institution. Then amount paid to training providers under Deen Dayal Upadhyaya Gramina Kaushal Yojana. Then next one, we have seen training program. Next page, training program greater than or equals to 75% of the expenditure is borne by government. Then this skill development initiative. Then any course offered by NSDC, SSC or this assessment agent or training partner. These are the 7 points we have in exemption. Now in the previous page, there is one circular, have a look into that. Generally, services provided to students is exempted, correct? Now if a person is buying a prospectus or application for which he pays some money, he is not at all a student yet. even that application fee or prospective fee is also exempted? Yes. And at the time when you come out of the college, you will pay some money for the transfer certificate or migration certificate. Whether that amount collected is also exempted? Yes. So not only students, amount collected by education institution from prospective students or ex-students, both are also exempted. Is it clear, pa? Student no doubt exempted. Prospective student means what? They are going to join here. Fees collected exempted. Or ex-student, already they studied here and they are leaving. At that time any amount collected is also exempted. Please quickly go through that. All services provided by an education institution to its students are exempted. Further, it is clarified that the amount or fee charged from prospective students for entrance or admission or for issuance of eligibility certificate to them in the process of their entrance or admission, as well as fee charged for issuance of migration certificate to the leaving or ex-students are also exempted. So in simple words, what you can remember? Any amount collected from prospective students or ex-students, the fee collected by them will be exempted. Then next, another circular, see below in the next page, page 171, there are 2 points. See that first point. There are some examination boards. Their job is only to conduct the exam and give the rank. Based on the rank, they will get the admission in the college. So these examination board will collect the entrance exam fee. Example, IIT, JEE, NEET, and even this CLAT, Common Law Admission Test. Like this, there are some examination boards. Their job is only to conduct the entrance exam. They give a rank, score they will give. Based on that score, you will be able to join in the college. So then, are these examination boards called as education institution? Why we need to bother? Because they are collecting entrance exam fee. What we studied in the second point, entrance exam fee collected by education institution is exempted. Whether these examination boards are treated as education institution? Yes, that's what the circular says. See the first point. These examination boards, if they are not conducting entrance exam, can we join in a college? No. So means this is part and parcel of education institution. So fees collected by them is exempted. Central and state educational boards are treated as educational institution for the limited purpose of providing service by way of conduct of examination to the students. Therefore, National Board of Examination or National Testing Agency is education institution and the fee collected by them is exempted. Second point is related to catering services provided to Anganwadi schools. Anganwadi schools are basically like daycare. So this before school, preschool actually. It is coming under preschool. Anganwadi schools will come under preschools, like a daycare which is provided to the kids who not joined in any school. So this particular Anganwadi schools became so famous because of the afternoon food that will be provided to the kids. So lot of kids will be willing to go to that school. So Palwadi schools pa. So basically why they like that? Because afternoon egg they will give, or they will be giving this soya chunks, etc. and all, and people will be interested to go there. And what these Anganwadi schools will do, they will receive the catering services, and whether catering service provided to Anganwadi school is exempted or taxable. First, we have an exemption for catering service. What is that? Catering service provided to category 1 education institution is exempted. Whether this Anganwadi school come under category 1 education institution? Yes. Preschool will come under category 1. So category 1 is up to 12th standard. So everything will come there. Due to that reason, catering service provided to Anganwadi school is taxable or exempted? Exempted. Say this. Catering service provided to Anganwadi institutions are exempted, as the same fall under preschool education and are treated as educational institutions. Then next, government services. Already we have discussed in government service, services provided by government to business entity. So have a look into this. Services provided by government. We are discussing services provided by government, not to government. Services provided by government. The services provided by government, 4 activities are covered under supply. What are the 4 activities covered under supply? Department of Post, transportation of goods or passengers, aircraft, that is services by a port or airport, and services to a business entity. In these 4 activities, it is covered under supply. All other activities are treated as excluded from supply. You can also remember it as exempted supply. Anyway, you can remember. But these 4 activities are only called as supply. In these 4 activities, look into Department of Post. For Department of Post, we have only 3 exemptions. What are they? Postcard, inland letter, or book post or ordinary post of envelope with less than 10 grams. This is actually RIP, rest in peace. Postcard no one is sending. Postcard no one is sending. The moment SMS, WhatsApp and all is there, why we will send a postcard, inland letter? No one is sending. Envelope less than 10 grams. Sir, one paper if you send in an envelope itself, it will be more than 10 grams, sir. You take an envelope, you take one paper, you fold the paper and put it in the envelope and send, that will easily be more than 10 grams. And therefore, I don't know why they gave this less than 10 grams. Usually we will be sending invitations and all in book post, marriage invitations, etc. Invitation, no doubt it will be more than 10 grams only. Unless otherwise, I have seen some invitations like yellow color invitation is there, Manja Patrika, okay. So that one alone may be less than 10 grams because it will be a small one. They will fold and put it in a paper and they will send, maybe that will come under less than 10 grams. But usually everything else easily goes. So better they don't have to give the exemption. Only these 3 cases it is exempted, all other case Department of Post will be taxable. Can you tell me what are the other activities of Department of Post? Speed post, express parcel post, life insurance, agency service. They will do bill collection like telephone bill, electricity bill and all they will be collecting. Then Aadhaar enrollments they will be doing. All these are taxable. So only 3 service of Department of Post is exempted. What are the 3 service? Come on. Postcard, inland letter, book post or ordinary post with the envelope less than 10 grams. Then transportation of goods or passengers, we have a separate discussion related to the transportation sector we will see, and services to an aircraft or vessel inside or outside the precincts of a port or airport. So it is always taxable. We don't have any exemption. So for airport or port services, always taxable. Then services to business entities. Already we discussed this. We have 14 exemptions, 14 points we saw na, and 2 general exemptions. So business entity turnover during previous year does not exceed threshold limit, value per invoice does not exceed 5,000. So it will be exempted. And apart from that, all others will be taxable. In that, Indian Railways always coming under FCM. And renting of immobile property to registered person RCM, to unregistered person will be FCM. All other service of government to business entity will be coming under RCM. So we discussed this already. In RCM we have discussed. One table we saw na, respond here, at least you could recollect or not. You don't have to remember. I will not ask any question on that. At least you could recollect that we discussed. That is enough. So see these illustrations based on that. State government of Tamil Nadu gave immobile property on rent for 10,000 rupees per month to flower vendor Mr. Rahim, whose aggregate turnover during previous year does not exceed threshold limit, and Mr. Rahim is unregistered person even during current year. So renting of immobile property is not covered in the 14 specific exemptions. The first general exemption is not applicable for renting of immobile property. Second general exemption is applicable, but the value should not exceed 5,000. So here it is 10,000. Therefore, this service will be taxable. And wherever it is taxable, we should check renting of immobile property to unregistered person will be FCM and to registered person will be RCM. Is Mr. Rahim registered or unregistered? Unregistered. Therefore, it will be coming under FCM. So first you need to write not covered under specific exemption. Even though aggregate turnover during previous year does not exceed threshold limit, so exemption is not available for renting of immovable property. Invoice value greater than 5,000, so another general exemption not applicable. Consequently, it will be taxable, and as recipient is unregistered, GST payable under FCM. This illustration already we have discussed, and you have made note also in your book. Then second one, state government of Karnataka provides advertising services to an ad agency whose turnover during previous year exceed threshold limit. Invoice value 4,500, and such ad agency is not registered during current year. Now, is this advertisement services given in the 14 specific exemptions? No. And it is provided to a business entity whose turnover during previous year exceeds threshold limit. So, first general exemption not applicable. Second general exemption is applicable here as the value does not exceed 5,000. Then third, what will be your answer if the invoice value is 6,000? First general exemption also not applicable, second general exemption also not applicable, and it will be taxable. And as it is other than renting of immovable property, always it will be coming under RCM. Then this cost petroleum, profit petroleum, and excess royalty collection contractor point we have seen. Now look into services provided to government. So far in the before chart, what we have seen is services provided by government. Now we are going to see services provided to government. Now say this, generally government is required to do certain functions to the general public or business entities as per article 243G or 243W of the Constitution. Example, laying down roads is the job of the government. Sewage cleaning, job of the government. Sanitation of the streets to prevent mosquitoes or bacteria, etc., job of the government. Providing water to the people, job of the government. You understood? Where is it given? As per Constitution, article 243G or 243W of the Constitution it is given. Now, government will not do all these things. Then what they will do, sir? They will outsource. Best example, cleaning roads, collecting the garbage from the household and disposing of in the outskirts is the job of the government. Government includes local authority. Now you take our Chennai Municipal Corporation, they will not do, because Municipal Corporation is busy with many things. So they outsourced it to one private company called as Urbaser. That is the name of the company, Urbaser. Urbaser company, Urbaser Sumit is the company name. So this Urbaser company is providing the services to the government with respect to solid waste management. So this activity of cleaning the roads and removing the garbage is known as solid waste management. Okay. So actually who should do? Government should do. But they are outsourcing it to a person. That person provided the services to the government, for which whatever money that they are collecting will be exempted if it is a pure service. Is it a pure service? Yes. What is the goods element in this? There is no goods element. Cleaning, garbage cleaning and putting it somewhere, is it any goods element? No. Purely service element. Therefore, this activity is exempted. Understood? So, I have given the example already, solid waste management. Then, what if it is composite supply of goods and services? For example, construction of roads, laying down roads. In laying down roads, what is the goods element? That concrete, tar, etc. is the goods element. What is the service element? Laying down the road is the service element. What is it they are telling? Actually, whose work it is? Government work. Now they gave it to one contractor and it's a composite supply. What will be the value of goods? What will be the value of goods in the total contract price? Does not exceed 25%. Exceed 25% of the total. Exceed 25% of the total, because major cost is material only, na. Therefore, it will not be coming under exemption. It will be taxable. Example, laying down cement road. Suppose if it is sanitization of streets. Sanitization of streets means what? Filling the streets with that smoke, mosquito repellent, so that the mosquitoes will not be spread. Now in that, what is the goods element? The chemical that they use is the goods element. What is the service element? They need to take a vehicle and go throughout the street and spray that, na. That will be the service element. Definitely the value of goods does not exceed 25% of the total. So the money collected will be exempted. Understood, pa? So 3 points you should tell me. Come on. Any service which the government is required to provide as per constitution. And we are providing such service to the government. If it is a pure service, exempted. If it is composite supply of goods or service where the value of goods does not exceed 25% of the total, exempted. Where the value exceeds 25% of the total, taxable, entirely taxable. Sir, but here government does not include government authority or government entity. So who will come under government here? Central government, state government or local authority. These three only. But government authority or government entity will not come. Sir, what is government authority or government entity? So government will establish a body for doing its activities. That is called as government authority or entity. Example, CMDA, like that one authority is there in Chennai. Chennai Metro Development Authority, CMDA. They should give approval for the land. Then only you can buy the land and construct the building on that land. So this CMDA is not government, it is a government authority. You understood? Same way, water, Chennai Metro Water Sewage and Supply Board. So this is a government authority, not government. You understood, pa? So this exemption is available only to government, not to government authority or government entity. You can see the note. The exemption not available if such services are provided to government authority or government entity. But what activities provided to government authority or government entity exempted, sir? Now we have got a separate exemption for that. You see 6th point below. Next page you see. Any person providing services to government authority. Sir, what is the difference between first point and 6th point? First point is services provided to government. 6th point is services provided to government authority or government entity. Government authority includes government entity also. Okay. What activities? In case of first point, all services exempted. Correct? But in the 6th point, only these activities are exempted. What are these activities? Water supply, public health, sanitation and conservancy, solid waste management, slum improvement and upgradation. For example, I gave you this Chennai Metro Water Supply and Sewage Board is there. So for that board, what is the board work? They need to provide water facility to the household. When they don't have the metro water, because they collect charges, na metro water charges. When they don't have metro water, so what they need to do? Through tankers, they need to buy the water and they need to take the tankers in the places and they should allow the people to carry the water in the tankers. You understood? So far, last 10 years, no problem in Chennai like that. But 10 years before, in Chennai, this problem came, water scarcity. Today, Bengaluru, what they are facing, we already faced it before 10 years. We were kids at that time. Okay, in every area, no water. And metro water and all was not there. One water tanker used to come. I remember, I clearly remember, because at the time only I got married, 10 years before only. And when I went to my in-laws house, my in-laws said, water not available, you need to go there. One bucket they gave, in that bucket I took the water for bathing. You understood? That was the situation. And one tanker will come morning, 8 o'clock, that tanker will come. And we need to pay 2 rupees for one bucket. So we will pay 2 rupees and take the water. This was the scarcity situation. But today Bengaluru is facing, and they are telling, your water scarcity, we don't have water and all. Ha, you are kids here, we already suffered a lot. So therefore, this is the job of the metro water. They should do the board job. So what they will do? They will buy the water. From where, sir, they will buy the water? Somewhere in the outskirts, agricultural farm and all, they would have put the bore, and there the water may be available. Usually for agriculture, what they will do? Some 100 feet below and all, they will put the motor. So there will be water, and this metro water board will buy the water from them and will supply. So this supply of water to Metro Water Board will be exempted. That is this water supply. Are you getting this? So government authority is required to do some activities for which we provided that services to government authority, that is exempted. What activities? Only 5 activities: water supply, public health, sanitation conservancy. Sanitation conservancy during COVID we have seen. So one luggage they will put, one spraying machine will be there, fully they will come inside the house and spray and go. Have you seen that during COVID? That one, sanitation conservancy. Then solid waste management, cleaning the garbage, etc. Then slum improvement and upgradation, construction of houses for the slum people. Okay, so recently also one movie came, Patchwork. So that one, so that slum improvement and upgradation. Okay, so that will be coming under this exemption. Understood for 6th point? So 6th point is an amendment here, applicable from May 24 exam onwards. Then look into this composite supply. So this is the first point, composite supply of services by way of milling of wheat into wheat flour along with fortification. What is this? Listen, please listen. How in ration shops in South India they give rice, in North India they give atta, wheat flour. So this atta they will procure from where? From the milling industries. So these milling industries, what they do? Wheat they will crush into atta and they will be supplying it to the government. Now in this, what is the goods element? Wheat. What is the service element? Converting into powder. Service element, crushing it is the service element. But the goods element exceeds 25% of the total. So whether this exemption what we have discussed is applicable? No. Generally ration shop will come under government activity, and when they procure the goods and services, definitely the value of goods exceeds 25% of the total. Therefore this exemption is not available. That is this composite supply of service by way of milling of wheat into wheat flour along with fortification by any person to state government for distribution of such wheat flour under public distribution system is not eligible for exemption. Why? Why not eligible for exemption? As the value of the goods involved is greater than 25%. Then another point, Indian Army is receiving some services related to this sanitation, cleaning toilets, etc. That services they received. Now the person who is providing this sanitation services to Indian Army is telling that this activity is exempted. What is your answer? Is that activity exempted or taxable? Based on this point you tell me. Is Indian Army government? Is Indian Army government? No. Then what it is? Okay, Indian Army not government. Then what it is? It will come under Ministry of Defence here. Indian Army will come under Ministry of Defence. So it's a department. Okay, so it will be coming under government. Got it? Now when Indian Army receives the services from any person, it is not exempted just like that. First this exemption is applicable when that activity should be entrusted with the government under Article 243 GRW of the Constitution. Is that activity of toilet cleaning the work of Indian Army? No. So therefore, whenever you provide the sanitation services to Indian Army, that is not exempted. When it will be exempted? First of all, it should be their work and they outsourced it to you. When you provide service to them, it is exempted. First of all, it is not the work of Indian Army to provide the sanitation to general public. So when they receive the sanitation from any other person, that will not come under this exemption. Consequently, it will be taxable. It is clarified that if such services are procured by Indian Army or any other government ministry or department which does not perform, underline, which does not perform any functions listed under the Constitution, so the same are not eligible for exemption, then it will be taxable. The next 4th point, any training program for which greater than or equals to 75% expenditure borne by government, already we discussed that. Then 5th point, services provided by any institution or NGO under the central scheme of scholarship for students with disabilities. Compare fourth point and fifth point and tell me what is the difference. Fourth point, government is bearing how much? But in the fifth point, how much they will bear? Total expenditure borne by the government. And fourth point, any training program, correct? Fifth point, training program for students with disabilities. So sixth one already we have discussed. So we completed services provided by government and to government. Now we are left with some more exemptions. We'll take a break, we'll meet at 2 o'clock and we will continue with this, okay? Okay, we'll start. So look into page 176, renting services. In that renting services, renting in relation to movable property already we have completed. So there are 4 exemptions for renting of movable property, that is hiring of a motor vehicle that can carry more than 12 passengers to state road transport undertaking, then hiring of a motor vehicle that can carry goods to goods transport agency, then hiring of motor vehicle greater than 12 passengers. Which motor vehicle? Electric motor vehicle to local authority, and hiring of bus to a person who in turn provides transportation service to education institution up to 12th standard. So this already we completed this part. In immovable property also, building part already we have seen. So what is that I told you? Suppose if it is for commercial purpose, always it will be taxable. Residential purpose, for residential purpose to, that is residential building for residential purpose to a unregistered person is exempted. To a registered individual for family stay is also exempted. So this also we have seen. And this place I told you, you consider it as RCM. So for exam, for ICAI exam purpose, you consider it as RCM, because I told you residential property will be coming under RCM. Always residential property come under RCM. Then in relation to land, there are 2 exemptions. Number 1 is upfront charges. So this movable property related discussion we have seen in RCM. Even immovable property related discussion we have already seen in tenancy rights, while discussing tenancy rights as well as in RCM. Now what is that extra point that you need to remember is this area. So I have a land. So that land is a agricultural land or industrial land. Who am I? Government. So I am government. I am giving the land on lease to government authority or government entity. So first you are trying to understand who is the supplier. The supplier is government. Who is the recipient? Government authority or government entity. What is given on lease? Land is given on lease. What type of land? Any land, industrial land or agricultural land. What is exempted? Upfront charges as well as annual lease rentals is exempted. Now look into the second point. Upfront charges including preferential location charges with respect to long-term lease of industrial plots or plots for development of infrastructure for finance business by state government industrial development corporation, that is exempted. Now I want you to compare these two and remember. First, what is the difference between first exemption and second exemption? What is the difference you can find? Supplier you see. Who is the supplier in case of first exemption? Government. In case of second exemption, who is the supplier? State Government Industrial Development Corporation, SIDCO. State Government Industrial Development Corporation is the supplier. Then who is the recipient? In the first exemption, who is the recipient? Government authority or government entity. And whereas in the second exemption, who is the recipient? Any person. They did not give who is the recipient. Then in the first exemption, what type of land is given on lease? Any land is given on lease. But in the second exemption, what type of land is given on lease? Properly read that. Please read. Industrial land. Industrial land or land for development of infrastructure for finance business. Okay. So industrial land or land for development of infrastructure for finance business. And in the first exemption, What is exempted? Both upfront lease as well as annual lease. Both are exempted. But in case of second exemption, what is exempted? Only the upfront amount is exempted. Are you understanding? So what is the exemption with respect to land power? There are two exemptions for land. So this was not there. So that's why now I have added. Okay. So these are amended. Definitely this will be tested. This movable property, you know already. Immovable property also you know. Related to land, there are two exemptions. What is the first exemption? Government giving land on lease to government authority or government entity. What lease? Either short-term lease or long-term lease. And any land can be given on lease. Both upfront charges as well as annual royalty is exempted. Whereas in the second exemption, supplier is SIDCO, State Government Industrial Development Corporation, giving land on lease to any person. But what land is given on lease? Industrial land or land for development of infrastructure for finance business. That too, what type of lease? It's not a short-term lease. It should be a long-term lease. What is a long-term lease? Lease for greater than or equals to 30 years. And what is exempted in the second point? Only upfront amount is exempted, including the preferential location charges. Okay. Try to remember these 2 points. And then this already we discussed. There is a school which is providing transportation service to students, faculty and staff. Taxable or exempted? Where is it exempted? Services provided by educational institution. So by educational institution, any service is exempted. So there it is exempted. Now ABC Travels provided transportation service to school. Is it exempted? Yes. Where it is exempted? Services provided to educational institution. There it will be exempted. Again, XYZ Motors gave the motor vehicle on renting to ABC. Is it also exempted? Yes. Where we have seen renting of motor vehicles exemption. Renting of motor vehicle to a person who provides transportation service to educational institution up to 12th standard. So that renting is exempted. Understood or not? So this entire line is exempted. School providing transportation service to student exempted. And a person providing transportation service to school also exempted. And a person giving renting of motor vehicle to that person providing transportation is also exempted. Now, suppose if ABC Travels directly provide transportation service to students, faculty, staff, is it taxable or exempted? Taxable. That will be taxable. And when XYZ Motors give the motor vehicle on rent to ABC, is that taxable now? Yes, because ABC is not now doing business with school. ABC Travels is directly doing business with the students. So therefore, whatever vehicle they have taken on rent will be taxable. When the rent will be exempted? If ABC is providing transportation service to school, then only it will be exempted. Understood? Mainly to eliminate private transporters, they brought this point. Okay. So private transporters should not be there. And if at all they are there also, they should be providing to the school only. Then next, suppose if there is a college is providing transportation service to students. So college providing transportation service to students, taxable or exempted? Exempted, because this will come under services provided by educational institution, exempted. Now ABC Travels providing transportation service to college. What about this? Taxable, because transportation service only to category 1 education institution is exempted. This is category 2, therefore it will be taxable. Now XYZ Motors is giving motor vehicle on rent to ABC Travels. What about this renting of motor vehicles? Not exempted, taxable. Why? Only if they are giving motor vehicle on rent to a person who provides transportation service to category 1 education institution only exempted. So therefore this renting will be taxable. Why in renting of motor vehicle I gave FCM or RCM? Because in 3 conditions are satisfied. If 3 conditions are satisfied, it will come under RCM. What are those 3 conditions? Supplier should be other than body corporate. Recipient should be body corporate. Rate of GST 5%. If any one condition not satisfied, it will come under FCM. That's why either FCM or RCM. Then next, look into the second exemption. Sir, renting of precincts of a religious place. Precincts means what? Surroundings. Surroundings of a religious place. So there is a religious place, means temple, church, mosque, gurudwara. So these are called as religious places. Its precincts. Precincts means surroundings are given on rent. For what purpose? For what purpose they will give it on rent? Either for accommodation. For example, you take Tirumala. Tirumala is a religious place meant for general public and it is registered as a trust. For what purpose they are giving on rent? For accommodation of pilgrims who are coming there, or they will be giving it on rent for functions, marriage function or any other function, they will give hall on rent, or they will be giving the shops on rent for the purpose of selling goods, commodities, etc. Now in that case, if they are giving it on rent for accommodation, per day, if it is less than 1000 rupees, it will be exempted. So you remember 999 exempted. 999 rupees means exempted. If it is exactly 1000 also taxable. So rupees 999 per day, then it will be exempted. Exactly 1000 rupees or beyond 1000 rupees, then it will be taxable. Same way, suppose if it is hall, how much will be the amount so that they will get exemption? 9,999 per day will be exempted. So exactly 10,000 also taxable. Then for shops, how much it will be? Less than 10,000 per month. So 9,999 per month is exempted. Beyond that means entirely it will be taxable. So what are the 3 points? First, there are precincts of a religious place meant for general public. That religious place is registered as a trust. Now they are giving on rent for accommodation. How much should be the charges per day? 999, that is less than 1000, then it will be exempted. Suppose if they are giving on rent for marriage functions, etc., then in that case less than 10,000 per day. So then if it is for shops, less than 10,000 per month. Then this chart is for your information part, because in renting of motor vehicles, I told you that there will be 3 conditions. What is the third condition for RCM? The rate of GST should be 5%. Means, sir, for renting of motor vehicles, is there any other rate of GST also? Yes. So 12% is also there, 18% is also there. So for conveying that only I have just given, you don't have to remember these rates. So there are other rates also. But in the question, only if they have given 5%, we need to take 5%. Otherwise, RCM will not be coming. If the given is 5%, then only RCM. Otherwise, it will be FCM. Then look into the next one. So we have seen renting services. Now look into sports related services. In this sports related services, we have already discussed one exemption. What is that? Sponsorship money collected by recognized sports body is exempted. Now we need to understand what is a recognized sports body. Any sports body which is coming under National Sports Federation. Please see the meaning of recognized sports body. Total 6 points are there. First, any body or association under National Sports Federation. So under National Sports Federation, if there is any body that will come, example BCCI, Indian Hockey Federation, so Indian Football Association, that will be coming under National Sports Federation. Number 2, Inter-University Sports Board, which will conduct the games between the universities, sports and games between the universities in India, that is Inter-University Sports Board. Paralympic Committee will be conducting sports for physically challenged people, that is this. Then Central Civil Services Cultural and Sports Board, which will conduct sporting events for government employees. So like this railway team you would have heard of. If you watch Dhoni movie, so railway team he will play, and from there he will be selected to nationals. So therefore railway team, so is an example of Central Civil Services Cultural and Sports Board. For government employees, they will be conducting various sports tournaments. So that is the Central Civil Services Cultural and Sports Board. Then National Games by Indian Olympic Association. Then Panchayat Sports Board, which will conduct local events like this volleyball games, and then kabaddi, kho, and even in Kerala, this boat races and all they will be conducting. They will come under Panchayat Sports Board. So what are the 6 recognized sports bodies? Come on. National Sports Federation, Inter-University Sports Board, Paralympic Committee, Central Civil Services Culture and Sports Board, Indian Olympic Association, National Games by Indian Olympic Association, Panchayat Sports Board. If these people conducts any sporting event, whatever sponsorship money collected by them will be exempted. Is IPL board a recognized sports body? No. IPL board is not a recognized sports body. So the sponsorship money collected by IPL board will be taxable. Now see this example. So recognized sports body example is BCCI and unrecognized sports body example IPL. Body corporate or firm example Tata. Sole proprietor I am the example. Okay. Now I have given money to recognize the sports body for sponsorship. I can also give Napa. Somewhere in one corner it will come here. Okay. So therefore this will be coming under exempted or taxable, because any money collected by recognized sports body will be exempted. Suppose if Tata is giving money to recognized sports body, that is also exempted. Suppose if Tata is giving money to IPL board, taxable, but who will pay? In case of sponsorship service, when it will come under RCM? If the recipient is body corporate or firm, it will come under RCM. In this case, the recipient is body corporate or firm, therefore it will come under RCM. Suppose if I give sponsorship money for IPL, taxable, but it will come under FCM because the recipient is sole proprietor, therefore it will be coming under FCM. Understood pa? So what is the first exemption you need to remember? Sponsorship money collected by recognized sports body is exempted. Then second exemption, services provided by individual as a player, referee, umpire, coach or team manager to recognize sports body is exempted. So only 5 people. Who are those 5 people? Player, referee, umpire, coach, team manager. Apart from these 5, any other person providing services to recognize sports body will be taxable. Who are others providing service to recognize sports body? Commentators, curators, technical experts, selectors. So these people are other than these 5. So their services will be always taxable. Even if these people provide services to unrecognized sports body, it will be taxable. So what is exempted? These 5 people. Who are those 5 people? Player, referee, umpire, coach, team manager. Only to recognize sports body is exempted. What if they provide service to unrecognized sports body? That will be taxable. Example, Kohli getting money from RCB, taxable or exempted? If he gets money from BCCI, exempted. If you take umpires, IPL matches are happening. Almost all umpires will be paid money by Mumbai Indians team. So whatever money that is received by these umpires will be taxable or exempted? Definitely taxable, because umpire is providing services to whom? IPL board, not a recognized sports body, that will be taxable. Understood? Then next, looking into services of an unincorporated association. So for sports related, only 2 exemptions we have. What is that? Sponsorship money collected by recognized sports body. Number 2, 5 people providing services to recognized sports body. Then services of an unincorporated association. What is an unincorporated association? Means body of individuals, AOP or BOI. Not incorporated means that is not having a separate legal existence. So group of people will form an association, that association we are talking about. Suppose if that association is a trade union. Trade union means what pa? Association of traders. Just write down. Trade union means association of traders. Trade union means association of traders. So if there is an association of traders, which is collecting money from the traders. That is usually what happens. All garment shops will have an association, all pharmacy shops will have an association, and all these provision stores will have an association. So for what purpose? Because of the collective help. So if any member of that association got an issue, the association will come for the rescue. So therefore these associations are created for the self-help. But to become a member of that association, I need to pay some membership fees. That membership fees collected by this association is fully exempted. So if there is a trade union which is collecting membership fees from the traders, whatever may be the membership fees collected, the entire amount will be exempted. Then suppose if the association is providing exempted services, that is generally healthcare service is exempted now. If the association provides that services to its members also exempted. Example, during COVID what happened? So associations, that is this apartment owners association, provided COVID vaccination to their members. So anyhow vaccination is exempted, even if it is provided by association to its members also it will be exempted. Suppose if it is a resident welfare association. What is a resident welfare association? Apartment owners association. Group of flat owners will form an association and incur the common area expenses. What are the common area expenses? Lift maintenance, parking, water supply, sewage treatment, etc. And in turn it will be recovered from the members. In what form it will be recovered? Maintenance charges. If the maintenance charges is less than or equals to 7,500 rupees per month per member, then it will be exempted. What if it exceeds 7,500 rupees? Entirely it will be taxable. For the first case and second case there is no monetary limit. For this resident welfare association there is a monetary limit of 7,500 per month per member. Sir, what is the meaning of the member here? Member means one flat. For example, a person is having 2 flats, then it will be counted as 2 memberships. Got it? Say for example he is paying 10,000 rupees for 2 flats. Then it is exceeding 7,500, so taxable? No. Per flat how much? For 2 flats he pays 10,000. Per flat how much? 5,000. It does not exceed 7,500, therefore it will be exempted. Then next one. As an industrial or agricultural labor association. So what is industrial or agricultural labor association means? Same way, like how trade union means association of traders, industrial or agricultural labor union means, so labor, all industrial labor and agricultural labor will form a labor union. Why labor union? So that if any problem they get from their employer, this labor union will fight for the rights of the labor. So this labor union will collect the membership fees from the laborers who are joining as members. So this membership fee, whatever may be the amount, that will be exempted. Apart from this, if there is any other association, apart from these 4, if there is any other association which is established for promotion of trade, commerce or industry, whatever money that they are collecting as membership fees, if it is less than or equals to 1,000 rupees per annum, not per month, per annum, underline, it's not 1,000 rupees per month, it's 1,000 rupees per annum, then it will be exempted. What if it exceeds 1,000 rupees per annum? Entirely it will be taxable. For example, Hindustan Chamber of Commerce, like that one association is there. What they will do, suppose if there is a person who is a member of that association, they have some issue from the government, so they will represent that member between the government. So before the government, finance minister or commerce minister, they will make a representation and they will explain the issues that are being faced. For CS and all, there is no such association. If CS students were having that association, it will be good, so that some benefit we will be getting, correct? So we will create one association, post-car like that one association we will create. Protection of students of chartered accountancy, okay? Okay, POSCA, protection of students of chartered accountancy association. So this is for protecting the rights of the students. Now, who are the members of this association? Students of CA will be the members of the association. Actually, you need to create something of that sort. Think about it. Okay. So I am ready to fund. Seriously, I am telling. If anyone takes the lead and create this association, whatever is the money required for this association, registration and functioning of this association, the initial contribution will be mine. Okay. Openly I am telling you, it is getting recorded also. So I will spend that money. Don't worry about it. So, but I want someone to take the lead. Problem is, you should be a student of CA, then only you can create an association like that. So when you create this association, registration, all those formalities and all, don't worry, I'll tell you what are those formalities. So but if you create the association and all the students become member of that association, tomorrow we can fight for every right of yours. Simple right, I will tell you. Exam postponement is one right, but this is okay, small right only. There is really serious right I am talking about. Sir, answer sheet I have written correctly. Suggested answer also correct. My answer, suggested answer matching. But why am I not getting marks? And I got as per mark sheet 55. As per mark sheet 55. But as per my answer sheet it is 62. You understood? Answer sheet, evaluated answer sheet 62, exemption. But in the mark sheet they have put for this subject 55. So no exemption. This is something serious. So we need to fight for this or not. Am I right? So therefore, these are all the areas where really we need to put pressure. And we will tell that, so members, that is this president, etc. and all, members should not elect. Students should elect. You understood? Members should not elect ICI president. ICI chairman, members should not elect. Students should elect. So which is bigger body pa? Members are students are. Students should elect. You understood? Then, just like politicians, so they will also do benefit for the students. As they are not being elected by the students, they are being elected by the members. They are doing favors to the members. They are not doing favors to the students. And one big issue is there, another issue, articleship stipend. First year, 7,500. Second year, 12,500. And like that, we should create the minimum stipend. 7,500 per month minimum and 12,500 rupees for the second year. So that with stipend itself, the student should be able to pay the coaching fees for CA final. You got it? So these are the reforms. Many things are there. Okay. So you just create an association, automatically I will tell you what and all you need to do. Okay. Now to make this association run, we need to definitely have some fund regularly. So for that we will collect some 200 rupees per month from the student. Okay, sorry, 200 rupees per annum from the student. Taxable, exempted. 200 rupees per annum. Taxable, exempted. Exempted. Understood this? Suppose if there is any other association, not for the sake of this example I said, really I am telling you. So suppose if there is an association which is collecting up to an amount of 1000 rupees per member per annum, that amount collected will be exempted. Understood? Then look into this. So what are the 5 exemptions for services provided by unincorporated association to its members? Come on. First one, if it is a trade union. Second, if they are providing exempted services. Third, resident welfare association. How much they are collecting? 7,500 rupees per month per member, less than or equals to. And next, industrial or agricultural labor association. Finally, any other association, how much should be the membership fees per annum? Less than or equals to 1000 rupees per annum is exempted. Beyond that, it will be taxable. Got it? Now, in this regard, there is one circular. Have a look into that in the next page. Electricity charges collected by the association from its members. Generally what happens, EB bill of the flat owners association will pay, because in cities and all, in flats people will be like employees, and they will go for job, and in the evening they will come, weekends means they will go for some other vacation, so they will not stay in the house. That house flat is just for namesake for them, so they will not pay these EB bills and all properly. So that's why what association will do, association will pay the EB bill of the flat owner. Why you have one flat, you got some EB bill, say for example 8,000 or 10,000, like that you got a EB bill. That EB bill who will pay? Association will pay, and in turn recover it from you. Will it be called as maintenance charges, so that GST payable or not payable? GST not payable. Why not payable? This will become expenditure as a pure agent. Your liability they are incurring and they are recovering from you, so it should not be included in the value, so no need to pay GST on that. You got it? See the first point, read that. Pays electricity charges on behalf of the members and claims reimbursement of actual electricity charges from the members, then it shall not form part of value. Second point, you see, collects from members on actual basis for electricity charged by state electricity board. This is deemed as pure agent, it shall not form part of value. Read it again and tell me what is the difference between the previous point and this point. There is a small difference. In the first case, bill is in the name of the flat owner. In the second case, bill is in the name of the association. So why bill will be in the name of the association? Common area lighting, common area motor, electric motor. For that electricity bill will be there na. Common area lighting will be there na yaar. Passage, staircase, lift, then again one motor will be there, motor pump for the purpose of water supply, generator, like this and all, they will be running. So which means it's a common electricity. That common electricity bill will be in whose name? Association name. How that association is going to recover that from the members? On what basis? Read. On what basis they are going to recover? On actual basis. They are going to recover on actual basis. In that case, that will also be treated as pure agent and it will not be included in the value. Is it clear? For example, bill is 20,000, total 10 flats, 20,000 bill, total 10 flats, and on an actual basis means 20,000 only they are recovering, means each flat 2,000 only they are recovering, they are not making gain out of this. How much is the bill, pa? How much they recovered, pa, from all 10 flats? 20,000. So therefore no need to include this 2,000 rupees in the maintenance charges. So maintenance charges will be apart from this 2,000. Got it? Suppose bill is 20,000, but they recovered 2,100 rupees from each and every member. Why 100 rupees? Profit. Why profit? Because they need to pay this bill and again recover na. So due to that reason they made some profit out of it. So what is the total amount collected? 21,000. What is the bill? 20,000. Are they making some profit? And are they collecting the actual amount or they making some profit? Making some profit. Now this 2,100 rupees should be added to the regular maintenance charges, and if it exceeds 7,500, on that GST will be payable. Is it clear? Read the third point. Collects charges from members on ad hoc basis which sometimes exceeds the actual electricity charges of electricity board, then it shall form part of the value entirely. Got it? Now again you will get one basic doubt here. Sir, you said electricity is exempted, but now we are recovering electricity charges, you are telling it should be included in the value and GST payable. How is it so? So this point I clarified already. My expenditure may be exempted, but the moment when I recover this expenditure, the character of this expenditure will change. The character of this expenditure will be absorbed by the character of my supply. Sir, I am providing maintenance services. my expenditure may be exempted, but when I recover that expenditure, I am not providing electricity to you. Understood? Pa, you are the flat owner, pa. I incurred electricity charges. When I recover the electricity charges, am I providing you the electricity? No, I am just recovering the expenses. So this recovery of expenses should be included in the value. Any expenditure incurred by the supplier and charged to the recipient should be included in the value, correct or not? But what they are telling, if you recover only the actual amount, then it will not be included. But if you try to make any profit out of that, then it will be included. Understood or not? So tell me, what are the 3 points we have seen here? First, when this situation will arise? Electricity charges incurred by association and recovered from the members. First, bill is in whose name? Member name. Member name. First bill is in the member name. Who paid? And recovered it from the member. Will it come in the maintenance charge? No. Second, bill is in the name of association. Recovered from the members. On what basis? Actual basis. Will it be included in the maintenance charges? Third case. So bill is in whose name? Association. Recovered from the members. On what base? Ad hoc basis. Will it be included in the value? Yes, it will be included in the maintenance charges. If the maintenance charges per month exceeds 7,500, then it will be taxable. Now, let's see one more situation. There is a apartment with 10 flats. Okay, there is an apartment with 10 flats, and from each flat they are collecting 10,000 rupees per month. So in an apartment there are 10 flats. From each flat they are collecting 10,000 rupees per month. So 10,000 per month means more than 7,500 rupees as maintenance charges into 12. So what is the total amount per annum? Total amount how much? 12 lakhs. It does not exceed 20 lakhs. Are they required to register or not? No, they are not required to register because their aggregate turnover does not exceed threshold limit. So even though this is taxable, but they will not pay GST. Why they will not pay GST? Because they are not required to get registered. Understood? Got the clarity? So see that point. If the amount charged by Resident Welfare Association exceeds 7,500 per month, then entire amount is chargeable to GST provided their aggregate turnover has exceeded the threshold limit. Suppose if their aggregate turnover does not exceed threshold limit, don't see what is the maintenance charges. Always you are not required to pay GST. But if their turnover exceeds the threshold limit, they need to register. Then you check how much is the charges per month. If it is exceeding 7,500, then it will be taxable. If it does not exceed 7,500, then it will be exempted. Then next, import of services. Already we completed the discussion related to this. While discussing RCM we have seen. Then look into the next area, construction services. In construction services, see the first point and second point. Read yourself and tell me what are the differences in this. First point and second point. Yes. So first point is what? Only construction. In second point, both construction as well as repair. Very good. In the first point, construction of an individual house. Whereas in the second point, project. What project? Pradhana Mantri Awas Yojana or Housing for All Mission project. Okay. And in the first case, individual house can be any big house. There is no like square feet or construction cost etc. given. For example, Mukesh Ambani is having one individual house, 28 floors that house is, Antilla like that one house, that is individual house. So 28 floors individual house, sir? Yes. You know why? House occupied by a single family is known as individual house. What is the meaning of individual house? House occupied by a single family is known as individual house. Yes, that house is occupied by a single family only, therefore it will come under individual house, and the construction expenditure for that house is exempted. So you can construct any individual house for which the construction expenditure that you spend will be exempted, but remember, it should be only construction. Sir, one big bungalow I am constructing, sir, with some 4,000 square feet. Okay, construction expenditure is exempted, but it should be only construction. Means what? You should not get the material from the supplier. The supplier should provide only pure labor contract. He should not supply material. So this exemption is not applicable to works contract. This exemption is applicable only to construction contractor. Means you buy the material from the market, you receive only the construction service, then that construction service will be exempted. Then third point, you see, you understood now first and second point. Third point, 1/3 of the gross value of flat is exempted towards land or undivided share of land when the gross value includes the value of land. What does it mean? You see that in the next page, I gave an example for that. But whenever you are buying a flat, are you paying even for the land or not? Yes. But what is that land called as? UDS, undivided share of land. Example, in a 2,500 square feet land, if 5 flats are constructed, each flat will have a UDS of 500 square feet. So when you pay money for the flat, you also pay money for the land beneath that flat. Are you getting? So therefore, GST is payable only on the flat, not on the land, because land is excluded from supply. Due to that reason, they are telling you take the gross amount of the flat and reduce 1/3 towards land, so remaining amount will be taxable. For example, if the gross value of the flat is 75 lakhs, including UDS, value of land or UDS, how much will be allowed as deduction? 1/3. What is 1/3 of 75 lakhs? 25 lakhs. What is the remaining portion? 50 lakhs. That 50 lakhs will be taxable. That too when? If entire consideration received after completion certificate, is it covered under supply? No. Because we studied na, if entire consideration received after obtaining completion certificate or first occupation, it is excluded from supply. So that case no GST. I am talking about before completion certificate or part before and part after, then this 50 lakhs will be taxable. Suppose if the land value is 40 and construction cost is 50, then how much will be deduction? Then also 1/3 only. So here land is 40, construction cost is 50. What is the gross amount? 90. So in that 90, 1/3 is allowed as deduction. What is 1/3 of 90? 30 is only allowed as deduction. So remaining 60 lakhs will be taxable. Is it clear? Then this point already we discussed. TDR FSI long term lease. What is that? Value of inward supply of TDR FSI long term lease into 18% into floor area of residential units booked before completion certificate divided by total floor area. While discussing RCM, I told you the same chart we have discussed. Then look into advocate services. Advocate service also we have completed. Correct? Advocate services, 4 exemption. If they are providing services to a person other than business entity, exempted. If they provide service to another individual advocate or firm of advocate, exempted. If they provide service to government, exempted. If they provide service to a business entity whose aggregate turnover during previous year does not exceed threshold limit, exempted. Remaining case it will be taxable and it will come under RCM. In that, the exemption with respect to another individual advocate or firm of advocate is not applicable in case of senior advocate. And for arbitrator, there are only 3 exemptions. This discussion we made. And also the special point I told you, Suppose if senior advocate is providing service to another individual advocate or firm of advocate, who should be taken as the recipient? The ultimate litigant or applicant or petitioner should be taken as the recipient, and accordingly we need to determine the taxability. Then see the next one, the last area, that is transportation services. So we have two charts. One is transportation of passenger service, another is transportation of goods service. Have a look into transportation of passengers. What are the various modes of transportation of passengers given there? Airways, railways, waterways and roadways. First look into airways. Your focus should be on exemptions. What are exempted? So balancing figure will be taxable. So in case of airways, what are exempted? See the first point. If the starting point of the passenger or ending point of the passenger is in northeastern states or Bagdogra in West Bengal, the ticket will be exempted. So what are northeastern states? MMTN, ASAM. I told you already. So there are 11 states. In that northeastern states are MMTN, ASAM. While discussing Article 279A, GST Council, I told you this point. So what are the northeastern states? You can make note here again if you want. So what are northeastern states? Northeastern states, NS, MMTN, ASAM. MMTN, that is Manipur, Mizoram, Tripura, Nagaland. A, Assam. S, Sikkim. A, Arunachal Pradesh. And M, Meghalaya. So these are the northeastern states. And then Bagdogra and West Bengal. For example, you are going from Chennai to US. What could be the ticket price? Approximately 1 lakh. Now you don't have to pay any GST on 1 lakh if you book 2 tickets. Ticket number 1, from Chennai to this northeastern states or Bagdogra, you book a ticket. That ticket will be exempted as the ending point is in that place. Then ticket number 2, you book from there to US. That ticket also will be exempted as the starting point of the passenger is in that place. So fully the GST will be exempted. But this exemption is available only if you travel by economy class. In case of business class, this exemption is not available. This exemption is only in case of economy class, not in case of business class. Then look into the second exemption. Amount received from government towards viability gap funding for regional connectivity airport for a period of 3 years. Regional connectivity airports means there are some regional airports which are not that popular, and to make it functional, they brought this regional connectivity airport scheme. Example, in Tamil Nadu, there is an airport called as Trichy Airport, which is not that big airport and it is not that functional also, not like Chennai Airport. And why? Because people are not using that airport, so flights are not coming. If flights are coming, they will pay rent to the government, so government will spend money on creating good infrastructure in the airport, but only 1 or 2 flights will come in a day. So reason, people are not booking the tickets. Why people are not booking the tickets? Because Chennai to Trichy, so usually people from Trichy, if they need to travel anywhere, they will come to Chennai and they will board the flight. And so they will come by train because the train is cheaper and more convenient. So they travel by train, and flight is somewhere like 3000 rupees means no one will pay for it, because in train less than 1000 rupees itself, in AC ticket they can happily come. And why will they spend? Of course the journey time is only 40 minutes, but even then people will prefer a train only. And how to make the people book the flight ticket? If you reduce the price, maybe they will think. For example, 1500 rupees, will people prefer to travel by flight? Yes, because 1500 rupees, so 40 minutes journey, definitely they don't mind traveling, but the airline will not be in profit if they give it 1500. So what government is telling, you collect from the passenger 1500, I will give you 1500 rupees. This is known as viability gap funding. Got it? So 3000 rupees you need to operate. You collect from the passenger 1500. I will give you 1500 rupees to you. So this 1500 rupees which is recovered from the government by the airline is exempted. But this exemption is available for how many years? For a period of 3 years. After 3 years, what will happen, sir? Is still government will give? Yes, still government will give, but that amount received from the government also taxable, passenger also taxable. So first 3 years, money received from the passenger taxable, money received from the government is exempted. After 3 years, money received from the passenger also taxable, government also taxable. Is it clear? Then, so what are the two exemptions for airways? Come on, please respond. What are the two? If the starting point or ending point is in northeastern states or Bagdogra in West Bengal, or amount received for viability from government towards viability gap funding for a period of 3 years from the date of commencement of their operations, 3 years. Then any other case airways will be taxable. Then in case of railways, you see what are exempted in case of railways? Other than first class or any AC coach is exempted. Means what is taxable? AC or first class is taxable. AC can be first class, 2 tier, 3 tier or AC chair car. It will be always taxable. Whereas first class can be AC, non-AC. AC, usually first class will be AC only, na sir? No. Local trains, if you see, there will be first class compartments, non-AC compartments. So wherein that is also taxable. So if you see the local train, so 2-3 compartments, they will be putting this red and yellow lines and green and yellow lines. So that means it's a first class compartment. Never board in that compartment, because if at all you were caught with the TTR, so they will be charging a huge penalty on you. So when you board the first class compartment, because you will buy a normal local ticket and in the local train, if you board the first class, then suppose if the ticket collectors and all stop you, you have to pay a huge amount. So because first class tickets are so costly compared to the normal ticket. Normal ticket 10 rupees means first class ticket will be somewhere 50 rupees or 60 rupees. And on that first class ticket GST will be payable. So on what tickets there is no GST? Other than first class or other than AC. What is that other than first class or AC? Sleeper ticket, no GST. General ticket, no GST. Second class reservation, no GST. Even metro, mono and tramway is also exempted. Metro rail, monorail and tramway. Metro, you know, what is monorail? Bullet trains. On a single track it will be going. Tramway, in old Madras it used to be there. In the road itself they lay down the track. That is known as tramway. So these three will be exempted. Then, so in case of railways, what is exempted? Other than first class or AC. And next, metro, mono and tramway. That metro, mono, tramway, AC or non-AC, that is irrelevant. That is always exempted. Then waterways. In case of waterways, you see that it is divided into two: inland waters and coastal waters. Inland waters means what? Rivers. Inland waters means rivers, that will be exempted. Whereas coastal waters is also exempted if it is for public transport between places in India. Example pa, inland waters, let's take Kaveri river. This Kaveri river will come under inland waters. Even lot of rivers are there, Ganga, Yamuna, even Godavari river and Kaveri river. These are some rivers which are used for transportation purpose. Sometimes for public transportation, sometimes for tourism purpose. But inland waterways is fully exempted. Coastal waters between places in India means Andaman and Nicobar is India, Lakshadweep is India, and even so this some islands are there which will be nearing to this NOC. Example, this Vivekananda rock, Tiruvalluvar rock, which is near Kanyakumari, that is also an example wherein you need to go to that place only by seaways. That is called as coastal waters between places in India. If it is for public transportation, then it will be exempted. If it is for tourism purpose, predominantly, mainly it is for tourism purpose, then it will be taxable. So you tell me in case of waterways, what are exempted? 2 points exempted. Number one, Inland waters exempted, coastal waters between places in India for what purpose? Public transportation is exempted. Then look into roadways. In case of roadways, metered cab or auto rickshaw is exempted. Autos, you know, what is metered cabs? So usually cars with a meter fixed is known as meter cabs. So outside these railway stations and airports, this black and yellow color, so taxis will be there. That will come under metered cabs or auto rickshaws. That will be exempted. Then stage carriage. What is the difference between stage carriage and contract carriage? Stage carriage means which stops at the every stage of the journey during the travel, whereas contract carriage is point to point travel. Share auto will come under stage carriage. Local bus will come under stage carriage. Intercity bus is there from one place to another place. That will be coming under contract carriage. If it is a stage carriage, divide into two, AC, non-AC. AC always taxable, non-AC exempted. Share auto non-AC only. Correct. Share auto is non-AC, therefore exempted. Local bus also. In Chennai, majority of the local bus will be non-AC. Taxable or exempted? Exempted. What if it is a AC local bus? Taxable. Then contract carriage. Contract carriage again divide into two, AC, non-AC. AC always taxable. Majority of the contract carriages will be AC. Intercity buses are there now, one place to another place. Majority of these buses will be AC because now AC is minimum. So then non-AC buses are also there. That green color bus will be there. Non-AC buses, government bus. Non-AC bus, if it is for tourism or hire, then it will be taxable. If it is for public transportation, then it will be coming under exempted. Sir, how non-AC bus for tourism purpose? Yes, they operate a package tour. Example, this APSRTC, Andhra Pradesh Road Transport Corporation, is operating a bus from Chennai to Tirumala as a package tour. So you can pay this much amount. So they will take you and there they will wait. Evening they will pick you and they will drop you in Chennai. So this is, and even darshan also they will arrange. So this is known as, free darshan only. Free darshan only. How many days it may take? That many days. But free darshan only it will be. So this will be coming under a package tour. So it is a non-AC non-AC contract carriage. But for what purpose they are using? Tourism purpose. Therefore it will be taxable. Then non-AC contract carriage for hire. There is a marriage function and a 40-member family. 40-member family need to go for a marriage function means cab and all they cannot book. So they will take this government bus on rent. You would have seen for some marriage functions and all they will take a government bus and fully this one family will be going. So that will be coming under contract carriage, non-AC contract carriage on hire. That will also be taxable. But for public transportation alone, it will be exempted. Then, so what are the exemptions that we have seen? 3 points are exempted. In case of roadways, what are they? Number 1, metered cab or auto rickshaw. Then non-AC stage carriage. Then non-AC contract carriage other than tourism or hire. That is for public transportation. Apart from that, any other transportation of passengers by roadways will be taxable. Now, transportation of passengers in horse cart, bullock cart, etc. taxable or exempted? Transportation of passenger in horse cart or bullock cart, did I tell us exempted? So, taxable, it is taxable. Any other balancing figure with respect to roadways will be taxable, but they will not be registered and paying GST. If a horse cart, bullock cart gets more than 20 lakhs, better you can quit CA and buy 3-4 horse cart or bullock cart and we can use it, correct or not? So they will not cross 20 lakhs and all threshold limit. Due to that reason, they will not be registered. But service wise, if you see, that service will be taxable. Then in roadways, 3 points we discussed as exemption. If these 3 are through an e-commerce operator, it will be taxable. For example, Auto generally exempted. If you book the auto through Ola or Uber, that will be taxable. Are you understanding? So these three, what are these three? Metered cab, auto rickshaw, then non-AC stage carriage, non-AC contract carriage other than tourism or hire. If it is through e-commerce operator, it will become taxable. Then look into the next one, GST implications on transportation of goods service. Again, goods transportation is also divided into airways, waterways, railways and roadways. First look into airways. Only one exemption for airways. What is that? From where to where? India to outside India or outside India to India? Outside India to India. Transportation of goods by airways from outside India to India will be exempted. Remaining cases and all will be taxable. Then waterways. You read that and tell me what is exempted for waterways. Inland waters exempted. Coastal waters also exempted with respect to notified goods. What are those specified goods or notified goods? In GTA, we discussed some 6 notified goods. Hope you remember. Agricultural produce, food grains, including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural and man-made disasters, defense and military equipment, the same 6 notified goods. I have given below specified goods. What are those specified goods? Agricultural produce, food grains, organic manure, newspapers, defense or military equipment and relief materials. In case of international waters, always it will be taxable. We don't have any exemption. So airways, what is exempted? Only one, outside India to India. And in case of waterways, 2 exemptions. What are they? Inland waters and coastal waters, specified goods. Then railways, only one exemption, specified goods. What are those specified goods? Same list. So specified goods transported by railways also exempted, other cases taxable. Then roadways. In case of roadways, observe, please listen. GTA or courier agency is only taxable. All other transportation of goods by road will be exempted. Example, you are booking a Tata Ace to transport the goods from one location to another location. The Tata Ace collected some money. Taxable or exempted? Exempted. So only GTA or courier agency is taxable. All others are exempted. In highways, lot of lorry transporters you will be seeing now. Everyone is exempted. Everyone is exempted. Only GTA or courier agency taxable. So the balancing figure for transportation of passenger by roadways is taxable. Correct? And the balancing figure for transportation of goods by roadways is exempted. Then next, so got the clarity about passenger transportation and good transportation. For GTA, again we have some exemption. GTA taxable, again for GTA we have some exemptions. What are the exemptions for GTA? You see in page 187. What are the exemptions for GTA? If they are transporting specified goods, exempted. If the recipient is individual, HUF, AJP, not having a factory and are unregistered, exempted. If the recipient is government, registered only to deduct TDS, then also exempted. Other cases it will be taxable. Wherever it is taxable, they have 2 options, correct? Either they can pay GST under FCM or under RCM. If it is FCM, what is the rate again? 12% with ITC or 5% without ITC. RCM means recipient will pay and the rate will be 5%. And they need to decide this option between 1st January to 31st March of the preceding financial year. This already we discussed. Then look into one circular, one master circular related to transportation of passengers in page 186. This is an amendment, very important. In this circular, they created the difference between what is contract carriage on hire, what is renting of motor vehicles. So definitely, if you are not getting this circular, you return the question paper and come. It's not tax paper, some other exam you went. Okay, that much important it is. Please listen. Sir, there is a owner of a vehicle who is giving the vehicle, non-AC vehicle, to a person on a predetermined routes based on a predetermined schedule. There is a person, owner of the vehicle, who is giving a non-AC vehicle to the person, and on what basis? Predetermined routes based on predetermined schedule. Example, usually this corporates and all, they will associate with the travel agencies for picking up their employees on a predetermined route. So this employee in this place you need to pick, another employee in this place you need to pick. Morning time also they will tell, you need to drop them in the office. Again evening you need to pick them and drop in the respective places. This is known as predetermined routes on a predetermined schedule. Lot of employees, Accenture, Cognizant, and even this Saint Gobain, morning 7 o'clock or 6 o'clock if you see in the road, lot of employees will be standing in different bus stops. So this bus will come, will pick them and will drop in the office. Again evening they will pick them from the office and drop in the bus stops. Okay, so this is known as predetermined route on a predetermined schedule. Where it will come? It will come under contract carriage other than tourism or hire. Therefore it will be exempted because it's non-AC na. Non-AC other than tourism or hire is exempted, so it will come under exempted. You understood by this point? What is this? How the vehicle is operated? How the vehicle is operated? Predetermined route on a predetermined schedule. So whatever money that is collected will be exempted. Second, suppose if the vehicle is at the disposal of the recipient. In the previous case, once the vehicle drop the employees, the vehicle will go. Again evening they will come, pick the employees and drop. So that vehicle throughout the day will not be with the company. You understood? Then suppose if the vehicle is with the company throughout the day, that is second point. If the vehicle is at the disposal of the recipient, throughout the day the vehicle is with the company, and for a particular voyage or journey or for a particular period of time, means the company is taking the employees on a tour. For the tour alone, the vehicle is at the disposal of the company. Then where it will come? It will come under contract carriage for hire or tourism. Therefore it will be taxable, because non-AC contract carriage for tour or hire will be taxable now. What if it is with them for a period of time, monthly, like that? Then it will be coming under renting of motor vehicles. Understood the difference? Suppose if it is operated on a predetermined route on a predetermined schedule, what is it called as? Contract carriage other than tourism or hire. So what is the treatment? Exempted. If it is with the company for a particular voyage or a particular journey, then what is it called as? Contract carriage for tour or hire. Therefore it will be taxable. Suppose if it is with the company for a period of time, then it will be called as renting of motor vehicles. And we don't have any exemption in this case now. For renting of motor vehicles, only 4 exemption. For renting of motor vehicle more than 12 passengers to state road transport undertaking, electric motor vehicle to local authority, or to a goods transport agency, or bus to a person providing transportation service to school. It is not there in this. So therefore this renting will be taxable. But when it will come under RCM, if 3 conditions are satisfied, RCM, otherwise it will be FCM. Understood? Then next, you look into transportation of passengers chart. Transportation of passengers chart. In case of waterways, coastal waters between places in India. Example, Chennai to Andaman. Is it coastal water between place in India? Yes, Andaman is also India, for your information. Okay, Chennai to Andaman is coastal water between places in India. For public transport is exempted. Yes, there is a cruise ship which will be taking people on a daily basis from Chennai to Andaman. There is a cruise ship which is operated. But this cruise ship is operated by a private person, not by government. Even then it will be exempted or not. Of course, they are using it for transportation of general public. You understood my question, Pa? There is a cruise ship. Cruise ship means what? Opposite of goods ship. Opposite of steamer is cruise ship. Steamer will carry goods. Cruise ship means it will carry people, passengers. Okay. Now there is a cruise ship which is operated between Chennai to Andaman on a daily basis, but it is operated by a private company. Is it taxable or exempted? Exempted, because it is not for tourism purpose, it's for public transportation, therefore it will be exempted. Whether it is operated by government or operated by private, it will come under public transportation, therefore it will be exempted. Got it? Now this is that circular, please read that second circular. Page 186, exemption would apply to tickets purchased for transportation from one point to another, irrespective of whether the ferry is owned or operated by a private sector enterprise or by a PSU or government. Clear? So public transport means transportation of general public. Public transport does not mean operated by government. It can be operated by government or private. So this GST implications on ocean freight not required. So not required, you leave it, not applicable for you. So with this we completed all the specific exemptions. Now we are left with the general exemptions under IGST Act and miscellaneous exempted services. Please look into this. First point, if both supplier of service and recipient of service located outside India, all services are exempted. Here again there is one amendment. Previously one point was there. If it is transportation of goods by vessel from outside India to India, the importer of such goods will be paying GST, like that one point was there long back. And that point, because of the Supreme Court decision in Mohit Minerals case, they have omitted that. Because of which, what is the revised point that you need to remember? Sir, supplier of service outside India. Where is service provider located? Outside India. Where is service recipient located? Outside India. All services are exempted. No need to bother about the GST, because when a transaction takes place outside India, how can government of India go and collect the GST there? They cannot collect. That's why all transactions are exempted. Is it clear? Second point, you see, there is an Indian tour operator. Services provided by a tour operator to a foreign tourist in relation to tour conducted wholly outside India. So where is the where is the tour operator? Tour operator, India. To whom they are providing tour operator service? Outside India. Where the tour is conducted? Outside India. Example, Indian tour operator providing tour operator service to a US citizen in relation to tour in Nepal or Sri Lanka will be coming under this exemption. You understood? Because a person from US, when they want to visit Nepal or when they want to visit Sri Lanka, definitely they will approach an Indian tour operator, because neighboring country is India only. So they know that Indian tour operator has knowledge about Nepal and Sri Lanka, so they will definitely not take services of a US tour operator. Will you agree with me? So there is an Indian tour operator who is providing tour operator service to a foreign national, and where the tour is conducted fully outside India. Now whatever money that is collected will be exempted. Now listen, what if the tour is in India? Indian tour operator to a foreign tourist, but the tour is in India. Taxable or exempted? Taxable. That is not exempted. Now third point, what if the Indian tour operator is partly providing tour outside India and partly providing tour in India? For example, Indian tour operator to a US citizen, tour is in India as well as in Sri Lanka. Then in that case, what is the exemption? Proportionate exemption. Proportionate to what? Proportionate to tour conducted outside India. How will you divide? You will divide it based on number of days the tour is conducted outside India. So please see this. Services provided by a tour operator to a foreign tourist in relation to tour conducted partly in India and partly outside India. Exemption is with respect to that part which is conducted outside India. How to calculate that? Total consideration into number of days the tour conducted outside India divided by total number of days, or total consideration into 50%, whichever is lower should be taken. Okay. So kindly make note of some examples related to this. Illustration on tour operators service. Consideration charged is 1,50,000. Number of days tour operated outside India is 3, and number of days tour operated in India is 2. Now what is exempted? What is the exemption? A, total consideration. What is the total consideration? 1,50,000 into number of days tour conducted outside India, that is 3, divided by total number of days, 5, equals to 90,000, or B, 1,50,000 into 50%, that will be 75,000, whichever is lower. Therefore 75,000 is exempted. Okay. Next, second, what will be your answer if? What will be your answer if tour conducted outside India for 4 days? Tour conducted outside India for 4 days. Then what will happen? A, that is 1,50,000 into 4 plus 2, 6. Tour outside India 4 days, and the number of days in India is 2. So 4 plus 2, 6. 4 by 6. How much? 1 lakh. And sorry, 1 second. Number of days tour operated outside India. Sorry. For 4 days, out of total number of days of 9 days. So 4 days out of 9 days. So 4 by 9. What is 4 by 9? 66,667, or 50%. 1,50,000 into 50%, that will be 75,000, whichever is lower. Therefore, how much is exempted? 66,667 is exempted. So they are not giving exemption always 50%. It depends. Number of days tour conducted outside India out of the total number of days, or proportionate to 50%, whichever is lower. Now what if the tour conducted outside India is for fraction of the day? Example, 18 hours. How that 18 hours should be taken? Tour conducted outside India for 18 hours. How it should be taken? 1 day. Please see the provision. If it is greater than or equal to 12 hours, you should take it as full day. And if it is less than 12 hours, it should be considered as half day. Then look into fourth point. Services provided by an intermediary when both location of supplier and recipient is outside the taxable territory, then it is exempted. What is the difference between the first point and the fourth point? Read it carefully. First point and fourth point. Vinod. Easy. Easy. Fourth point is what? Sir, seller is outside India, sir. Buyer is outside India. There is an intermediary in India who is getting a commission, that is exempted. But in the first point, supplier of service, there is no goods. Supplier of service outside India, recipient of service outside India, that is exempted. But in the fourth point, it is not service, it is goods. Where is the seller of goods? Outside India. Where is the buyer of the goods? Outside India. But there is an intermediary in India who is getting commission. That commission is exempted. Okay. Even AC is not working here. AC. Then look into miscellaneous exempted services. See the first point. Services by way of transfer of a going concern as a whole or independent part thereof. What is that? I am transferring the business fully as it is. Now I get some sale consideration now. That sale consideration is exempted. In income tax, it is called as slump sale. Income tax capital gains, you will come across one concept called as slump sale. As it is, the entire business will be transferred, for which we get some consideration, that is exempted. Then second point, supply of services associated with transit cargo to Nepal and Bhutan. Nepal and Bhutan are landlocked countries surrounded by land. So any goods which are to be imported into Nepal and Bhutan by waterways will first come to India and will be unloaded in India, then it will be going to Nepal and Bhutan. This is known as transit cargo to Nepal and Bhutan. For this transit cargo, if you provide any services, that will be exempted. Not only for going to Nepal and Bhutan, while returning also, if there is any cargo container returned empty, usually what happens, when night times and all, you ask a auto person to drop you in one place, he will say, return I have to come empty, so therefore you pay some amount, like that he will say. Correct or not? Same logic, the lorry is taking the goods to Nepal and Bhutan, but return it has to come empty, there won't be any goods in that. Even for that also they will collect some charges now, even that charges is also exempted. So what is the second point? First point is what? Sale of business as it is, full lump sum, that consideration received is exempted. Second point is transit cargo, services in relation to transit cargo to Nepal and Bhutan, both to Nepal and Bhutan and from Nepal and Bhutan empty container, that charges is also exempted. Then services by way of collecting or providing news by independent journalists. Independent journalists will not be working with any particular newspaper or news channel. They will be like freelancers. They will get some money for collecting the news, gathering the news and selling the news to the media, for which they get some consideration. That consideration earned by independent journalists will be exempted. Then Press Trust of India, United News of India, PTI and UNI. These two people are basically broadcasting agencies. So if you have a news and if you want to give that news in every newspaper, so what you should do, you should go to PTI. or UNI, you give the news and you pay money to them, they will ensure that the news is published in each and every newspaper. So this is known as PTI and UNI. Usually this some public notices should be given. So say a person is dead or one property dispute notice, like that certain public notices and all we need to give. So to whomsoever it may concern, like that one public notice, that we want to put it in every newspaper. For that we need to go to PTI or UNI, pay some money, depends, like 5,000 or 10,000, like that they will collect, and they will disseminate this news to all the newspapers, for which they collect some money, that is exempted. Then next, services of public libraries. Basically these public libraries will be providing books on rental basis, for which they collect a lending fees. That lending fees collected by them is exempted. But remember, it should be a public library. If it is a private library, so then whatever money that is collected will be taxable. Sir, private library means the access is given to only limited people. So that is private library. Example, ICI is having a library which is a private library that can be accessed only by CA students. Now they are collecting some fees from the students for lending books. Taxable or exempted? Exempted. Not here. Services provided by educational institution to its students, faculty and staff, it will be exempted. There is a British Council library which will be providing books on rent to the, that is lending to the members of that library. Now whether that lending fees will be taxable or exempted? Taxable. We don't have any exemption for that. Then services by an organizer to any person in respect of business exhibition held outside India. So where is the person supplier located? India. And they are providing service by way of organizing the business exhibition, where the exhibition is held outside India, because of which it will encourage the exports. Due to that reason, this money collected by the organizer of the business exhibition in India for exhibiting the goods outside India in a business exhibition, the charges is exempted. Then services by way of public conveniences such as provision of facilities of bathroom, washroom, lavatories, urinal or toilet. So these public toilets are there na, will collect 2 rupees or 5 rupees for the purpose of allowing you to use the public toilets. The 2 rupees, 5 rupees and all is exempted. There is no GST on that. Of course, they will not cross 20 lakhs and all, because our people will not be using public toilets. They have a lot of open space. So this charges, whatever is paid to them, is exempted. Then service by way of access to road or a bridge on payment of toll charges. So usually you would have seen in highways something called as toll gates, wherein if you are using that road, you have to pay some toll charges. These toll charges are exempted. There is no GST on that. However, if the toll charges is by way of annuity, then it will be taxable. Sir, what is toll charges by way of annuity? This government buses will also be using that route, and government will pay annually some amount for the purpose of using that road. That amount which is collected by way of annuity, annually some amount, that is taxable. Every time when you use the road, you pay some charges, now 40 rupees or 30 rupees or 60 rupees, that will be exempted. Not only this, if you are not having a FASTag sticker, sometimes what happens, you go in that toll gate and you will not have a FASTag sticker, or maybe balance not there in the FASTag sticker, then they will ask you to pay the extra charges. Usual charges 40 rupees means they will ask you to pay 80 rupees. That extra charges for not having a FASTag is also exempted, and some lorries and all, if they are taking too much load in that, so they will be paying overloading charges. That overloading charges is also exempted. Say this, overloading charges at toll plazas is exempted, and higher toll charges for not having a functional FASTag is also exempted. Then 8th point, so there is a performance artist. Who is called as a performance artist? One who performs before the audience is known as a performance artist. In folk or classical art form, folk, that folk means native, classical means which got a national recognition. Example, Bharatanatyam is a classical dance, whereas Karagatam is a folk dance. So which did not get the national recognition but has got the native recognition, then it is called as folk. Whereas classical means it got a national recognition. So either folk or classical art form of music, dance or theatre, where the amount charged does not exceed 1,50,000 for a performance. Sir, how much should be per performance? Not like exceeding 1,50,000 means less than or equals to 1,50,000. What if it exceeds 1,50,000? Entirely taxable. But remember, if they are acting as a brand ambassador, even though the amount is less than or equals to 1,50,000, it will be taxable. So they should not be acting as a brand ambassador. Means what? They should not promote any brand. Example, this place is actually popular for many dance performances, wherein this is not for the purpose of promoting any brand. This is for recreational purpose. People will book this hall and they will perform the dance, and they will be even allowing the people to come and watch by collecting some tickets, etc. So this money which is collected, so is exempted if it does not exceed 1,50,000 rupees. Suppose if this event is organized by a brand to promote a brand, then even though the money collected by the dancer does not exceed 1,50,000, it will be taxable. Then next, services by way of training or coaching in recreational activities relating to arts or culture by an individual or sports by a charitable trust. So remember, there is a training or coaching in recreational activities, means basically dance schools, music schools, cricket academies or hockey academy, they will be coming into this list. If it is arts or culture, arts example all, so like dancing, singing, musical, that will be arts. Culture, so Vedas, Upanishads or languages will come under culture. If it is by an individual, exempted. If it is by others, it will be taxable. There is a dance school which is owned by an individual, and that dance school collects some fees. Taxable or exempted? Exempted. If there is a dance school which is owned by a firm and the dance school collects some fees, taxable or exempted? Taxable. Are you getting this? Same way, if it is sports, it should be by a charitable trust, then only it will be exempted. If it is by others, it will be taxable. Example, MRF Cricket Academy, very popular cricket academy. Lot of big players are from MRF Cricket Academy. They charge 4 lakhs per annum for giving training in cricket. This 4 lakhs will be taxable or exempted? Taxable. Suppose if it is registered as a trust, there is Tamil Nadu Cricket Academy registered as a trust. Then if they collect some fees for providing cricket training, whether it is taxable or exempted? Exempted. So arts and culture should be by an individual, whereas sports should be by a charitable trust. Then look into the 10th point, last exemption, satellite launch services supplied by any person, underline any person. Previously we had Antrix Corporation, New Space India Limited, ISRO, like that some cases, but now they are telling any person, mainly to attract Elon Musk, because not necessary ISRO or Antrix Corporation or New Space India Limited, there are a lot of private people also into space research. So for that reason, so if there is a foreign space research company like X, Project Xa, so Elon Musk's space research company is there, and if he is bringing that company to India, and if he set up in India and he provides any satellite launch service, the money received by him will be taxable or exempted? Now exempted, because satellite launch service provided by any person will be exempted. Then look into some circulars. First point, services provided by guest anchors invited by TV channels for participating in their shows in lieu of honorarium. Example, Big Boss is there, Gabchika Big Boss, okay. So in that Big Boss show, so Komali Hassan is being taken, Kamal Hassan is taken as the host, for which he will be paid some amount. No, because he became like that, what to do? So, like this money whatever is being collected by him will be taxable or exempted. He is a guest anchor. Not only Tamil Nadu, all languages in this big bus, they will be bringing famous celebrities only as the host, and they will pay crores and crores as remuneration to them. Is it taxable or exempted? Anywhere we understood taxable, sorry, anywhere you understood exempted, so therefore it will be, that's what they are telling. Services provided by guest anchors invited by TV channels for participating in their shows in lieu of honorarium attracts GST liability, provided their turnover does not exceed 20 lakhs, means they are not required to register. Definitely they will not be called as a guest anchors. But turnover, if it does not exceed 20 lakhs, they are not popular. So why they will be called as a guest anchor? So by default, guest anchors and all, so their turnover will be crossing crores and crores. Therefore, definitely they will pay GST. We don't have any exemption. Then this point already we discussed. If you are not having a functional FASTag, you need to pay some extra charges. Whether that extra charges is taxable or exempted? Exempted. As toll charges exempted, even these also exempted. Please go through that point. Okay, underline, additional fee collected in the form of higher toll charges is essentially payment, so therefore it will be exempted from GST. Then one point I told you there, annuities. Payment of toll charges by way of annuity is taxable, correct? That's the next point, see here. GST is applicable on annuities paid for construction of road where certain portion of the consideration is upfront. So remember, toll charges by way of annuity is taxable. Then last circular related to liquidated damages. As per Contract Act, what is the meaning of liquidated damages? You enter into contract, you breach the contract. When you breach the contract, the other person who suffered the damages will claim a money as compensation from you, that is known as liquidated damages. Clear? Example, I am a contractor. I entered into contract with you. You are a builder to do the construction, and I could not construct it on time. As I could not construct it on time, you could not deliver the flat to your buyers on time, because of which you collected a compensation from me, 5 lakhs. This 5 lakhs compensation what I am paying to you is called as liquidated damages in your hands. Is it clear? So what is liquidated damages? So when a contract has been broken, the party which suffers by such breach is entitled to receive from the other party compensation for any loss or damage caused to them. That is known as liquidated damages. What is the treatment of these liquidated damages? Check whether it is mere compensation not arising out of contract, or it is arising out of contract between the parties. Means, is that compensation specified in the contract or not specified in the contract? If it is not specified in the contract, but it is payable as a compensation, so that will not be treated as consideration and it will not be taxable. Example, government has allocated coal blocks somewhere in 2015-2016. At that time, there was a big scam that government collected bribes and they allocated to some people at a lesser cost, like 2G scam it has happened. Then Supreme Court has passed an order cancelling all the coal blocks allocation and asked the government to pay compensation to those people as they are cancelling the coal block allocation. But this compensation is not mentioned in the contract. It is arising out of Supreme Court order. Therefore, this compensation will not be treated as consideration. Consequently, it will not be chargeable to GST. Is it clear? Just write down their example. Here you write down example. compensation paid by government for cancellation of coal blocks coal, COAL, blocks, 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 as per Supreme Court order. So what is that? Compensation is paid by government. For what reason? Cancellation of coal blocks. Is it as per contract? No. Because of the Supreme Court order, so that will be mere compensation not arising out of contract. So whatever may be the money involved, that will be not treated as consideration. Suppose if it is specified in the contract as a part of agreement between the parties, and these charges are in the nature of penalizing a person for discouraging such act. Example check dishonor charges. Is check dishonor charges agreed between the parties, bank and customer? Whether the bank will tell before itself that if you dishonor the check, I will collect check dishonor charges from you. Is it specified? Yes. The moment you open the account, where you will read, wherever they ask you to sign, you will sign. So if you read, you will be knowing that everything you agree and you sign. So that charges will be communicated to you. Every offense like debit card you lost, for replacement 50 rupees will be charged to you. Checkbook this much amount, check dishonor this much amount, like that clearly they will mention, and they will take your signature also at the time of opening the account. So this check dishonor charges is arising out of contract between bank and the customer. But what is the objective of these charges? Is to allow that person to do that or to discourage the person from doing it? Discourage the person from doing it. Again, it will not be treated as consideration and it will not be chargeable to GST. So please write down. Example, check dishonor charges. Check dishonor charges. The next one, comma, traffic fines and penalties. Traffic fines and penalties. Why, sir? When you cross the signal or when you are not wearing the helmet, you have to pay a fine. Is it agreed between you and government? Yes. The moment you take a driving license, you sign that you agree to all terms and conditions as per Motor Vehicle Act 1888. So therefore, 1988. So 1988. So as per Motor Vehicle Act 1988, you agree that you will pay anything whatever is levied. Accordingly, when you are not wearing helmet, or you are not driving using without a valid driving license, or if you are crossing the signal, you have to pay some fine. This fine is to allow the person to do that or to discourage the person from doing that. That's why it will not be treated as consideration. Whereas if they allow the person to do that, but as a practice they collect some charges, then it will be treated as consideration and the tax liability depends upon principal supply. Example, this train ticket cancellation charges you would have heard of. Whenever you cancel the train ticket, you book a train ticket, when you cancel the train ticket, when you book a movie ticket and cancel the movie ticket, so you will be deducted with some cancellation charges. These cancellation charges are allowing a person to do that, not to discourage a person. So they will be happy if you do that. So cancellation charges also they will get. In turn the ticket they can sell to some other person also. Correct or not? So it is not to discourage a person. So these charges are treated as consideration, but its taxability depends upon principal supply. For example, sleeper class ticket, when you cancel, on that cancellation charges there is no GST. Why no GST? Because sleeper class ticket is exempted. Whereas AC ticket, when you cancel, on cancellation charges there will be GST, because AC ticket is taxable. Is it clear here? So please write down example. Example, train ticket cancellation charges. Train ticket cancellation charges. Full stop. With respect to AC ticket, cancellation charges, with respect to AC ticket, cancellation charges is taxable. Correct? Why? AC ticket is taxable. With respect to AC ticket, cancellation charges is taxable. And with respect to sleeper class ticket, cancellation charges is exempted. With respect to sleeper class ticket, cancellation charges is exempted. Okay. So that is about exemptions we have completed. Now, no break, wait, don't clap. So please take one small chapter, we will complete that, accounts and records, and then we will take break. Page number 337. Page number 337. I'll give break 15 minutes, I'll give. Accounts and records. If we turn on AC, you will say, it is cool, sir, turn off. If we turn off, you will say, hot, sir, like that you will say. Ennappa pandrathu? Really, I don't know. Tomorrow class alone, please bring blanket, okay? So, what can I do, you tell me? You only asked me to reduce the temperature, so it got reduced. Now you are telling, it is chill. Manage, no? This is enough, no? Okay. Don't ask them, because they are scolding me, pa. What, sir, you are asking us to reduce, increase like that. It is not my place. Try to understand here. I have taken on rent. Then they will put 10,000 extra for that also. Okay. Accounts and records. Listen. Page number 337, segment 16. This is a newly added chapter. There are two sections, section 35 and section 36. Section 35 talks about what are the various accounts and records. Please listen, please. Don't talk. What are the various accounts and records which are required to be maintained by a registered person? That is given in 35. And this is like statutory records. In every law it is there. In income tax also it is there. In Companies Act also it is there. What are the statutory records to be maintained under that law? Like that. Under GST law also, as per section 35, a registered person is required to maintain some accounts and records. What records he need to maintain, where he need to maintain is given in section 35. Whereas, how many days he need to maintain that records, that is given in section 36. Period of retention of records is given in section 36. So first we will see section 35. 35 talks about where the accounts and records to be maintained, what accounts and records to be maintained, and how the accounts and records to be maintained. First, where the accounts and records to be maintained. Read the first paragraph. Under GST law, registered person is required to maintain correct accounts of the following details at, underline, principal place of business and additional place of business relating to that place specified in the registration certificate. For example, I am having business in Tamil Nadu in 3 places. Say Chennai is my principal place of business. Chennai is my principal place of business, and I have 3 additional place of business: Madurai, Salem and Coimbatore. So I have 3 additional place of business. Now listen, I should maintain in Chennai accounts and records relating to Chennai or relating to Chennai, Madurai, Salem and Coimbatore. All the places, accounts and records I need to maintain in Chennai. Whereas in Madurai, I need to maintain what accounts and records? Relating to Madurai. And in Salem, relating to Salem. Relating to Coimbatore, in Coimbatore. You understood or not? In principal place of business, all place of business accounts and records should be maintained. But in additional place of business, we need to maintain the accounts and records relating to that additional place only. That is this. So every registered person is required to maintain correct accounts of the following details at principal place of business. Principal place of business, every place we need to maintain there. Whereas additional place of business relating to that place. Now second, what are the accounts and records to be maintained? So these are the various accounts and records to maintain. You remember this with a keyword I formats. I formats. I for inward supplies. I for inward supplies means purchase details. F for foreign trade. Foreign trade means import and export. O for outward supplies. Outward supplies means sales details. And then R for RCM. So out of your inward supplies, on some purchases you need to pay GST under RCM na. That also you need to maintain. Then M, manufacture and production related. Who? Only a manufacturer. For a trader that will not be applicable, for a service provider that will not be applicable. M, A for advances received or advances paid and adjusted. So advances received, paid and adjusted you need to maintain. T for tax details, input tax and output tax. S for stock of goods. So what is your closing stock and in which place you have maintained that stock, that details you should maintain. Got it? But don't write I formats in exam. This is a mnemonic. You have to write a registered person as per section 35 is required to maintain the following accounts and records at principal place of business and at additional place of business pertaining to that additional place of business. Number 1, all records with respect to outward supplies, okay, inward supplies along with, wait, inward supplies like that you don't keep there. This is keep, but don't write only this. You add some masala in that. What is that? All records pertaining to inward supplies. From whom you will buy inward supplies? Along with details of suppliers with relevant invoices, debit notes, credit notes. Auditing you did not learn. So you should know how to add the answer. You got it? This is the heart of the answer. On the top of that you need to put some masala and then only the dish will be ready. You understood? So don't write inward supplies. They will not give marks. You should write something extra. What is that? Along with details of supplier with relevant invoices, debit notes and credit notes. Okay. Then next. F, foreign trade. Don't write foreign trade. What you will write? All records pertaining to import of goods and export of goods along with relevant documents under customs. Import, export, where it will come? Customs. Then O. So what you will write? All records related to outward supplies along with outward supplies you will make to whom? customers along with details of customers with relevant invoice, debit note and credit note. Okay, so some 3 lines came. Next, so IFO or what you will write? All records pertaining to inward supplies on which GST is payable under reverse charge mechanism under section 9.3 or 9.4 with relevant invoices, debit notes and credit notes. You have to write this part, they will expect this. If you write only this, they will not give marks. But this is the key, this much only will be there. But extra and all is fillers, you have to write that. Then next, M. So what you will write? All records with respect to goods manufactured or produced. Goods manufactured or produced out of what? Raw material. Along with raw material records and inventory details. Okay. Then next, A. Advances received, paid, adjusted. So what you will write? Records pertaining to advances received. From whom you will receive? Customers. And advances paid to whom you will pay? Suppliers. And adjustment of advances for the purpose of recognizing the amounts in the return. Okay. Why you need to adjust the advance? Because sometimes you need to pay GST on advance. Next month when you raise the bill, you should not put entire amount in your return because already on advance you paid tax. So remaining amount only you need to put, that is known as adjustment of advances. Is it clear? Then next, T. All records pertaining to input tax. What is input tax? Tax paid on inward supplies and tax payable on outward supplies. Then yes. What is that you will write? All records pertaining to stock of goods along with the location where such stock is stored. Okay. Clear? So this is the heart part. Before, after, you add something and you write. Please don't write only these keywords. You will not be given marks. Maybe 1 or 2 marks they will give. But if you want easily 3 or 4 marks, so you have to write this entire information. You got it? Then, next, what are the accounts and records to be maintained by a person opting for composition scheme? Remember, I pharma, TS not required. But don't write I pharma like that. Again same story, last 2 points you will not write. Okay. Everything you will write the same. Last 2 points not required for a person opting for composition scheme. So tell me what are the various accounts and records. Come on. I for inward supplies. F foreign trade means import or export. Then O outward supplies. M manufacture and production related. RCM. Then M manufacturer production. A advances received, paid, adjusted. T tax details. Yes stock of goods. And this last 2 is not required for a person opting for composition scheme. Next, what is the period for which these accounts and records should be maintained? All accounts and records should be maintained for a period of 6 years from the due date of furnishing annual return for a relevant financial year. So this 6 years you can convert into months. So 12 into 6, 72 months. So what is the number of months for which these accounts and records should be maintained? 72 months from when? From the due date of furnishing annual return. What is the due date of furnishing annual return? 31st December of the succeeding financial year. So say this. See the illustration in the next page. What is the current year 21-22? What is the due date of filing annual return for 21-22? 31st December 2022. from 31st December 2022, you count 6 years, 23, 24, 25, 26, 27, 28. So, till 31st December 2028, you need to maintain accounts and records pertaining to, respond here, pertaining to which year? 21, 22. Pertaining to 21, 22, you need to maintain the accounts and records up to 31st December 2028. This is when you are not going for any appeal during that financial year. Suppose during that financial year, you went for an appeal. When you will go for appeal, department will ask you to pay some tax, but you are not agreeing to what department is telling. Now you can go for appeal to the court. Now in that case, you need to maintain accounts and records 72 months from the due date of furnishing annual return, same, or 1 year from the outcome of the appeal. When you go to court, court will not tell, come, I am waiting for you only, I will give you the judgment, like that they will not tell. It will take time for them to give the judgment. So, whenever the judgment is given, from there 1 year, whichever is, not earlier, whichever is later, See the next page, for example. What will be your answer in the above case? If appeal against an order is filed on 28/12/2021 and the appeal is disposed of on 14/2/2027, A point same. What is that? 31st December 2022 plus 6 years. What is that? 31st December 2028 or 1 year from the outcome of appeal. What is the outcome of appeal? 14/2/2027 plus 1 year, that is 14/2/2028. Whichever is later. Which is later? 31st December 2028. Understood? So tell me what is 36 point pa section 36? Period. What is the period for which you need to maintain accounts and records? Appeal not filed. Don't write 6 years in exam, please. 72 months from the due date of furnishing annual return for a financial year. If appeal is filed, 72 months from the due date of filing annual return for a financial year or 1 year from the outcome of appeal, whichever is later. Then next, some special points are there in this. See this. Every transporter and warehouse keeper. Transporter means those who engage in transportation of goods. Warehouse keeper, they will store the goods. So these two people, even though not registered, generally here all the provisions that we have in GST is applicable only to a registered person. Unregistered person not required to follow GST law. It's like, sir, I am having one tire, sir, and I am having one stick, sir, and I am taking the tire in the stick and I am going, sir. Red signal, should I stop? No, because it's not a motor vehicle. Motor Vehicle Act is not applicable for me. Correct? Same way, I am an unregistered person. Whether the entire discussion is applicable for me? No. Tax invoice I should give, bill of supply I should give, all these things are not applicable for me. But in entire GST law, two people, even though not registered, should comply with certain provisions. Who are those two people? Transporter and warehouse keeper. Even though not registered, should obtain unique enrollment number from the portal and maintain necessary records. Why? Because this transporter and warehouse keeper are the people where lot of taxable goods will enter into the black market. See, manufacturer's place will be under the surveillance of the department. Retailer's place also under the surveillance of department. This movement of goods is there na. If these transporters and warehouse keepers are not properly maintaining accounts and records, then easily the black market will be created for the goods. That's why they are telling every transporter and warehouse keeper, even though not registered, should be getting a unique enrollment number, not a GSTIN, no registration, but just a unique enrollment number and maintain some necessary records. Then look into the next one. There is a principal who is engaged in sale of tea, coffee, rubber, etc. Means basically these are products from agriculture. So these products, how it will be sold, this tea, coffee, rubber and all, through auction. So they will not sell it normally, they will sell it by way of auction, and this person, principal, will take the goods to the auctioneer's place. Thereafter, in the auctioneer's place means don't think it will be one building, inside that auction will happen, no. Wherever there is a empty space, all the trucks will come and stop there, and they all will stand in one corner and they will start the bidding process, okay. That's how auction will happen, okay. So auctioneer's place. So this auctioneer place is a temporary place, you got it, it's a temporary place, and from there it will be sold to the buyer. So that person who places the highest bid, to that person the goods will be given. The bidding will start. So they will tell starting price, asking price 200 rupees per ton. Now the buyer will feel the market value of this is high, so he will tell 220 per ton. Another person will say 250 per ton. Like that, one somewhere the price will be arrived and the goods will be given to the buyer. Now what is the dispute here, sir? This principle is bringing the goods to auctioneer's place, na? In this auctioneer's place, should any accounts and records be maintained? No, because this is basically a temporary place. So records not required to be maintained by principal or auctioneer, even though it is additional place of business. Why it is additional place of business? Because it's a temporary place where the business is carried on. But as per section 35, in every additional place we need to maintain records relating to that additional place, correct? For principal also it is additional place, for auctioneer also it is additional place, but neither principal nor auctioneer is required to maintain any accounts and records in that place, because that is a temporary place only for the purpose of sale of goods through auction. This is as per CBIC circular. That's it here. And one more point is there, sir, where these accounts and records to be maintained, that is, sorry, in what mode these accounts and records to be maintained? Either it can be maintained in physical or electronic form. Either in physical or electronic form. Physical means normal books. Electronic means soft copy, tally, etc. Like that also it can be maintained, either in physical or in electronic form. So we completed accounts and records. This much is only there, okay. So if at all they ask, two questions they can ask. One is related to what are the various accounts and records. Second question, what is the period for which accounts and records can be maintained, okay. We'll take a break, and after 15 minutes we'll start with place of supply. Please relax yourself and come, because that's a very, very important area. Okay, we'll start. See this segment 15, place of supply, take page number 314. Take page number 314. So in this place of supply chapter, they have added few sections of IGST Act. Actually what happened is that the entire sections of IGST Act, they have put at CA final level. And at CA final level, it was so much complicated for the students to understand. That's why what they did now, partly they divided, and few sections they brought in for inter, and remaining sections they kept at CA final, so that it will be like by the time you come for CA final, it will be easy for you. That's why they created this. Moreover, from 40 marks to 10 marks, like 50 marks they increased, so something extra they need to ask na. So that's why. But see this, In that, few points already you know. What is the meaning of interstate supply? Interstate supply is given in section 7. Section 7 talks about interstate supply. What is the meaning of interstate supply? If location of supplier and place of supply is in two different states or two different union territories or a state and a union territory, then it will be known as interstate supply. This already we discussed in the first chapter itself. Now, there are certain activities which are deemed to be interstate. Deemed to be interstate means always interstate, chargeable to IGST. So, don't check intra, inter, etc. It will be deemed inter. What are those deemed interstate supplies? See there. Import of goods and import of services is deemed interstate. So, we will never charge CGST, SGST. So, in case of import of goods and service, always it will be IGST. And then look into another point. Location of supplier in India and place of supply outside India, then also it will be deemed interstate. Sir, then export of service is deemed interstate is what they are suggesting? No. Location of supplier and place of supply outside India is deemed interstate. Because of this, export of goods and services also will become deemed interstate. Example, what is the meaning of export of services? Where the supplier should be India, where the recipient should be outside India, and the consideration place of supply should be outside India. Consideration should be convertible foreign exchange. Supplier and recipient are not two establishments of the same person. In these 5 conditions, supplier is where? Export of service definition just now only you said supplier in India, then again you are changing supplier outside India. So you had only coffee or tea only in the break, nothing else. So just now we said supplier should be in India, where the place of supply should be. So what they are telling, supplier in India and place of supply outside India is a deemed interstate. But they are not talking about other conditions. But in export of services, there are other conditions also. Due to that reason, what we can conclude is that export of services is deemed interstate. Not all deemed interstate is export of service, but every export of service is a deemed interstate. Puridappa. Not all deemed interstate is export, but every export of service will become deemed interstate. It's like total 5 conditions are there na. What are the 5 conditions? Tell me once again. Supplier should be in India, okay, and recipient should be outside India, and where the place of supply should be outside India, and how the consideration should be. Consideration should be in convertible foreign exchange, and wherever permitted by RBI, it can be in Indian rupees. Whereas last condition, supplier and recipient not same person. Not same person. These are the 5 conditions na. Respond. Now, supplier in India, listen. Supplier India, recipient also India. This is export of service. Now what I am changing, you see, supplier India and recipient is also India. Place of supply outside India. Consideration forex. Supplier and recipient are not same person. Will it become export of service? No, because one condition not satisfied. Which condition? Second condition. But it will become deemed interstate. How it will become deemed interstate? See the point in deemed interstate. Supplier in India, place of supply outside India. If these 2 conditions satisfied itself, it will become deemed interstate. So in this example, even though it is not export of service, but it will become deemed interstate. So what is it you can remember? Export of service will be definitely deemed interstate, but just because it is a deemed interstate, it will not become export of service. Remaining three conditions also should be satisfied. To become deemed interstate, what are the conditions? Supplier in India, place of supply outside India. If other three conditions also satisfied, then it will become export of service. Is it clear, Pa? Sir, tell me once again, what are the two conditions to become deemed interstate? Supplier India, place of supply outside India. If other three conditions also satisfied, then it will become export of services. So that is about this. And in export of goods, where the supplier is located? India. And what is meaning of export of goods? Taking goods from India to a place outside India is known as export of goods. Are you understanding? So what is it you can conclude? Export of goods and export of services are deemed interstate. First, coming back to the discussion, square one. What is the meaning of interstate supply? If location of supplier and place of supply in same state or different states are different states or different union territories or a state and a union territory, then it will be known as interstate. There are some transactions which are deemed interstate. In that you learnt 2 points. What are they? Import of goods, import of services. Export of goods, export of service. One more point. Supplier in India, place of supply outside India. Then supply to SEZ, supply by SEZ. Example, you are in Tamil Nadu, SEZ also Tamil Nadu. It will never become intrastate. It will become deemed interstate. So the type of GST should be IGST. Same way, supply by SEZ. What is the difference between to SEZ by SEZ? To SEZ means you are making supply to SEZ. By SEZ means SEZ is supplying it to you. Then last, supply in India not elsewhere covered is also coming under deemed interstate. Sir, what is this? Supply in India not elsewhere covered. Please see this. This is India here. Okay. And if the supply takes place in India, either it will be intra or inter. Up to 12 nautical miles from the baseline is known as territorial waters. If the supply takes place in this place, it will be again either inter or intra. But if the supply takes place beyond 12 nautical miles and up to 200 nautical miles in the waters, the moment land you cross, what is there? Sea. In that sea, up to 12 nautical miles, usually the distance in the sea is measured by nautical miles. Up to 12 nautical miles is known as what? Territorial waters. And up to 200 nautical miles is known as what? Exclusive economic zone. Beyond 200 nautical miles is known as what? High seas. Can you tell me these three first? Up to 12 nautical miles is territorial waters. Beyond 12 and up to 200 is exclusive economic zone. Beyond 200 nautical miles is known as high seas. What is the meaning of India? India extends up to 200 nautical miles from baseline. Sir, but in this, if there is any country that is not India, example, Sri Lanka is in 40th nautical mile from India, then Sri Lanka is India, wa? No. Sri Lanka is Sri Lanka only, some other country only, it is not India. So water only I am talking about. If there is waters, in that waters any supply takes place, then it will be called as supply in India. Suppose if it is beyond 12 nautical miles and up to 200 nautical miles, example, there is a ship which is in 30th nautical mile from India, and in that ship some supply has taken place. Is it called as supply in India? Yes. Supplier India, land. He went to the ship, where the ship is in 30th nautical mile, to do the repair in that ship, and he collected some money. So it is called as supply in India, but in waters. It will be deemed interstate. You got it? So what is deemed interstate? One more point, supply beyond 12 nautical miles and up to 200 nautical miles. That is also called as deemed interstate. Supply beyond territorial and up to 200 nautical miles. So once again, can you tell me what are deemed interstate supplies? Come on. Number 1, import of goods, import of services. Number 2, export of goods, export of services. Number 3, supplier in India, place of supply outside India. Supply to SEZ, supply by SEZ. Number 5, supply beyond 12 nautical miles and up to 200 nautical miles. Understood? Then few transactions already we discussed as deemed interstate supply. What are they? I told you, trading in priority sector lending certificate is deemed interstate. Hope you remember. While discussing circulars in supply, I told you, e-Kuber portal, seller don't know who is buyer, buyer don't know who is seller, so it will be deemed interstate. So trading in priority sector lending certificate is deemed interstate. Also security lending scheme we discussed in RCM, that is also coming under deemed interstate supply. Then one more point is given here, place of supply is determined under section 13 and it is in India. So simple. When we determine place of supply under section 13, either supplier or recipient in India and the other outside India, then place of supply determined under section 13. Once you determine place of supply under section 13, always it will be deemed interstate supply. Now, what you need to remember is the list of activities which are treated as deemed interstate supply. I gave it in the next page. Please see that and mark it as very, very important. Deemed interstate supplies. Deemed interstate supplies. So what are regarded as deemed interstate supplies? First one you know, supplied to or by SEZ, import of goods, import of services. Then fifth point you see, supply of service where supplier in India, place of supply outside India. Supply of goods or service beyond territorial waters and up to 200 nautical miles. Supplier in India and place of supply is in India determined under section 13. Trading in priority sector lending certificate and security lending services. Then one more point you see, fourth point, supply of goods to a tourist. What is this? There is a concept of tourist refund scheme. That is, in Singapore, they started this tourist refund scheme. You go to Singapore and buy any goods over there. When you are bringing those goods from Singapore, whatever GST that you pay in Singapore, you will get as a refund. You go to Singapore and Singapore is popular for shopping. Every person who go to Singapore will do shopping and they buy some electronic items and you pay some price along with GST. Now in the Singapore International Airport, whatever GST that you paid on those goods, you will get as a refund. So Singapore government is creating this refund to encourage people to come to their country and buy the goods and take it to other countries. To increase their economy, they have started that. Same way, India also wanted to start this tourist refund scheme. So they are telling, if there is any tourist who is coming to India and is purchasing any goods in India and is leaving India, while purchasing goods in India, he will pay GST na. That GST he will get as a refund. You understood? So whenever you are supplying to the tourist, don't charge CGST, SGST because it will be difficult for him to get CGST refund separately, SGST refund separately. That's why you charge him only one GST. What is that one GST? IGST. Sir, how you know whether he is a tourist or not? Ask him to show his passport and visa. On the strength of that, when you make sale, it will be deemed interstate. Is it clear, pa? So, supply of goods to a tourist is also deemed interstate supplies. Then, apart from this balancing figure, what is that balancing figure? You have a transaction, but you don't know whether it is intra or inter. It will always be treated as deemed interstate supplies. Understood? So, these 10 points, can you remember? Yes. So, any 5 you tell? Supply to or by SEZ, okay. Import of goods, import of services. Export of goods, export of services. Then beyond territorial waters and up to 200 nautical miles. Tourist, okay, supply to tourist, super, enough. So, like that only they will ask, discuss in any 5 instances where it is deemed interstate supply, okay. So, for 4 marks like that they will ask a question, there it will be useful. And even in some regular questions also, the moment you see this transaction, don't put it in CGST, SGST column, put the number in IGST column. Done? So, this is about section 7, interstate supply. Then coming back to this discussion. So, we have seen interstate supply. Ayyo, 15 నిమిషం waste అయిచ్చా. Interstate supply we completed. Now, look into intrastate supply. What is intrastate supply? If location of supplier and place of supply is in the same state or same union territory, then it will be coming under intrastate supply. But there are some transactions which are deemed interstate even though the supplier and place of supply is in same state, but you consider it as deemed interstate. You understood? But deemed interstate means always deemed interstate. Don't check intra or inter. If it is not deemed inter only, then you check whether it is intra or inter. Got the clarity? And interstate is given in section 7 of IGST Act. Intrastate is given in section 8 of IGST Act. Now look into the meaning of import of goods, import of services, export of goods and export of services. Already you know the meaning of export of services and you know the meaning of export of goods. Now let's see the meaning of import of services. Try where the supplier should be. In import of services, where the supplier should be? Outside India. Where the recipient should be? And what should be the place of supply? Simple, that is the meaning of import of service. Over. Export of service, from export of service, few points if you take, that is import of service. So where the supplier is? Outside India. Recipient is India. Place of supply is India. Don't bother about consideration and all. So therefore it will become import of services. Then export of goods, you know na. What is export of goods meaning? Taking goods from, export. Taking goods from India to outside India. Same way, can you tell me what is import of goods? Bringing goods from Passama. That itself is the definition. Yaar, see, bringing goods into India from a place outside India. Okay, don't feel so proud about it. So, this is import of goods and import of services, and deemed interstate already we discussed. Look into supply in territorial waters. What is territorial waters? Up to 12 nautical miles from baseline is known as territorial waters. And territorial waters, whenever you are making supply, okay, now you need to see the nearest coastal state or union territory as the place of supply. Example, you are a marine engineer located in Chennai, Tamil Nadu, and there is a ship which is in the territorial waters. That ship is asking you to provide some repair service to the ship. So you are traveling to the ship and you provided some repair services and you collected $2,000 from that ship for providing the repair services. Now in this case, what should be the place of supply? The location where services are actually performed. Where you perform the services? In territorial waters. Are you getting this? The place of supply is location where the service is actually performed. Where you perform the services? In territorial waters. Then how to determine the place of supply? See the nearest coastal state for that ship. Where that ship is located? In 12 nautical miles. See the nearest state. If the nearest state is Tamil Nadu is the place of supply. You belong to Tamil Nadu, place of supply also Tamil Nadu, therefore it will be interstate or intrastate? Intrastate. If the ship is going little bit upwards in the Bay of Bengal, the nearest coastal state will be Andhra, So Andhra will be the place of supply. You are in Tamil Nadu, place of supply Andhra. Therefore, it will be coming under interstate supply. Are you understanding? So in case the supply takes place in territorial waters, what should be taken as the place of supply? The nearest coastal state or union territory should be taken. So this is the example I gave you. Okay. So marine engineering Tamil Nadu, just now I gave an example na. That is this example already I have given. Sir, how do we know, sir, whether we take a measuring tape and measure the nearest location? No pa, don't be that much dumb. So in ship, radar will be there. The moment you turn on the radar, it will show what are the nearest land. So therefore in that radar, that is like a map, okay, we will be able to know what is the nearest coastal state. So accordingly that will be taken. What the clarity? Then look into the next one, place of supply. So we have three sections, 7, 8, 9. 7 talks about interstate supply and 8 talks about intrastate supply. 9 talks about supply in territorial waters. Then we are moving on to place of supply provisions. Section 10 talks about place of supply in case of goods domestic other than import or export. Section 11 talks about place of supply in case of goods import or export. Section 12 place of supply in case of services when both supplier and recipient are located in India. Section 13 talks about place of supply in case of services when either supplier or recipient in India and the other outside India. But this 11 and 13 not in syllabus. So this is not in syllabus. You don't have to learn this. They have not kept it at CA intermediate. At final level you will be learning. But at CA intermediate what you have is section 10 and section 12. When section 10 is applicable, first applicability try to understand. When 10 is applicable, place of supply in case of goods or services are goods. That too domestic transactions or international transactions, domestic transactions. And when section 12 will be applicable, place of supply in case of services. Again, domestic transactions are international transactions are domestic. What is domestic means? Supplier also India, recipient also India. Is it clear? Sir, what if both supplier and recipient outside India? That service is exempted. Just now we saw. Supplier of service outside India, recipient of service outside India, the service is exempted. In that exemptions under IGST Act, the first point that only we studied. Okay. So don't bother about both are outside India. Both are outside India. In India itself, they are not able to properly collect. Where from they will go outside India and collect. So that's why there is no GST on that. Got it? So when 10, when 12, come on, 10. Goods, domestic. 12. Services, domestic. Means supplier and recipient in India. First we will see section 10. Section 10, we have total 5 situations. We have 5 situations in section 10. First try to understand what is that each and every situation about. 10.1a, supply involves movement of goods. Supply involves movement of goods. Invoice, time of supply, already we discussed. What is that supply involving movement of goods? Under a contract of supply, the person is taking the goods from one location to another location. Look into 10.1c. Look into 10.1c. Supply does not involve movement of goods. You know the difference between supply involving, not involving movement of goods, which we studied in tax invoice, the same difference. Okay. So we have seen some situations now, different situations. And for example, ship which is located in Mumbai port, seller in Tamil Nadu, buyer in Kerala, it will not come under supply involving movement of goods. Why? Because the ship is in the same location. We saw many situations like that. That is this. So if supply involves movement of goods, place of supply 10.1a. If supply does not involve movement of goods, place of supply 10.1c. 10.1b is bill to ship to transactions. What is bill to ship to? In input tax credit chapter I told you. What is that? Supplier raising invoice to one person but delivering the goods to the other person is known as bill to ship to transaction. Okay. So in that case, how to determine the place of supply? Then 10(1)(d), goods assembled or installed at site. So I am taking the goods, generator example I told you, I am taking the components of generator, going to the recipient's place, there I am installing the generator. So that is known as goods assembled or installed at site, or AC installation, goods assembled or installed at site. Then last, supplied goods on board a conveyance. What is that? During our train journey or flight journey, if they sell any goods to us, that will come under supply of goods on board a conveyance. Example, in train and all, when you are traveling, so people will be selling water bottle, beverages, biscuit packets, chips packets, correct or not? That will be coming under sale of goods on board a conveyance. Sir, what about food, sir? Food sold in the train, how it should be treated? Should it be treated like goods or should it be treated like services? The confusion comes because we have discussed 7 subsection 1 capital A read with schedule 2. I told you supply of food will always be treated as supply of service. That's why this confusion will come into the picture. Usually in trains and all, this idli, dosa, puri, biryani, chapati and all will be sold. Will it be coming under supply of goods or supply of services? Logically, it should come under supply of services because it is supply of food. But we have a circular which says that if the packed food is loaded in the train, if the packed food is loaded in the train, you treat it like goods. If the food is cooked inside the train, then it will be called as supply of service. Example, pantry car. In a train, there will be a pantry car. In that pantry car, they will cook the food. Cutlet, bhaji, samosa, this and all they will be cooking. And they will be selling it to the passengers in the train. Day trains and all, if you see, there will be a pantry car. You take this Brindavan Express or this Shatabdi Express or even this, double decker like that one train is there. Lot of trains are there in our Chennai to this Bengaluru region, day trains. Vande Bharat also, but Vande Bharat they will not cook. Vande Bharat, they will load the goods, they will not cook. Yes, really. In Vande Bharat, they will not cook. I am talking about regular super fast express and express trains. One compartment will be reserved for pantry car. In that pantry car, they make the food and they sell it to the passengers. That will come under supply of goods or supply of services. Supply of services. But packed food, cooked outside, packed and then taken into the train and they will be selling. That will come under supply of goods or supply of service. Supply of goods. Sir, what about flight? Always supply of goods. In flight, you cannot do cooking and all. Yeah. You cannot. So, air hostess sitting, making onion cutting. Not possible. So, it will definitely be supply of goods only. Sir, Maggi, cup noodles they will cook, sir. Where they will cook? So, cup noodles, they will open the lid, pour the hot water and give. That's cooking. For you, if you don't go to kitchen, that will be cooking only. So, therefore, that is not cooking. That is packed food only. So, packed food will come under supply of goods. So, tell me what are the 5 situations here. Come on. Supply involves movement of goods. Bill to, ship to. Supply does not involve movement of goods. Then, goods assembled or installed at site. And finally, supply of goods on board a conveyance. Now, first case, supply involving movement of goods. What should be taken as the place of supply? We have B to B and B to C classification. B to B and B to C. B to B means sale to registered person. B to C, sale to unregistered person. In case of B to B, they are telling take the ending point as the place of supply. For example, you order something from Amazon and I am the seller located in Haryana. You are the buyer located in Chennai, Tamil Nadu. I deliver the goods to you through the e-commerce operator. Is it supply involving movement of goods or not involving movement of goods? Involving movement of goods. Say you are a registered person. You are a registered person. What will be taken as a place of supply in this example? Chennai will be taken as the place of supply. Consequently, for me, it will become interstate supply. So, what should be taken as a place of supply in case of supply involving movement of goods? Come on. Ending point of the goods will be taken as the place of supply. Understood? Suppose if it is to unregistered person. Suppose if it is to unregistered person. They are telling, take the location of recipient in the records of the supplier. If the details are not available, location of supplier will be taken as the place of supply. You understood? Sir, in case of B2B, ending point, wherever is the ending point, that will be taken. Whereas in case of B2C, location of recipient in the records of supplier. Suppose if location of recipient not available in the records of supplier, then location of supplier. Then next, look into 10(1)(c), because that is opposite of this. Supply not involving movement of goods. When supply does not involve movement of goods, again we have B2B, B2C classification. B2B, location of goods at the time of supply will be taken. Example, that ship example I will tell you. Seller Tamil Nadu, buyer Kerala, ship in Mumbai. What will be taken as the place of supply? Mumbai. Location of goods will be taken as the place of supply. Is it clear here? Then, suppose if it is to unregistered person, same, ditto, copy paste, whatever we have studied here, same. That is location of recipient in the records of supplier, otherwise location of supplier. Come on, tell me these two provisions. Supply involves movement of goods. B2B, ending point. B2C, location of recipient in the records of supplier, otherwise location of supplier. Then, supply not involving movement of goods. Location of goods, B2B. B2C, location of recipient in the records of supplier, otherwise location of supplier. Now look into bill to ship to transactions. In case of bill to ship to transactions, there will be two supplies. How two supplies? Listen pa. I am A, you are B, and your customer is C. Okay. You place an order with me to deliver the goods to your customer. So I will raise invoice to B or C? B. I will raise invoice to B. Even though I deliver the goods to C, I will raise invoice to B because we only have the contract now. So I will raise invoice. So B is billing address. C is shipping address. Okay. So I will raise invoice to B. This is first supply. This first supply. Now to your customer, you will raise invoice. So billing address to shipping address. B will raise invoice to C. A will raise invoice to B. B will raise invoice to C. So there are two supplies. But for me it is bill to ship to transaction. So for me what will be taken as the place of supply? That billing address will be taken as the place of supply. It's not the ending point. I am delivering to C, but that is not place of supply. The billing address only will be taken as the place of supply. Understood? Fine, sir. Then between B and C, what will be taken as place of supply? Is supply involving movement of goods or not? Yes. That's not a bill to ship to transaction. So normal. Supply involving movement of goods. So what will be taken? Ending point will be taken as the place of supply. Now, let's try to understand this with the help of an example. See this. Illustration 1. Parth of Pune, Maharashtra enters into an agreement to sell goods to Bakul of Bareilly, Uttar Pradesh. While the goods were being packed in Pune godown of Parth, Bakul got an order from Shreyas of Shimoga, Karnataka for the said goods. Bakul agreed to supply the said goods to Shreyas and asked Parth to deliver the goods to Shreyas at Shimoga. You are required to determine the place of supplies in the above situation. So when you read it directly, you will not understand. You carefully read that and tell me who are the three parties and where are they located. Parth, Pune, Maharashtra. Then Bakul, Uttar Pradesh. Then Shreyas, Karnataka. Okay. Who raised order? Who placed order with whom? Read it carefully and tell. Read it carefully and tell. Read the first line. Read the first line. Parth of Pune enters into agreement to sell goods to Bakul of Bareilly, which means Parth will be raising invoice to Bakul. Okay. Parth will raise invoice to Bakul. But what happened? During the goods were in the go down, Bakul got an order from Shreyas. So Bakul agreed to supply the said goods to Shreyas and asked Parth, Parth is the seller, original seller, asked Parth to deliver the goods to Shreyas at Shimoga. Means Parth will raise invoice to Bakul but deliver the goods to. So goods are delivered to Shreyas of Karnataka. Now this is invoice number 1. Then there will be another invoice which will be raised by Bakul to Shreyas. This is invoice number 2. Clear here? Now for invoice number 1, so this answer alone you please make note, even though it is there, for clarity purpose you write down in your book. This is answer to illustration 1 in page 317. But don't write like this in exam. In exam you write like paragraph, but for understanding purpose I am just giving you the chart. Okay. Say this. So Parth of Maharashtra raised invoice to Bakul, delivered the goods to Shreyas of Karnataka. Bakul raised invoice to Shreyas. You written this? Now, invoice number 1. Invoice number 1. So it is by Parth to Bakul. Is it bill to ship to or normal transaction? Bill to ship to transaction. It is bill to ship to transaction. So what will be taken as the place of supply? Billing address. So what is the billing address? Karnataka or Uttar Pradesh? So Uttar Pradesh will be taken as the place of supply. Understood pa? Now second invoice. Invoice number 2. Invoice number 2. Invoice number 2 is by Bakul to Shreyas. That is what? Normal. Supply involving movement or not involving movement? There is a movement of goods. So supply, he may not move it. He may not have moved it from one location to another location. But there is movement of goods. You understood? That movement can be by supplier, recipient or any other person or transporter. Anyone can do the movement of goods. But there is supply involving movement. Supply involving movement of goods. So what will be the place of supply? We are assuming that he is registered. Even otherwise Karnataka. How? Location of recipient in the records of supplier. If you take them as registered, ending point Karnataka. If you take them as unregistered, location of recipient in the records of supplier, that is also Karnataka. So place of supply will be Karnataka. Ending point, that is Karnataka. Now they will also ask you to comment on the nature of supply. Is it intra or inter? Invoice number 1. Why inter? Location of supplier, place of supply, location of supplier Maharashtra, place of supply Uttar Pradesh, therefore it is interstate. And even here invoice number 2, location of supplier Uttar Pradesh, place of supply Karnataka, so this is also interstate. Clear here? But this you write like a paragraph in the answer. You don't write like a table like this, but these are some key points, but you write like a paragraph, and that answer I have given as to how to write in the exam. Okay. So we completed 3 points. What are they? Supply involves movement of goods. B2B, ending point. B2C, location of recipient in records of supplier, otherwise location of supplier. Bill to ship to transaction. Remember, bill to ship to, billing address is the place of supply. B for B. 10(1)B, bill to ship to. B for bill to ship to, B for billing address. Okay. So billing address will be taken as place of supply. 10(1)C, supply does not involve movement of goods. What will be taken? Location of goods, B2B, B2C, location of recipient records of supplier, otherwise location of supplier. Look into 10(1)D, goods assembled or installed at site. Simple, it is location where the goods are assembled or installed. Location where the goods are assembled or installed. For example, you are located in Tamil Nadu, I am also located in Tamil Nadu, but you asked me to install machinery in your branch in Karnataka. So what will be taken as a place of supply? Tamil Nadu or Karnataka? Karnataka. Sir, here one deviation is there, sir. Won't it become bill to ship to? Because I am raising invoice to Tamil Nadu recipient, but I am delivering to another location. Won't it come under bill to ship to? Yes. Then billing address is the place of supply, then Tamil Nadu is the place of supply. Yes. But 10(1)D is a specific provision and 10(1)B is a general provision. Usually when there is a conflict in the provision, prefer specific provision over general provision. So this is the conflicting example. What is it I told you? I am receiving an order from a person in Tamil Nadu to install the machinery in their branch in Karnataka. It's actually bill to ship to, but it should not be treated as bill to ship to because this machinery requires an installation. So in case of goods assembled or installed at site, the location where it is assembled or installed will be taken. So in this example, what will be taken as a place of supply? Karnataka will be taken as the place of supply. Understood? Then last point, if goods are supplied on board a conveyance, what will be taken as the place of supply? So for example, air hostess is selling some goods during the flight journey. The flight started in Chennai and the flight is going to Mumbai and the goods are sold to you during the journey. Will the air hostess look into the window and check which place it is to determine place of supply? Practically not possible. So what they are telling, starting point of the goods. So where the goods are loaded, that should be taken. So therefore for the first case, it is ending point. For the last case, it is starting point. Can you remember? What is the first case? Supply involving movement of goods, ending point. What is the last case? Supply of goods on board a conveyance, it is starting point. Place where goods are taken on board, that is starting point of goods. Clear for these 5 points? Then we are moving on to section 12. in section 12, so 13 we don't have, 13 we don't have, only 12 we have. And first you need to determine the location of supplier. Second, you need to determine the location of recipient. How will you determine the location of supplier and location of recipient? Long back I told you, if you are providing services from your registered place, that registered place will be the location of supplier and location of recipient. If the services are provided from a fixed establishment elsewhere, that fixed establishment or business establishment will be the location of supplier. Suppose if there is no fixed establishment, business establishment, then sir, then usual place of residence will be taken as the place of supply. Example, online transactions. In case of online transactions, say online classes, or this freelancers, some freelancers will be there, they will be listing their services in a website and you can receive their services. For example, you wanted a wedding card to be designed. So there are a lot of people online wherein if you tell the information and if you give them the idea as to how you need to do, they will do the designing and they will send the logo to you, they will send the invitation to you, they will send whatever brochure that you are asking, they will do. In this case, what will be taken as the location of supplier? The location of supplier will be taken as the usual place of residence. Okay. For example, we have one person sitting here. Okay. So who is our admin? His name is Vinod. So what he do, so he is a very good designer. So this book and all cover page he only designed. Okay. So lot of my books cover page he will only design. He is also a freelancer. What he will do is that in the remaining time when he is sitting idle, so he will do the designing work in online. If online any person asks, so he will do the designing and he will give them the flyer, brochure, etc. design and he will collect some money. So this is some extra income for him. Nothing wrong in that. But where he will do designing? Any place. Now today he is sitting and designing here. Tomorrow he will do it at his home. So day after tomorrow somewhere in a restaurant he will be sitting and doing. How to determine the location of supplier? Are you understanding? That's why we need to take the usual place of residence. His usual place of residence will be taken as the place of supply. Are you understanding this part? That is this. So if you are providing services from a registered place, such registered place, for this example and all, don't ask me money. So if registered, that usual place of residence, if registered, such registered place. If not registered, business establishment or fixed establishment. If there is no business establishment or fixed establishment, usual place of residence. Is it clear? Now, what if both in India? Then section 12 will be applicable. What if both outside India or one India, other outside India? That is not in our discussion, leave it. Both are in India only, we will do the discussion. In that, we have general provisions and some specific provisions. What is that general provision? In the absence of specific provision, general provision will be applicable, which says if it is B2B, location of recipient. If it is B2C, location of recipient in the records of supplier, otherwise location of supplier. Already we discussed na 10(1)A and 10(1)C, just like that. B2B, what should be taken? Location of recipient, means the registered address. B2C, location of recipient in the records of the supplier, otherwise it will be location of supplier. Now when you will apply general provisions? In the absence of specific provisions, we will apply general provisions. Is it clear? Now that specific provisions we are discussing. So this is general provisions. You understood the general provisions, pa? What is the general provision? B2B. This is goods or services? Goods over, completed. We are in services. Okay. So services, general provisions, B2B. If you don't know in exam anything, at least general provision you remember and write. Okay. Clear or not? If you don't know anything in place of supply, at least the general provision you remember and write, so that 50% the answer is correct. Okay, probability, you are taking a chance here. So B2B, location of recipient. B2C, recipient data available in records of supplier, then location of recipient, otherwise location of supplier. I will give you an example for this. You are going in a highway and there is a vehicle breakdown. When there is a vehicle breakdown, you will open your mobile and search for the nearest mechanic shop, and you got in the Google mechanic shop near me. So you got some numbers, you called them, and that person is coming and he provided the repair services and he collected some 1000 rupees from you. For this 1000 rupees, what will be the place of supply for the mechanic? First, general provisions. B2B or B2C, he don't know whether you are registered or not. So B2C. Whether recipient details available in the records of supplier? No. Will he come and do repair, or he will ask, how are you sir? You are from which place sir? Why he will ask all those things? He will come, do the repair and he will go. He is not bothered about your location. So what should be taken as the place of supply? Location of supplier. So his location only will be taken. Got the clarity? Then you are attending classes in a coaching center and you are paying some fees. You may not belong to Tamil Nadu also. Got it? You may not belong to Tamil Nadu. You are going to one coaching center. Coaching center is bothered with what? Money. So you paid money and you joined the classes there. Now, general provisions. B2B or B2C? Definitely B2C. B2B will not come now, student. B2C. B2C. Whether recipient details available in the records of the supplier? Yes. One application form you will fill. Yes or no, yaar? In that application form you will give your details. So recipient details available in the records of supplier. So what will be taken as a place of supply? Location of recipient. Clear pa? Then now we are moving on to specific provisions. In that specific provisions, the first situation is service directly or indirectly in relation to immobile property. So can you give me examples of service in relation to immobile property? Construction, very good. Then repairs and maintenance of immobile property. Then renting of immobile property, insurance on immobile property, accommodation services, works contract services, interior decoration services, real estate agent services. Got it? So these are some examples of service in relation to immobile property. So now in question they will not give service in relation to immobile property like that. They will give Mr. A is providing construction services to Mr. B. Now you need to understand, okay, construction means it will come under service in relation to immobile property. Understood or not? So what are the service in relation to immobile property? Construction, works contract, repairs, interior decoration, painting, and any plumbing work. So all these are service in relation to, including accommodation service. So what should be taken as the place of supply? If the immobile property is in India, location of that immobile property. If the immobile property is outside India, location of recipient. And this service also includes stay in a boat or vessel. As accommodation service is covered here, including accommodation in a houseboat or vessel. But houseboat or vessel is not immobile. Even then, that is covered under the first point. So what are the services covered under the first point? Any service in relation to immobile property, including accommodation in a houseboat or vessel. What is that you need to check? Is that immobile property, houseboat or vessel is in India? Then it will be location of immobile property. If it is outside India, location of. Now, so kindly make note of some examples. So I am just giving you some examples for each and every point to get a clarity. This is service in relation to immovable property. Service in relation to immovable property. location of supplier, location of recipient, location of property, place of supply, and nature of supply. You need to determine this. First you need to see location of supplier, then location of recipient, then location of property. Based on that you need to determine what is the place of supply and then nature of supply. Location of supplier, Tamil Nadu. Location of recipient, Tamil Nadu. Location of property, Andhra Pradesh. Place of supply. What will be the place of supply? Andhra Pradesh. Because what will be taken as a place of supply? Is the immobile property in India? Yes. So location of property will be taken. So consequently, what will be the nature of supply? Intra or inter? What and all you need to check? Location of supplier and place of supply. Same state or different states? Therefore, it will be coming under interstate. Then, location of supplier, Tamil Nadu. Location of recipient, Maharashtra. Location of property, Tamil Nadu. What will be taken as the place of supply? Tamil Nadu. Why? Whether property is in India? Yes. So as property in India, location of property will be taken as place of supply. And what will be the nature of supply? Supplier Tamil Nadu, place of supply Tamil Nadu. Therefore, it will be coming under intrastate. This is what I told you. Usually in case of hotel accommodation, when we go and stay in a hotel in another state, they will not charge IGST. They will charge CGST, SGST. Example, a person from Mumbai is coming to Chennai. He stay in a hotel in Chennai. Now supplier is Tamil Nadu. Place of supply also immobile property in Tamil Nadu. Therefore, it will come under intrastate. Can this recipient in Maharashtra take this ITC? No, he cannot take this ITC. Then another example. Location of supplier, Tamil Nadu. Location of recipient, Maharashtra. Location of property in Australia. Then what will be taken as the place of supply? Why? If the property is outside India, possible pa? Example, you are an architect in Tamil Nadu and Mukesh Ambani is a recipient in Maharashtra. He wanted a property to be constructed in Australia. He can construct anywhere. He can construct in moon also. Okay. Now, in this case, what will be the place of supply? As the property is outside India, location of recipient will be taken as the place of supply, Maharashtra. And what will be the nature of supply? Inter, because supplier in Tamil Nadu, place of supply Maharashtra, therefore it will become inter. Next, supplier Tamil Nadu, recipient also Tamil Nadu, and property is in Singapore. So what will be taken? Tamil Nadu, therefore it will come under intra. Understood pa? So therefore if the property is in India, location of property. If the property is outside India, location of recipient. This is in which case? Which case? Service in relation to immobile property. Then see the second one, performance based service in relation to individual. First one you understood. Second, performance based service in relation to individual. Can you give me examples of performance based service in relation to individual? Means the recipient is individual. Recipient is individual. Okay, all training, classes, taking classes, that's what, all those classes, training, arts, etc. will be coming there. Then supply of food, supply of food, and then personal grooming in the sense beauty treatment. beauty treatment, beauty parlors and all also will come into this category. And then gym, fitness centers also will come into this category. Performance based service in relation to individual. Basically, they are providing services to individual. In that, we have three divisions. If it is related to food, that is restaurant, catering, grooming, beauty treatment and healthcare. Location, where the services are actually performed. Example, you are from Kerala and you are going to a restaurant in Tamil Nadu, and the restaurant will not ask you are from which location, because for restaurant service, what is the place of supply? Location where the service is actually performed. That's why restaurant always will raise CGST, SGST invoice, 2.5% CGST, 2.5% SGST, understood? So in case of restaurant, grooming, beauty treatment, healthcare, what is place of supply pa? Location where services are actually performed. But sir, healthcare is exempted na sir. Healthcare service is exempted na. I am not talking about exempted healthcare. If it is exempted, we don't have to determine place of supply. I am talking about taxable healthcare. What are taxable healthcare? Cosmetic surgery, plastic surgery, hair transplantation, that will come under taxable healthcare. Now, say for example, there is a dietitian. Dietitian is located in Maharashtra, and online you are receiving the dietitian services. Yes, there are a lot of people who receive the dietitian services. There is an app. If you download the app and if you pay monthly some amount, they will tell you what food you need to eat daily, and they will give the even recipes and all they will be sending, and they will tell what exercises you need to do, like that and all. They will tell, yes, it is there. A lot of people will spend money, but they will not follow. So this dietitian service, where is the supplier located? Maharashtra. Where is the recipient located? Tamil Nadu. Where the service are actually performed? Maharashtra. He is there only, correct or not? Suppose if he come from there to here to provide the services, then Tamil Nadu will be taken as the place of supply. So whichever location they provided the services, that will be taken. Then training and performance appraisal services. You need to check B2B or B2C. B2B means what? Registered person, to registered person, that is location of recipient. B2C, again same, location where the services are actually performed. Whereas in case of any other cases, we need to apply general provisions. For example, I told you CA coaching services. CA coaching services will not come under restaurant, catering, grooming, beauty treatment. It will not come under training and performance appraisal. Why sir, it won't come under training? This is not training. Training means there is a workshop where you are attending and you get a certificate, that is called as training. But CA coaching, where you will get certificate? You will not get certificate when you attend the coaching, na? Correct. So therefore, this will not come under training or performance appraisal. So it is other cases. So we need to apply general provisions. What will be taken as the place of supply? I already told you, B2B location of recipient, B2C location of recipient in the records of supplier, otherwise location of supplier. Now, look into next one. You understood this here? Performance based service in relation to individual. What are the three things that we need to branch? First, food, beauty. Food, beauty. What should be taken? Location where the service is actually performed. Training and performance appraisal. Performance appraisal means what? Acting as a judge in the reality show is a performance appraisal. Appraising the performance of a participant. In reality show, some judge will be sitting and giving marks for the participants. That will come under performance appraisal. Training and performance appraisal, B2B, location of recipient. B2C, location where service are actually performed. And in all other cases, it will be general provisions. Now, in some places we have B2B, B2C. In some places we don't have B2B, B2C, only one provision is there. Now look into this table and search and tell me where and all we have B2B, B2C classification apart from general provisions. Training and performance appraisal, then organizing an event. Organizing an event means what? Event management. Okay. Then transportation of goods and transportation of passengers. Correct? Any other place? That's okay. That is also related to transportation only. Any other place? No. You remember easily, pa. TOT. 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 Training and performance appraisal, organizing an event, and transportation of goods or passengers. In these three places only you need to check B2B, B2C. In all other places you don't have to check B2B, B2C. That too in these three places, listen, that too in these three places, check what is the B2B place of supply. Location of recipient is the place of supply. So safely forget this B2B point. B2B point you don't remember now onwards. Why? Only in three places B2B, B2C will come. What are those three places? Training and performance appraisal, organizing an event, and transportation of goods or passengers. And that too in B2B always it is location of recipient. So what you should remember extra, B2C provision only you remember. Okay. So now onwards we will remember only B2C provisions in this place. Got it? Now see that below. So you just write down there in page number 320. So below that table some space is there na. In that space you write down. In the following cases, B2B versus B2C classification is applicable. In the following cases, B2B versus B2C classification is applicable. TOT. What is a TOT? First point. Training and performance appraisal. Training and performance appraisal. Number 2, organizing an event. Number 3, transportation of goods or passengers. That too what will be taken in case of B2B? Location of recipient. So in exam, whenever you come across these three services only, you need to check B2B, B2C. Otherwise, always you remember one provision only. You got it? Understood, pa? So now onwards, training and performance appraisal, don't remember B2B, B2C like that. Remember training and performance appraisal, what is the place of supply? Location of performance. Correct? So therefore, we can merge everything. Food, beauty, training and performance appraisal. What will be taken as a place of supply? Location of performance. Other cases, general provisions. That also you don't have to remember because balancing figure is general provisions only. So wherever there is specific provision, that only you remember. Remaining cases, it will be general provisions. Understood or not? Sir, I am trying to simplify this to the extent possible so that you don't have to remember too many things in your head. Okay. First, service in relation to immobile property. Property in India, location of property. Property outside India, location of recipient. Performance based service in relation to individual. What is that? Food, beauty, training, performance appraisal, location where it is performed. Okay. Other cases it will be general provisions. There you don't have to remember. Also see one more point. Sir, what if it is performance based service in relation to goods? Do we have any specific provision? See the third point. Performance based service in relation to goods. Do we have any specific provision? No. So general provisions that you don't have to remember. What is performance based service in relation to goods means? Repairs to the goods. Mechanic doing repair service or any repairs to the goods will come under performance based service in relation to goods. As we don't have specific provision, in all other cases you apply the general provisions. Puridapa. That's why I said if you apply general provisions, 50% of the chances that the answer will be correct. Okay. So far you remember only two specific provisions. What are the two specific provisions? Service in relation to immobile property. That too logically you try to remember. Listen pa. Service in relation to immobile property. So immobile property is a place of supply. Okay wah. But if the immobile property is outside India, location of recipient. Then performance based service in relation to individual. Performance. Location of performance is the place of supply. You got it? Understood? That too what? Training, performance appraisal, food, beauty treatment. Then see where we have specific provision thereafter. Admission to an event. Logically you tell me what will be the place of supply? Admission to event, location of event. Easy. Admission to an event, location of that event or place. Okay. Then next, organizing an event. Don't remember B2B, B2C. Organizing an event. Again, location of event. What if event outside India? Location of recipient. Purida. Then again, transportation of goods. Transportation of goods, transportation of passengers. Parallelly you see both. Goods, where it started. Passenger, where he started. You understood? So starting point of the goods, starting point of the passenger. Understood? Sir, starting point theriyadu sir. I don't know sir. Then general provisions. If you don't know anything, general provisions only na. What is starting point not known? Pass. Season pass. In case of season pass, you can go from anywhere to anywhere. For example, I am taking a season ticket from Chennai to Bengaluru. I can board in Chennai or I can board in Bengaluru. Anywhere I can start. So therefore, general provisions will be taken because starting point not known. That we don't have to remember because anyhow it is general provisions. Then what is the next specific provision? Services provided on board a conveyance. Sir, during the journey, they provided some services, sir. So what will be taken as the place of supply? Starting point of the conveyance. This you connect with goods. Goods sold on board a conveyance. Starting point of the goods. So here starting point of the service we cannot determine. So starting point of the conveyance. Can you give me examples of services on board a conveyance? During the journey, what services they provide? Making food in the train, I told you. Making food in the train, pantry car will come under service on board a conveyance. One more example. During the flight journey, we can receive video on demand services. That is, before us, there will be one screen and in that we can watch the movie, and for that movie we need to pay the rental. That is known as video on demand services. Then we also receive beauty treatment services during the journey. Yes, lot of celebrities, heroines and all, as soon as they get down from the flight, they will be looking so fresh. But when we travel, like that, so saliva and all will be there, correct or not? And our face by seeing itself will know that we completed a journey. But have you ever observed the heroines, as soon as they get down, lot of photographers will take photos. They will be looking so fresh. How? Because during the journey, they will receive beauty treatment services. That is also coming under services on board a conveyance. So what will be taken as the place of supply? Starting point of the conveyance. Passenger transportation, what is place of supply? Starting point of passenger. Goods transportation, what is the place of supply? Starting point of goods. Services during the conveyance, what is the place of supply? Starting point of the conveyance. Easy. Then next, telecommunication services you see. In case of telecommunication services, divided it into two. Telecommunication includes broadband, DTH, everything. Divided it into two. If it is fixed line, location where the equipment is installed. Example, landline pa. For landline, you only tell me logically where the place of supply should be taken, where the landline is installed. Mobile postpaid. Mobile postpaid. Postpaid means when bill will come, so the billing address will be taken as the place of supply. And mobile prepaid. So we will divide it into three. How will you recharge prepaid? Online. So when you do online recharge, location of recipient in the records of the supplier. Where we will do recharge, or someone will do recharge for us like that. So don't tell, you only will do recharge. You should do recharge, okay? And location of recipient in the records of the supplier. Suppose internet not working, then you go to a dealer. So the dealer location is the place of supply. Is it clear? Nearest dealer also not there. We are going in road. One person will be standing in one corner with one umbrella doing recharge. Correct or not? That location will be taken as the place of supply. Please see there. Suppose if it is through a selling agent or distributor, the location of that selling agent or distributor. If it is by any person to final subscriber, location where the payment is received. If it is online recharge, location of recipient in the records of supplier. Tell me in case of telecommunication, fixed line, location where it is installed. Mobile postpaid, billing address. Mobile prepaid, online recharge means location of recipient in the records of supplier. If it is through dealer, location of that dealer. Clear? Then banking services, we don't have any specific provision, general provisions. So no need to remember. Got it? Then see the next one. Intermediary services also, we don't have any specific provision. So general provisions only. You don't have to remember. Insurance services, location of recipient. Anyhow, general provision also location of recipient only na. No need to remember. Hiring of means of transport. Again they are telling general provisions. So again there no need to remember. Advertisement services to government. Advertisement services to government. This is the next point that you need to remember. Advertisement services to government. Government includes central government, state government, local authority, union territory or statutory body. Each state where the advertisement is provided will be taken as the place of supply. If we have the information with respect to each state, otherwise we need to apportion between the states, and even then each state where the advertisement is provided is the place of supply. So advertisement service to government example, there is a newspaper which is putting a government ad, and that newspaper will be published in multiple editions in different states. Now each state where the advertisement is provided will be taken as place of supply. Now specific provisions alone, can you separate and tell me? First you need to remember TOT, training and performance appraisal, organizing an event and transportation of goods or passengers. B2B, always location of recipient, and in other cases you don't have to apply B2B, B2C. Now specific provisions alone you tell me. Don't look into the book. For the time being you close the book. I will ensure that it is there in your mind. So close your book. Randomly I will ask, you tell. Transportation of passengers. Starting point of? Super. Service in relation to immovable property. Location of property. If property outside India? Admission to event. Event location. Always. Organizing an event. Location of event. If event outside India? Super. Then transportation of goods. Then services on board a conveyance. Performance based service in relation to individual. Food, beauty, training, performance appraisal. Location of performance. Super. And then telecommunication fixed line. Location of installation. And telecommunication mobile prepaid online. Recipient in the records of supplier. Location telecommunication postpaid mobile. Billing address. Telecommunication prepaid through dealer. Advertisement services to government. Each state. over, that much only. Okay. So see this. What and all you need to remember? First point you should remember. Second point, then again 4, 5, 6, 7, 8 you don't have to remember, 9, 10 and again finally 15. OIDR services, they have given general provision. So apart from this discussion whatever we have made, all other places it will be general provisions. Now see one question in the next page, illustration 2. There is a flight which is starting in Chennai and it is going to Mumbai, and in Mumbai some goods are loaded in the flight. Then again it is going to Delhi, and in Delhi one passenger has boarded, and then it is going to Dubai, that is ending point of the aircraft. Now with respect to passenger ticket, what is the place of supply? Delhi. Okay, Delhi, starting point of the passenger. With respect to services on board a conveyance, what is the place of supply? Chennai. Correct? And with respect to goods sold on board a conveyance, what is the place of supply? Understood, appa? So depending upon that, so don't remember just starting point. Here everything is starting point only, but starting point of what? In case of passenger, starting point of passenger. In case of goods, starting point of goods. In case of services on board a conveyance, starting point of the conveyance. Understood? Then we have some rules related to this apportionment. Apportionment will come in a scenario where, so when the place of supply is in more than one state, then we need to divide it between the state. Like in overheads costing, you would have learned some basis of apportionment. Na? Example, labor cost means labor hours, some mission cost means mission hours, electricity means lighting points, like that some basis of apportionment will be there. Na? Like that we have some points here. So that is this rules, okay, and this rules we will see later. It's not that important also. Mostly the questions will be asked on whatever discussion we have made now. Now one circular alone is there that we will complete, and with this we will stop for today, okay. So see that circular which is in page 327. Place of supply for supply of services with respect to advertising sector. Now listen here, they gave one circular for the purpose of hoardings. Usually if you see roadside and all, one big hoarding will be there and they will mention, if you want to advertise here, contact this number, like that. Now in case of these hoardings, what should be taken as the place of supply? Is it like renting of immobile property, or is it like advertising services? If it is renting of immobile property, location of property will be taken. If it is advertising services, we don't have any specific provision. So general provision. For advertisement to government only we have specific provision, but general advertisement we don't have specific provision, so general provision. You understood the confusion that is involved here. What they are telling is that if you take the hoarding on rental basis, if you take hoarding on rental basis, per day this much, like that if you pay, that will be treated as renting of immobile property. So we need to apply immobile property point. What is that? Location of property will be taken as place of supply. Once you took the hoarding, what you will do? You will take the services of a person to do the designing of the banner and put it over there. Correct? You will not go there and do painting. So you will definitely take one service of a designer. Na? What they will do? So depending upon the dimensions of that hoarding, they will prepare a design, they will print the banner, and that banner they will go there and they will do fixing. This service will come under advertising services. So we need to apply general provisions. Got the clarity? See there. If there is a sale of space or sale of right to use the space on hoarding or structure of the vendor to client, or advertising company for display of their advertisement. That will be location of immovable property is the place of supply. If the vendor providing advertisement services on the hoarding, already you took the hoarding. I am a vendor who is providing advertisement services on the hoarding or structure owned or taken on rent by him. You understood? Then in that case, it will be coming under general provisions, because for advertising services we don't have any specific provisions. So general provisions will be applicable. Is it clear here? So you have taken a hoarding on rent. For that rental income, it is service in relation to immovable property. Already the hoarding which is taken on rent will be used for the purpose of, that is, you will design, get it designed, advertising services, that is general provisions, because we don't have any specific provisions. So with this, place of supply over, except for that rules related to place of supply. Okay, and tomorrow we will complete this place of supply related rules. Hardly it will take some half an hour, and thereafter we will be moving on to the remaining chapters, miscellaneous chapters, TDS, TCS, and then accounts and records we completed. So payment process, composition scheme, registration, that we will see. Okay, thank you, we'll meet tomorrow.